Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have, sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source, in the academic literature, and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, peer-reviewed. So I just think overall it's better to take an approach of humility, acknowledging that they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. There's, without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
We're talking about superpowers, Clash of the Titans sort of stuff. It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation, or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, you know, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, you know, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US, I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, you know, it's talent that drives, you know, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, you know, it's still really important to be physically proximate to other people who, you know, are working with you in the office. I mean, you know, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, you know, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? The China restricted gallium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. You know, we're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, like, can you tell, because we're all friends here.
Sure, go for it.
Like, do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where, you know, some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years time, those kinds of AIs are set loose on the open web in, you know, a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a...
Hello everyone, good morning to all of you. Welcome once again to this live commodity session. Start करते हैं आज का सेशन. सबसे पहले एक चीज़ मैं आपको बता दूं, जो लोग टेलीग्राम अगर यूज़ करते हैं इन्फॉर्मेशन के लिए, तो मैं बता दूं टेलीग्राम अभी फ़िलहाल के लिए इंडिया में बैन हो चुका है फॉर सम टाइम्स. तो टेलीग्राम पे कोई अपडेट नहीं मिलेगा, ठीक है. हो सकता है आपका टेलीग्राम चल भी ना रहा हो. सो कल ही आई थिंक गवर्नमेंट ऑफ इंडिया ने रिगार्डिंग द एग्जामिनेशन ब्लॉक कर दिया है टेलीग्राम इंडिया में ऑपरेट करने से. तो कुछ दिनों तक आई थिंक टेलीग्राम आपको चलता हुआ नहीं दिखाई देगा. आई थिंक इस मंथ तक टेलीग्राम आपको चलता हुआ नहीं दिखाई देगा. तो वहाँ पर कोई अपडेट नहीं मिलेगा, ठीक है. फिलहाल आज की बात करें, इंडियन मार्केट जस्ट ओपन ही होने वाला है. आज इंपॉर्टेंट डेटा है. 12:30 लंदन सेशन ओपन होगा, 5:30 इवनिंग सेशन इंडियन टाइम के अकॉर्डिंग. 6 PM पे रिटेल सेल्स, को रिटेल सेल्स का डेटा है. 7 बजे यूएस मार्केट ओपन, 8 बजे क्रूड ऑयल की इन्वेंट्री और फिर रात को 11:30 बजे FOMC रेट कट का डिसीजन आने वाला है. तो हो सकता है मार्केट थोड़ा सा रेंज बाउंड में रहे. अगर मैं इंडिया विक्स की बात करूँ, इंडियन मार्केट ओपन ही होगा. तो फिर देखते हैं. इंडिया विक्स कल काफ़ी क्रैश किया था, 6% क्रैश कर गया था, 13 पे आ गया है. सो इंडिया विक्स देखो, नॉर्मली मैंने पहले ही बताया 15 के नीचे कभी भी अगर इंडिया विक्स गया तो समझ जाना मार्केट बहुत ही कॉन्ट्रैक्टिंग रेंज में जा सकता है. तो जब भी 15 के नीचे आप कह सकते हैं 10 to 15 के बीच में इंडिया विक्स रहता है, तो वहाँ पर मोमेंटम बहुत ही नैरो रेंज के अंदर होती है. नाउ नैरो रेंज के अंदर होती है तो रिस्क बहुत ज़्यादा होता है फॉर ऑप्शन सेलर, ठीक है. ऑप्शन बायर को भी रिस्क रहता है बिकॉज मोमेंटम ही बहुत कम होता है, तो कुछ बहुत ज़्यादा बड़े प्रीमियम मोमेंटम नहीं आते हैं. लेकिन जब भी मोमेंटम आते हैं तो फिर मार्केट मूव बहुत बड़ा कर जाता है. कल भी देखोगे मार्केट ओपन हुआ था 14 पे, क्लोजिंग होते 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 13 के आसपास चला गया. अभी ओपन ही हुआ है 13.35, 13 पे आ गया. तो इंडिया विक्स इज़ वेरी स्मॉल रेंज ही एक्सपेक्टेड करना, कोई बहुत बड़ी रेंज एक्सपेक्ट नहीं है. until unless India VIX is not going above 14. Remember, अगर ये 10 के नीचे आया तो फिर एक एक्सपेंशन होने की चांसेस भी हैं, बट राइट नाउ इफ यू लुक एट दिस इज currently 13.38, तो इंडिया विक्स is struggling below 15, very thin move intraday. अगर बिग मूव आया तो फिर ऑप्शन सेलर के लिए रिस्क रहेगा. बिटकॉइन में कुछ खास है नहीं, साइडवेज ही चल रहा है फिलहाल के लिए, नथिंग मूव. एफओएमसी स्टेटमेंट है इवनिंग पे 11:30 आई थिंक. फेड चेयरमैन नए जो चेयरमैन बने हैं, केविन वॉर्स, कल उनका स्टेटमेंट भी आया है. सो लेट्स सी. फोरकास्ट है रेट कट नहीं होगा मोस्ट प्रोबेबली. लास्ट टाइम 3.75 फेड का इंटरेस्ट रेट था, नाउ आई थिंक दिस इज द सेम 3.75. तो फिलहाल अभी इट इज अ साइडवेज राइट नाउ. बिटकॉइन इज साइडवेज, नो मोमेंटम इन अ रेंज राइट नाउ फॉर इंट्राडे. आई थिंक इट इज वेटिंग फॉर एफओएमसी डिसीजन, उसके बाद शायद कुछ मूव करे बिटकॉइन पे. सो अवॉइड राइट नाउ, बी कॉशियस टुडे. रिमेंबर दिस वीक ऑन 19th वैसे तो मार्केट ओपन है इंडियन मार्केट, बट यूएस मार्केट में थोड़ा सा वहाँ बैंक हॉलीडे है, जून 19th हॉलीडे रहेगा. सो रिमेंबर टुमारो सेंसेक्स एक्सपायरी एज वेल, सो मोस्टली डेटा इज टुडे. Indian market also open now. Look at the market, flat opening है. 2 दिन से वैसे भी मार्केट रेंज के अंदर ही फंसा हुआ है. ओके, गैप अप ओपन, ओपन इक्वल टू हाई फर्स्ट कैंडल. फर्स्ट 15 मिनट की कैंडल एक बार क्लोज होने देते हैं. अगर ये फर्स्ट 15 मिनट की कैंडल फ्यूचर में देखोगे ओपन इक्वल टू हाई है, स्पॉट में भी ओपन इक्वल टू हाई है. गिफ्ट निफ्टी में ओपन इक्वल टू हाई नहीं है. आई थिंक ओनली इन निफ्टी फ्यूचर एंड स्पॉट फर्स्ट 15 मिनट gap up, then open equal to high, flat ही है almost. Okay, yesterday we got the news that I think there are some brokers in India like Zerodha, Angel One, Grow, Upstocks getting the approval so that you can invest directly in the US stock from India. इंडिया से आप यूएस स्टॉक्स में इन्वेस्ट कर सकते हैं. इसका अप्रूवल मिल गया थ्रू गिफ्ट सिटी. लेट्स सी कब से ये लागू होता है. फिलहाल के इंडिया में अगर आप देखो आईएनडी मनी के थ्रू आप कर सकते हो इन्वेस्ट वैसे, बट दीज आर द कम्प्लीटली रेगुलेटेड ब्रोकर्स, सो नीड टू सी. ओके, फ्लैट हो गया इंडियन मार्केट कम्प्लीटली. ओपन इक्वल टू हाई, गिफ्ट निफ्टी ओपन इक्वल टू हाई नहीं है फर्स्ट कैंडल. ठीक है, देखो अगर ये पहली कैंडल ओपन इक्वल टू हाई में ही क्लोज होती है ना, तो देयर इज अ वेरी हाई चांसेस आज का हाई तो शायद ही ब्रेक होगा. वेरी लेस चांसेस. ये फ्यूचर नीचे आता है तो एक बार देखना पड़ेगा 23,983. मुझे लग रहा है शायद प्राइस के नीचे क्लोज ना करे 1 आवर टाइम फ्रेम पर, बिकॉज कल काफ़ी देर कंसोलिडेशन किया था, ब्रेकआउट किया था, सेकेंड हाफ में ऊपर ही क्लोज हुआ था. अच्छा दिन था कल एक्सपायरी का. लेट्स सी एक बार फर्स्ट 15 मिनट की कैंडल क्लोज होने का वेट करते हैं. विल सी दैट आफ्टर दैट. इन द अदर हैंड अगर फिलहाल के लिए देखोगे कमोडिटी मार्केट को, क्रूड ऑयल सुपर बेरिस बना हुआ है तब से. मार्केट कल आई थिंक 5% के आसपास गिरा था, परसों भी 5% के आसपास गिरा था, आज भी डाउन ही है. देखो नीचे मार्केट अब सपोर्ट तो होल्ड नहीं कर रहा है. मोस्ट प्रॉब्ली डेली टाइम फ्रेम पे देखोगे तो एक पॉसिबिलिटी है प्रॉफिट बुकिंग आने की। मार्केट कभी भी एक पुल बैक बड़ी कैंडल प्रॉफिट बुकिंग की दिखा सकता है, बिकॉज ऑलमोस्ट 16% गिर गया ये लास्ट स्विंग एरिया से। 800 के आसपास से देखोगे 19-20% फॉल कर चुका है विदाउट एनी पुल बैक। सो सपोर्ट तो ब्रेक होने ही वाला है ऑलमोस्ट, बट देयर इज अ चांसेस प्राइस कैन गिव अ पुल बैक फ्रॉम हेयर। सो अननेसेसरी सेल नहीं कर सकते अब इस एरिया पे। यहाँ पर भी ओपन इक्वल टू हाई है कैंडल, वाह। ठीक है, बाकी नेचुरल गैस में एक्सपेक्टेड है सेलिंग थोड़ी सी, लेवल लगा लेते हैं, कल का ही लेवल है मान के चलना। नेचुरल गैस में तो नथिंग चेंज येट। तो आइडेंटिकल कैंडल्स फॉर्मिंग राइट नाउ क्रूड ऑयल में, पहली कैंडल डोजी टाइप, दूसरा ओपन इक्वल टू हाई, सेम नेचुरल गैस। सी साइडवेज ना चला जाए रेंज के अंदर। ठीक है, क्रूड ऑयल देखो यहाँ पर एक सपोर्ट एरिया पर ही है। ठीक है, लगभग 50% के आसपास ही मान के चलो। ठीक है, फॉरेक्स में देखोगे थोड़ा सा लेवल ऊपर नीचे है। फॉरेक्स में भी आया नहीं है एग्जैक्ट सपोर्ट पे। एमसीएक्स में आ गया है तो थोड़ा सा मिसमैच करेगा। फॉरेक्स में अभी भी देखेंगे तो आई थिंक करंट लेवल से लगभग, अरे तो 4% डाउन दिखा रहा है। एमसीएक्स में तो आ गया यार। फॉरेक्स चार्ट में देखें तो अभी भी लगभग 4% दूर है सपोर्ट पे। जो सपोर्ट बनाया है वहां पर आने में एमसीएक्स में आ गया ऑलरेडी। क्या देखो अभी ना फिलहाल के लिए MCX में सपोर्ट पे आ गया है ये, लेकिन क्रूड ऑयल फॉरेक्स में नहीं आया है सपोर्ट पे, तो फॉरेक्स के अकॉर्डिंग ही चलेंगे, MCX के अकॉर्डिंग नहीं चल रहे हैं। हो सकता है MCX के अकॉर्डिंग चला जाए ऊपर पहली प्राइस, बट वही रिस्क है उसमें, फिर अननेसेसरी रॉन्ग एंट्री हो जाएगी। एंड मैं जब फॉरेक्स की बात कर रहा हूँ, आई एम टॉकिंग अबाउट न्यूयॉर्क मर्सल्टाइज एक्सचेंज, जहाँ पर प्राइस डिस्कवरी एक्चुअली में होती है। तो क्रूड ऑयल में जैसा मैंने बताया थोड़ा सा लेवल अलग ही चल रहे हैं फॉरेक्स में और एमसीएक्स में। हम फॉरेक्स के अकॉर्डिंग ही चलेंगे। एमसीएक्स में मुझे थोड़ा सा डाउट हो रहा है, तो फिलहाल के लिए इन फॉरेक्स एक मेजर सपोर्ट देखोगे दैट इज अप्रॉक्सीमेटली न्यूयॉर्क मर्सल्टाइज एक्सचेंज में 71 से $69 के आसपास है। वहाँ प्राइस अभी आया नहीं है, प्राइस करंटली एट 74 75। इट इज ऑल्सो सपोर्ट, बट दिस इज आई थिंक इन 15 मिनट, वो थोड़ा सा हायर टाइम फ्रेम का सपोर्ट है आई थिंक। ये कैंडल कौन सी है, 9:15 की ना, 9:15। सो इसको इसी के अकॉर्डिंग रखते हैं, ज़्यादा रिस्क नहीं लेते। ठीक है, इसमें एक नीचे और सपोर्ट है, वो थोड़ा सा और डाउन दिख रहा है मुझे। मैं एमसीएक्स के अकॉर्डिंग नहीं चल रहा हूँ। एमसीएक्स के अकॉर्डिंग देखोगे यहाँ पर एक मेजर सपोर्ट है, बट 15 में 1 मिनट के अकॉर्डिंग फॉरेक्स का जो सपोर्ट है मैं उसी को लेके चल रहा हूँ फिलहाल के लिए। बाकी अगर इसके मेजर सपोर्ट पे आना होगा तो यहाँ से लगभग आई थिंक कितना 4% दिखा रहा है मुझे जहाँ तक लग रहा है। हाउ मच, हाँ लगभग 3.5 से 4.5% दूर है। यहाँ पर कहीं दिखा रहा है वो फॉरेक्स के अकॉर्डिंग लेवल ध्यान रखना, फॉरेक्स में अलग ही चल रहा होता है। एमसीएक्स में अगर मान लो 1% है तो फॉरेक्स में अप्रॉक्सीमेटली वो 1.20% इतना मूव हो चुका होता है, होना ही होता है वो नॉर्मली। तो थोड़ा सा उसकी वजह से एग्जैक्ट लेवल फाइंड नहीं कर सकते। अगेन मैं क्रूड ऑयल का जो चार्ट चेक कर रहा हूँ दैट इज़ फॉर न्यूयॉर्क मर्सल्टाइज एक्सचेंज, जहाँ पर प्राइस डिस्कवरी होती है। दोनों ही सीएमई ग्रुप के हैं, NYMEX और कॉमेक्स, जहाँ पर गोल्ड सिल्वर ट्रेड होता है। एक्सपेक्ट सम वेरिएशन, ठीक है। क्रूड ऑयल पे नहीं चल रहे हैं क्रूड ऑयल के अकॉर्डिंग तो। एंड यहाँ पर एक्चुअली मार्केट क्लोज होने के बाद, इंडियन मार्केट क्लोज होने के बाद ही प्राइस एक्शन रहता है, तो मोस्टली कैंडल वहीं बनती है। ऊपर वाले लेवल से ज़्यादा रिस्क मत लेना, ठीक है। ज़्यादा रिस्क लेंगे तो फिर नीचे एक और सपोर्ट है, बहुत पास में ही है, मतलब वैसे देखा जाए पास में, अगर मैं वैसे देखूं तो लगभग 3 से 3.5 4% और डाउन है वो। बट या दैट इज अ 15 मिनट, सो एक्सपेक्ट सम पुल बैक, नॉट मच। यहाँ पर याद रखना पेड वर्जन लेना पड़ता है NYMEX का, अदरवाइज आपको 10 मिनट लेट मिलेगा डेटा, फ्री का नहीं मिलता है वो। उसके चार्जेस हैं। एक तो आपको अगर ट्रेडिंग व्यू में देख रहे हो तो ट्रेडिंग व्यू का सब्सक्रिप्शन लेना पड़ेगा, प्लस न्यूयॉर्क मर्सल्टाइज एक्सचेंज का डेटा का सब्सक्रिप्शन भी लेना पड़ेगा। दैट इज आई थिंक ज़्यादा नहीं है, 500 600 रुपीज़ पर मंथ, प्लस ट्रेडिंग व्यू का सब्सक्रिप्शन जो भी आप मंथली या ईयरली लेते हो। फॉरेक्स चार्ट में देखोगे तो मैंने पहले ही बताया, जो जितने भी फॉरेक्स चार्ट हैं किसी भी फॉरेक्स ब्रोकर के, दे ऑल कॉपी द प्राइस, ठीक है, वो सब के सब कॉपी करते हैं प्राइस को, तो एग्जैक्टली कैंडल फॉर्म नहीं होती है कहीं पर भी। हमारा एमसीएक्स भी सेम ही करता है, दे जस्ट कॉपी द प्राइस अकॉर्डिंग टू द इंडियन प्राइस जो न्यूयॉर्क मर्केंटाइल एक्सचेंज में होता है। इसलिए आप देखोगे कई बार प्राइस सपोर्ट रेजिस्टेंस काम ही नहीं करते हैं, बिकॉज दोज आर नॉट द एक्चुअल प्राइस डिस्कवरी लेवल। प्राइस डिस्कवर जहाँ पर होता है, ओरिजिन जहाँ पर होता है, वो अलग ही लेवल होते हैं एक्चुअली में। ठीक है, चाहे वो क्रूड हो, नेचुरल गैस, गोल्ड, सिल्वर। स्टॉक्स का तो आप देख सकते हो, कोई प्रॉब्लम नहीं है, बिकॉज स्टॉक तो स्पेसिफिकली है। मोस्ट प्री वॉर लेवल पहुंचने वाले हैं हम प्राइस में। अगर ये नीचे लेवल पे पहुंच गए 6600, बिलीव ही नहीं हो रहा, ऐसा लग रहा था कुछ दिन पहले मार्केट ऑलमोस्ट $10,000 के आसपास ही रहेगा, 8,000 to 10,000। नाउ इट इज ऑलमोस्ट 6,900। कल एक्सपायरी थी क्रूड ऑयल ऑप्शन की, बिल्कुल डायरेक्शनली मूव आया। क्रूड ऑयल में चाहो तो नेक्स्ट मंथ का फ्यूचर चार्ट भी यूज़ कर सकते हो, बाकी उसमें वैसे वॉल्यूम नहीं होगा, तो हम अभी करंट मंथ का यूज़ कर रहे हैं। कल फ्यूचर की एक्सपायरी भी है क्रूड में। ठीक है, तो वहाँ ज़्यादा अभी वॉल्यूम है नहीं क्रूड ऑयल में नेक्स्ट मंथ में, तो इसी मंथ का चार्ट लगाया है। चाहो तो नेक्स्ट मंथ का भी देख सकते हो, ऑप्शन नेक्स्ट मंथ का ही अवेलेबल है ट्रेड करने के लिए अभी। एक क्रूड ऑयल स्टक हो गया यहीं पर। इसमें ना जितना मुझे दिख रहा है फॉरेक्स में इस एरिया के आसपास एक रेजिस्टेंस भी है। वो पहली कैंडल ने रिजेक्शन ले लिया वहां से, बट फॉरेक्स में देखोगे ये जो लेवल है ये थोड़ा सा अभी आया नहीं है, दैट इज अप्रॉक्सीमेटली ओवर हेयर, बट ये एमसीएक्स में ऑलरेडी हिट हो चुका है। तो लेट्स सी, हम फॉरेक्स के अकॉर्डिंग ही चलते हैं। वहां पर अभी दूर ही है लेवल, प्राइस पर आया नहीं है। इंडियन मार्केट स्टडी बना हुआ है अभी भी। गैप अप ओपनिंग के बाद नंबर 550 पॉइंट पॉजिटिव करेंटली, ओवरऑल 80 पॉइंट फ्यूचर करेंटली। Iran has fired several drones towards commercial ships in the Strait of Hormuz since the signaling of the US-Iran Memorandum of Understanding, according to NBC News and the Jerusalem Post.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:16 a.m. here in London. Now, SpaceX jumped for a third straight day yesterday, overtaking Amazon in value to become the fifth largest stock in the world. Shares closed 4.8% higher, pushing its market cap to $2.65 trillion, roughly $8 billion higher than Amazon's. I'm joined now by Neil Campling, Bloomberg senior strategist, for some analysis. Morning, Neil. I just keep wondering when this hype's going to wear off. So much of the stock is owned by retail investors. Is this sustainable? What's most likely to be the trigger for a share price drop, if one's going to come?
Sure. Morning, Lizzie. I think a couple of factors we need to be aware of. One is that there will be some passive funds who are tracking indexes when it goes into the NASDAQ, as an example, and MSCI indices, who'll be tracking and looking to position accordingly. Once that is passed, that could be one trigger point to keep an eye out for. The second thing, and I find it slightly concerning, is that we started options trading yesterday. So as people taking the bets on where they think the stock will trade on certain points in time. But the worry is that there were some short-term options, so one's expiring at the end of this week, where people are placing expectations the stock may be at $300 a share or $380 a share compared to the $200 type close that it came through. So that's people expecting to have significant gains in a very short space of time. So that could be an issue as well in terms of that, that effect. So there is certainly a concern. I think there's definitely there's a factor in play at the moment where it's clearly not based on fundamentals. But that's certainly a risk, I think.
Well, on that point, everyone talks about how people are betting on the Musk hype. Does that mean that there won't be that much of a read across for the Anthropic and OpenAI IPOs?
It's interesting that this is, I think, very much, as you say, it's a Musk trade, and actually there was a 3 times leveraged product in London listed. The ticker is Elon space LN, and yesterday that rose by 60% at one point in time on the one day. So there's very much around that. So the read to Anthropic and OpenAI is limited in that sense. However, when investors start to look at the various AI models, they will probably see that actually Anthropic is far larger than where SpaceX has in its AI footprint.
Okay, interesting. I also just want to talk about this decision by Musk to buy the AI coding startup Cursor yesterday, $60 billion. It's one of his first moves for SpaceX since the IPO. What does that tell us about his strategy going forward for SpaceX?
It confirms that SpaceX's future driver is on the AI side. Interestingly, again, and it brings it back to the Anthropic and OpenAI discussion, is Cursor's revenue run rate is about 1/20th the size of Anthropic's. So Anthropic is far greater in terms of its scale and size currently. But SpaceX need to be in a space. They're very small in terms of their footprint. And actually their CapEx, and you mentioned at the top of the segment about Amazon, Amazon's CapEx this year is likely to be 4 to 5 times greater than the entire SpaceX ecosystem. So they're playing fast catch-up, but they are still way behind where other hyperscalers and AI plays are at the moment.
We also had the Bloomberg scoop about the US Commerce Secretary Howard Lutnick writing to Anthropic last week and warning that it would need government permission to grant foreign nationals access to most of its AI models, the most advanced ones, or face criminal or civil penalties. How likely is that to affect the Anthropic IPO?
Well, I think if we remember, the OpenAI example was that they didn't file for IPO before they went to got a court resolution with Musk. So I think Anthropic is unlikely to come to the market if there are sort of concerns or government intervention at any point in time. They would need a clean slate to then really come to the market, I think. So I think it's certainly a case of not yet, given that situation. But this is a sort of a hot potato in terms of political discussions, because some people at the G7 yesterday were talking about real big concerns that one nation can literally unplug AI's access for other nations, given that AI is so important in terms of global growth today. It's a big concern, I think.
Well, we're going to be discussing that tech angle on the G7 later in the programme. We'll have Oliver Crook on the ground for us in France. But for now, Bloomberg's Neil Campling, thank you very much. Well, coming up on Daybreak Europe, BMW plans to cut more costs after worsening demand in China. We'll get you more on that next. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Now, BMW has slashed its profitability forecast for the year following worsening demand in China, its biggest market, as well as negative sentiment from the war in the Middle East. It's also expanding a cost-cutting programme, leading to a one-time negative impact in the second half. So let's get more detail now with Bloomberg's transport reporter, Danny Lee. Danny, good morning to you. Just talk us through what we can expect from this cost-cutting programme.
Well, good morning, Lizzie. So BMW is revising its profitability outlook in car making. That will go from about 1 to 3% in returns. That's from as high as 6%. And that revision has come so soon after first quarter earnings in early May under the previous CEO, Oliver Zipse. But now under new CEO Milan Nedeljkovic, he is setting the scene for shareholders of more realistic expectations. So what we will see likely is a deepening in restructuring in terms of a more structural savings and efficiencies. But we've already seen BMW tackle savings in investments in R&D and efficiencies. So there's a doubling down, but it does raise the question whether there will be job cuts, which the company has not specified what this structural savings it's going to pursue will mean.
And just tie this into the broader story for European autos, Danny. How is the deterioration of the Chinese car market impacting Europe and the US as well?
Well, China is going through a multi-month slump in car sales. That also affects EVs with the loosening of support for EVs, and therefore consumer sentiment is weaker. This means not just foreign automakers, but Chinese automakers are struggling as well. And we have seen already in the prior years the intensifying competition that has really affected foreign automakers, particularly the Europeans. And so when you look at how BMW is producing its new class EV lineup, which has cost billions in euros, this may complicate its effort. But we have already seen the likes of Mercedes and Porsche, for example, who are all struggling in China as well. But the difference between BMW and the likes is that Mercedes and Porsche are seeing better sales overall from its lineup, or they're doing earlier, deeper restructuring to ensure they have the cost savings, whereas BMW is going to see sales that are going to decline. So very much that China context is important, and it's going to be a struggle for BMW in the months and maybe the foreseeable future to come.
OK, Bloomberg's Danny Lee in Hong Kong, thank you very much for that analysis. Now, to some of our top corporate news this morning. Bloomberg has learned that Apple is planning to launch camera-equipped AirPods late next year as part of a flurry of new releases. Sources say it aims to unveil the device around the same time as a next-generation foldable phone and a fresh iPhone model to mark its 20th anniversary. Elsewhere, Goldman Sachs has advised on more than $1 trillion worth of mergers and acquisitions so far this year, the fastest any bank has ever reached that milestone. That's according to data from DealLogic. So that's just a couple of our top corporate stories this morning. But coming up, Ukraine on the agenda. We'll get the details of Trump's meeting with Zelensky at the G7 next. We'll go to our chief Europe correspondent, Oliver Crook, who is on the ground for us in France. That's next. This is Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Bonds gain and Asian stocks push higher for a third day as investors count down to Kevin Warsh's first decision as chairman. Oil holds below $80 a barrel as Bloomberg learns that the draft deal between the US and Iran will deliver a broad economic boost to Tehran. And as SpaceX rockets past Amazon to become the world's fifth largest stock, we'll speak to Europe's AI leaders throughout the morning at the Viva Tech conference. Well, a very good morning. Welcome to Wednesday. Let's take a look at these markets this morning. It is Fed Day. We've got a lot of geopolitics happening, and you're looking at Brent now below $80 a barrel. It's a 3-month low, down over 15% over 4 days, on these bets that the US-Iran deal is going to get oil flowing again. Now, that is easing concerns on inflation. So you've had bond yields dropping around the world. The 10-year Treasury yield, as you can see there, at 4.42%. But really, strategists divided on how many hikes or cuts are coming from the Fed this year. Are we even going to see a dot on the plot from the new Fed chair, Kevin Warsh? It is his first meeting as chair. We'll hear from him tonight. How dovish a message are we going to hear at this press conference? The dollar range-bound in anticipation. Will it drop lower if the Fed sounds more dovish than expected? Now, flip the board over to the equity and futures picture. We've got Asian stocks up 0.4% now, so doing better than at the start of the programme. European futures, though, down 0.2% nearly. And Nasdaq futures looking for a bit of a retracement of yesterday's losses. We had that broad rotation out of tech into pretty much everything else. So now Nasdaq futures up 0.6%. That's what's happening in markets. Let's talk at the front pages now, and we'll start this morning with the Financial Times. They lead with a story describing investors flocking back to the US dollar, saying that investors are betting the AI boom will support the country's economy and force the Fed to keep rates high. Meanwhile, if we look over to the Wall Street Journal, it focuses on SpaceX confirming this $60 billion deal to buy coding startup Cursor, as we were discussing with Neil Campling, saying that Elon Musk is using his war chest on the acquisition in a bid to target enterprise customers. So not the consumer, more enterprise customers. Meanwhile, let's take a look at the French papers this morning. Le Monde leading on the World Cup, of course, after France's 3-1 victory over Senegal, in which a headline describes a team with 2 speeds overcoming a slow start to secure victory. And you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. Well, let's go to the G7 now, because the US could soon reimpose sanctions on Russian oil shipments after President Donald Trump and fellow leaders at the G7 met to discuss the war in Ukraine. Overshadowed by the Iran war, the focus now is shifting back to Ukraine.
We were focused on Iran. That's going to be in the back, in the rear view mirror. They go to this front and they get blown up. And Ukraine is losing a lot of people, too. I mean, the whole thing is ridiculous. So, I'm going to do whatever I can.
Let's go straight to the summit now. Oliver Crook, our chief Europe correspondent, joins us now for more. Ollie, good morning. We heard Trump there saying that he'll do whatever he can for Ukraine. So what does President Zelensky need from the G7?
So he needs quite a few things from the President of the United States if he can manage to get it. And we should say that this was the opportunity for President Zelensky to meet with Donald Trump. He hadn't really had any sort of face-to-face interaction with the President of the United States in almost 4 months. And so he had that sort of broader meeting with G7 leaders that included the President of the United States. It seems like they also got some one-on-one time on the sidelines of that event. I mean, they need really 2 things. One is for this sort of re-engagement of the United States in the peace process. We've since, the United States sort of tapped out of that peace process a couple of months ago. There's been some more diplomatic efforts on the European side, but there's also been some sort of radical changes to the equation for the Ukrainians. You'll remember the first half of the Trump presidency with that catastrophic meeting with Zelensky in the Oval Office. The real mantra for President Trump was, Zelensky, you have no cards. Now, since then, things have changed radically on the battlefield. The Ukrainians have gained momentum on the battlefield, but they've also finally got this 90 billion euro loan from the European Union that had been blocked by the Hungarians to sort of tilting the balance of power. So for Zelensky, this is an opportunity to re-engage, A, to the President of the United States, but B, to do it in a sort of the terms that are favorable to the Ukrainians. And that is exactly what he'd like to get from the President of the United States. He would like to see those oil sanctions reinstated on the Russians that were sort of lifted in order to ease some of the supply shock that we got from the war in Iran. It sounds like the United States is now open to doing that. And of course, the all-important permanent question of military hardware and of course air defense. The air defense will be in very sort of high demand across the world because, of course, all the Gulf countries will want to get their hands on it as well. But potentially now, with the hostilities in Iran ceasing, some more supply of that American hardware that the Europeans can buy and then send over to Ukraine.
OK, so that US-Iran deal hopefully opening a bit of bandwidth to focus back to Kyiv. Meanwhile, another focus is tech, because you've got AI executives planning to attend the summit today. What can we expect there?
Yeah, that's absolutely right. Yesterday was really the geopolitics day. The focus today will move to the sort of corporate side and, of course, the future economy and artificial intelligence really at the center of things. So you've got the CEO of Anthropic, OpenAI, you've got leadership from Google and a number of the European tech companies meeting with G7 leaders in order to have the conversations about what the sort of collective approach globally will be on AI. It comes, Lizzie, at a very interesting moment, as we've been reporting over the last couple of days, where you're starting to feel a bit of that AI nationalism, where you have the United States basically freezing out foreign nationals for using some of the most advanced Anthropic models. That obviously will be sort of front and center for these leaders and for these CEOs as they discuss that a little bit later today. There was also some reporting from Reuters that potentially what some of these countries would like to see is to get sort of favored status in order to gain access to some of those models, so that maybe potentially that circle can be drawn a little bit wider than the United States. But that'll be some of the conversation that'll be focused today before President Trump then jets off to Versailles for that sort of one-on-one state dinner with President Emmanuel Macron in the gilded halls of Louis XIV.
Ollie, thank you for your coverage. That's Oliver Crook, our Chief Europe correspondent in Evian, who will be speaking to the Synthesia CEO and co-founder later this morning from the sidelines of the G7, a key tech conversation there. And coming up, we'll return to Paris. We'll be speaking to Maurice Levy, the VivaTech founder and emeritus chairman of Publicis Group. So that conversation coming up next. This is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Daybreak Europe. Just coming up to 6:40 a.m. here in London. And let's head right back to Europe's biggest tech event, VivaTech, which kicks off in Paris today. Tech leaders, startups and investors are meeting to discuss artificial intelligence, the economic payoff, and issues of sovereignty and ethics. We can go back to Bloomberg's Tom McKenzie. He is at the summit for us. Tom, you've got a special guest with you, the first of many today.
Lizzie, thank you. Yes, very pleased to say I'm joined by the Chair Emeritus of the Publicis Group and the founder, of course, of VivaTech, Maurice Levy. Maurice, good morning. Thank you for your time. This is the 10th anniversary of VivaTech. We were talking in the break about the journey that you've been on with this event, and this happening at quite the moment when it comes to how we think about AI, how we think about sovereignty, and how we think about Europe's place in tech.
First of all, thank you for having me.
and good morning. It is the moment. It is the moment on every single aspect of technology, AI, transformation of society, the way consumer will behave, the transformation of corporation. And VivaTech is playing a very important role as a catalyst of energy, and also the fact that we are inviting people with contradictory point of views in order to push the envelope in those discussions. And clearly, AI will be a defining innovation for the future of Europe. And today, sovereignty is a key word for all European head of states.
Let me follow on the sovereignty question then, Maurice. How significant was that decision by the US to impose export controls on Anthropic models? How is that being received in Europe? What should the response be?
If you are a CEO in Europe and you are running a business, for example, CEO of a big bank, and you are using Cloud and Anthropic tools or OpenAI tools, ChatGPT, whatever, and suddenly you are cut off from those tools which are the brain of your system. The nervous system of the bank is that tool. And suddenly you are cut off. What do you think? How can you imagine that a CEO can think that one day it's like somebody, we can switch off electricity and it's switching off AI? No, you doubt about the future. You doubt about your supplier. You have some doubt about how you will be running the business tomorrow. And you have to think about some alternatives. And head of state say, oh, the solution is clearly that we control our data, that we control new tools, Mistral AI or Ami Labs or H, whatever, and that we develop our own AI system in order that we have the tools which give us our own right to grow, to develop, to sustain our development for the future. So clearly, it has not been well received, to put it mildly.
It hasn't been well received, to put it mildly.
It has not been well received.
This has been a catalytic moment then. It's catalyzed a response, and you expect Europe to respond. Is it full stack sovereign AI that Europe needs, or is it controlling some of the bottlenecks so that Europe can have a seat at the table?
I think the more you go into the detail of what AI will be doing and the role of AI in every single operation, you see that it will be essential for space, it will be essential for defense, it will be essential for industry with the robotics. You cannot do robotics tomorrow without AI. And therefore, the question is to have the control not only of the data, but also on everything, the whole range of tools, if you want to be competitive on the...
What is the biggest impediment to that ambition right now in Europe?
The biggest impediment is money. In fact, to be very honest with Europe, we, even if we have made a lot of progress in taking risk, and if there has been a change in culture for the risk takers, it's clear that we are not sitting with the same kind of bulk of investment that the US has.
Yeah. So how do we unlock that?
I think you read Enrico Letta report, you read Mario Draghi report, and you have the solutions. And one of the solutions which has been decided recently, which is the 20th country. Unfortunately, UK was that 20th country, but is no longer there. So this virtual country where there are rules which are softer, and this could be the beginning of a change in attitude and in change of behavior.
Let me ask about your advertising industry. Are there fewer or more workers in advertising in 5 years' time?
There will be a big change in creativity, a big change in the way we are operating our own operations. And I think that the idea that we will lose a lot of jobs is maybe exaggerated a little bit, to speak like Greenspan. I think that there will be some changes, but there will be new jobs, and probably more expensive jobs. So I don't believe that all in all we will be very different in the future in terms of size of jobs.
What do you expect to hear from President Macron tomorrow? What should be front of mind for him?
Okay, President Macron is in the last year of his presidency. He is on many fronts, and he has a limited power today because he has not the clear majority at Assemblée Nationale. So therefore, what he can do is relatively limited, and I think what he can really where he can have an impact and make a change is at European level, to convince his colleagues that we should have one Europe united. And as long as we have 27 countries and an idea of Europe, we will not be as powerful as we can, because we have the largest consumer country of the world. We have also the capacities and the possibilities of being a fierce competitor to China and to the US. So therefore, we should a little bit think a bit less about our own sake and more about European sake, and we will be much stronger.
Maurice Levy, thank you very much indeed. Chair Emeritus of the Publicis Group and, of course, founder of VivaTech. Lizzie, back to you.
Tom, thank you very much for that interview, and our coverage of VivaTech continues from Tom McKenzie, with more great guests throughout the day joining us from Paris, including the L'Oréal Deputy CEO, the Chief Executive of Pascal, and the Managing Director for EMEA at Amazon Web Services. Well, let's come back to the UK now. Nigel Farage's Reform Party, currently ahead in the national opinion polls, is being challenged by a right-wing upstart called Restore. Led by Rupert Lowe, who was ejected from Reform UK, the party's attracted the attention even of ex-owner Elon Musk. With a highly anticipated by-election in the Northern England constituency of Makerfield coming tomorrow, the party is splintering the right-wing electorate. Labour's Andy Burnham is the favourite to win, but Restore's candidate is on 7%, equal to Burnham's margin over Reform. Let's get a breakdown of all of this now. We can speak to Bloomberg's UK politics reporter Lucy White. She joins me now in studio. So, Lucy, maybe the international audience isn't familiar with Restore. Just talk us through how it's creating a headache for Farage's Reform and really making the Conservatives pale in comparison to either.
Yeah, it's incredibly interesting because, you know, up until recently we were thinking of Reform as this sort of challenger, upstart party, and now we're looking at an even more challenger, even more upstart party that's now essentially throwing Nigel Farage's own rule book back at him, playbook back at him. So it's incredibly difficult for Farage because we're seeing Restore take a huge amount of their vote, potentially enough that, you know, it could potentially mean that Reform doesn't win in this northern by-election. And it's cannibalising that kind of right-wing vote. I mean, Labour essentially can just sort of sit back and watch this play out and say, well, you know, we don't really need to do that much because these guys are kind of taking each other's vote and splitting it.
So it's helping Burnham. If he wins, how soon could we see a leadership challenge to Keir Starmer?
I think it will play in Burnham's advantage if he wins to move as quickly as he possibly can. I mean, the longer we see this drag on for, the worse it's going to be for the Labour Party, and the less is going to happen in terms of getting legislation through, having any kind of plan that the country can get behind, and the worse is going to look for the government.
Okay, well, let's see how it plays out. Bloomberg's Lucy White all across that election for us. And as we have been discussing, voters in Makerfield and Greater Manchester will be going to the polls tomorrow in this by-election to select a new Member of Parliament. A full list of candidates standing in the election is on your screen now. So just take a look at this, how many there are on this screen. But as we say, it is a crucial vote that could lead to the next Prime Minister of the United Kingdom. Meanwhile, London Mayor Sadiq Khan has declined to support Keir Starmer staying on as PM until the next general. Khan is a member of Starmer's Labour Party, of course. The Mayor welcomed the potential return to Parliament of Manchester Mayor Andy Burnham, who is, of course, one of Starmer's main rivals.
I wish I was knocking on doors in Makerfield in this by-election. I love campaigning. Andy Burnham's a good friend of mine, so is the Prime Minister Keir Starmer. Let's wait and see what happens on Thursday. I'm really hoping. I'm sorry, Andy, I can't be there helping you in Makerfield. I'm really hoping that Andy Burnham and Labour wins in Makerfield, but also I can see the strengths of Keir Starmer, the Prime Minister. He's currently in Evian in France at the G7, showing the different stability he makes in terms of whether it's NATO, whether it's the importance of working with our European partners, whether what we've seen in the last couple of days, the peace deal.
So you're of the view that Starmer should be leading Labour in the next general election?
Well, I think it's really important for us to focus on one thing at a time. The focus for the Prime Minister should be the G7 summit. The focus on those of us who aren't at the G7 summit, if we're in the UK, if we're Labour, is to go to Makerfield and help Labour win that seat. I think, and I speak as somebody who's done this for the last 10 years, when you're a leader, you want your most talented people around you. And I think Andy Burnham's incredibly talented. I want Andy Burnham, because he wants to return to Parliament, back in Parliament, helping the Labour government.
The London Mayor Sadiq Khan speaking there to Bloomberg's Avril Hong in Singapore. Plenty more still to come. Stay with us. This is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Today, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
We just don't know. So that's the reason why the market, of course, has been used to having very well anchored expectations around the dot plot. The dot plot has been around now for 15 years almost. The SEBI, meaning the forecast, has been around for almost 20 years. So most people in financial markets have grown up with very anchored expectations about the economic outlook and very anchored expectations about what the Fed will do.
Apollo partner and chief economist Torsten Slok there on the lack of clarity on the Fed outlook. Of course, the Fed decision tonight will be the big focus for markets later on today. But in anticipation, in advance, let's bring you some other terminal charts to frame your day ahead. Because yesterday we saw more of this rotation out of US tech. You can see here on this chart the spike in volatility on the Nasdaq compared to the broader stock market. So it just really underscores the concentration in big tech. So the question is, are we at a turning point where we see even more of a shift away from big tech and into a wider range of companies, pushed partly by the oil price falling? Now, flip the board over and you can see how the Mag 7 has been lagging the Russell 2000, this US small cap index, of course, and that's partly because of the Iran war, but it's also because the benefits of the AI investment boom are broadening out. Now, we've got plenty more for you today. We will have some big interviews from Viva Tech throughout the day. Anna and Guy will take you all the way to the European Cash Open. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Wednesday the 17th. Good morning, folks. Details of the MOU between Iran and the US, they're now starting to emerge. The main take so far seems to be that Iran is being financially incentivized to sign this deal. We'll talk more about that in a moment. We're 12 hours away as well from Fed Chair Kevin Walsh's first press conference. That's a must-watch. And we are live at the G7 and VivaTech in Paris, as AI definitely takes the spotlight today, Anna.
Absolutely, lots to talk about when it comes to the AI theme then with VivaTech in focus and that G7 guy. Let's focus on the markets for the moment. Eurostoxx 50 futures telling us we are expected to go not very far at the start of the European equity trading day. Expected to be down by 0.2%. Brent crude unchanged. That sounds uninteresting. What is interesting is the 79 handle that we have on that Brent price. So we're below $80 a barrel. Guy was talking about the deal between Iran and the US. What does it mean for Iranian oil flows? Also crucial to the conversation. We'll get to that. And the pound in focus against the US dollar or against all kinds of other currencies as we make our way towards some important politics this week. But we also have some data out from the UK right now. The countdown to the opening trade, well, that starts right now.
Good morning, Wednesday morning. There's a lot going on this morning that we need to focus on. Oil, as Anna was just mentioning, sub 80, that's significant. And it comes as we begin to understand the details of what this MOU, remember it's only an MOU between Iran and the United States, actually looks like. The key takeaways so far seem to be that Iran is being financially incentivized to sign this deal, to take this process forward, to get into the negotiation period. Not only is it going to get financial incentives, but it's also, Anna, critically going to be able to sell oil. And this feels like the debate at the moment is whether or not Trump is getting a better deal or a worse deal than Obama got. And that is the debate that is raging at the moment. But Iran seems to be getting a lot out of this deal.
Yes, so from a market's perspective, where are we seeing this play through? Well, we are seeing it on the oil price, as we've mentioned. So an immediate waiver. Let's think about the financial rehab, then, that Iran is perhaps going through here. Immediate waiver on Iranian exports of crude. That seems to be important. Unfreezing of Iranian dollars is talked about in there. An end to sanctions, but TBC on the timing of that. Financing to the total of $300 billion. TBC on the details of that. All of those TBC elements are part of this 60-day conversation that is going to happen from the date of signing, we understand. And so we'll see where they go. But it does seem, to your point, as if there is something in this financially for Iran, and maybe that's why we get to that signing point on Friday.
Maybe we do. But then where do we go, I think, is the key question. These financial incentives are getting a lot of play around the world this morning. And I do wonder if you are a hawkish Republican in D.C., how you are going to perceive this. And they want to have a vote on this one as well. They want to be part of this sort of program. And it just feels as if with Israel kind of saying what it's saying at the moment, the kind of the Republican hawks saying what they're saying at the moment, how do you price this? Is this a temporary story? Is this something that has longevity? We're going to be into the midterm process. We're already into the midterm process. How far will Trump want to go? It feels as if a lot is being given to get to this point. How much further can we take this? And what is the potential for interruption?
Yes, President Trump's intention to end this on these terms seems clear. But to your point, will the rest of the political landscape go along with it? And the important point on Israel, it does say in this text, together with their allies in the current war, as if this is binding on allies, which would be Israel. And yet we have not heard that that is Israel's take, certainly, on these matters. So we continue to watch that. Let's talk about the Fed, because that is linked, of course, through the price of oil. We see it coming down. Are we going to get a hawkish hold? That seemed to be the conversation going into this week, was all about whether we'd get a hawkish hold. Does that still hold as an expectation, given what we've seen in the oil price recently? They might remove the easing bias. All of that that perhaps will be the definition of a hawkish hold. That's what we're looking for. Will there be, so many questions about what we'll get from Kevin Walsh on AI, on reform of the Fed, reform of the communication strategy, acknowledging the sticky nature of inflation or not. He prefers a different measure to the standard PCE that is thrown around. Acknowledging the firmness of the labour market. Does he come out wanting to prove Fed independence? So many things in play here.
Does he deliver a dot?
Yes.
Is a key question. What kind of forward guidance are we going to see from a man that has said that he doesn't want to deliver an awful lot of forward guidance, that he thinks the Fed over-communicates? And how will the market take that? I think is an open question at this point. What does the dollar do on the back of this? The dollar has rallied during the process of this war unfolding. We've seen the US as being a big oil exporter. That links these two conversations together. The dollar has benefited from that. Where does it go if we see a hawkish hold? if Walsh is slightly dovish, how does the dollar respond to that? I think the dollar is going to be a key metric this evening.
The dollar is a key metric. Also, we just showed on our screen another key metric, which is going to be two-year yields, of course, because they move on expectations of what the Fed does next. And what's interesting about the chart we just showed is the way that oil has dropped since we heard from President Trump and the Iranians about the signing of this MOU on Friday. Oil has dropped, and two-year yields haven't necessarily played ball and dropped quite so much. So the market has kept that restrictive pricing, kept its expectation that we'll get to Fed rate hikes at some point. And so how does that set us up? This is the input. Oil has dropped, but two-year yields have not.
Let's talk about what is happening with tech. Big day in Europe for tech. Don't often say that, but we're going to see it today. You've got the G7 meeting taking place. We've got a lunch that's going to be at that event. There's going to see a series of leaders coming to it. You've also got the Viva Tech conference, which is taking place in Paris. Tom and Fran are both at that event. We're going to see a series of conversations about how Europe is going to be able to harness the power of AI, maybe to deliver better productivity growth going forward. I think that's going to be a really interesting line that we're going to hear from this. But it just strikes the kind of the irony around all of this is that Europe is struggling to deliver this. The fact that when you look at that lunch that is happening, it is so US dominated, and that's the narrative that the US is still bringing to the table.
Well, in fact, it tells an even better story, doesn't it? Because it's US-dominated, but it features Demis Hassabis, a company that, to get enough investment, had to go to, well, the US came. The US came. I mean, this is many years ago, of course, and the purchase of DeepMind. But that is where the European role, it seems to be at this point. Can Europe do anything to break out of that kind of role, a sort of sponsored by the United States role? It'd be interesting to see the dynamics. Will we see any of the dynamics between these guys who are usually fierce rivals? There was that awkward moment, I think, at an event in India where Sam Altman and Ahmadai avoided holding hands when everyone else was holding hands. I mean, these people don't necessarily get on with each other, but maybe they have a lot in common at the moment. If they're all trying to express, perhaps they're all trying to express to leaders, certainly in the United States, their resistance to the idea that they are caught up in the supply control, export controls that we're seeing at the moment from the US.
But it all comes under the umbrella of just what we're seeing, which is spectacular in the United States. With, to your point about raising money, SpaceX has just been phenomenal over the last couple of days. We're now worth more, or we've been kind of flirting around the level of Amazon. That is spectacular for a company that has the kind of revenues that it has versus what Amazon's look like. Are we going to see a shakeout period? And you've got the story of a kind of tech sovereignty, plus you've got the ability to finance. Europe, in some ways, could benefit from the tech sovereignty story, but how does it figure out a way of delivering the latter part? And I think that's the pitch that Europe needs to figure out this morning. Anyway, we've got some great guests coming up. We're going to be talking about all of this. L'Oréal's deputy CEO is going to be joining Francine in Paris at Viva Tech. We've got the Pascal CEO going to be joining us as well with Tom. We're going to be talking about quantum computing there. And Amazon Web Services VP is going to be joining us a little bit later on as well. We've got three great guests lined up out of Viva Tech. We're also going to be taking you to the G7 as well.
We have inflation in focus because of war in the Middle East. It has been for a very long time, and before that, many other geopolitical dynamics pushing it around. 2.8% is the inflation story out of the UK today. That's the year-on-year number. That is below the estimate. So we see a consistent inflation rate from the prior period, 2.8%. So no change there. We had expected it to go up to 3%. Safe to say that the pound didn't really know what to do with this information. It spiked higher, it seems, initially, and then dropped. So does this take away part of the concern about inflation here in the UK? I mean, Bloomberg Economics still saying, going into this number, they were saying they still see an acceleration coming in the coming weeks. So maybe this is just delayed. Services, including airfares, was supposed to be part of the push higher in the inflation story. So whether that hasn't quite come through to the extent that was expected, but the 2.8% then is lower than the 3% that was expected.
How does the bank deal with this? What does the bank do with this? It feels as if the Bank of England is maybe backing away, stepping away. I'm not sort of talking about Megan Green here, but there are others, it seems. The tone maybe is shifting towards let's not make rash decisions or early decisions.
The market moved a lot on early expectations of rate hikes. Maybe that was enough. Maybe that tightened things. Maybe the market did the job for the Bank of England to some degree, but we hear from them tomorrow.
We do. Let's talk about what we've got coming up on the show that's going to help us with some of these debates. Christine Kumby-Nielsen, Danske Bank Senior FX Strategist, is going to be joining us to talk about the data, the Fed, all the other things we need to talk about. Hugh Gimber, JP Morgan Asset Management Global Market Strategist, is going to be joining us, as will Victor Ripabelli, Synthesia's CEO and co-founder.
Let's tell you some of the events that are coming up today. Things to watch. 8:30 a.m. UK time. Riksbank rate decision. So it's not just about the Fed and the Bank of England and the BOJ and the RBA. There's also the Riksbank. The IEA will release its monthly oil report. That's at 9 a.m. UK time. We've talked about the AI bosses who are going to be in attendance at that lunch, that G7 Leaders Summit, of course, taking place in France. 1:30 p.m. UK time, we will get US retail sales. That's all in the build-up to the big one, of course, the Fed's rate decision. 7 p.m. UK time, we get that. And Kevin Walsh's first press conference, so there'll be that to watch ahead of the football, is perhaps the way that things will play out for many people.
Yeah, many people?
Many people?
Many people. Okay.
You're interested in.
We'll go with many people. Coming up, this week sees a crucial by-election taking place in the northwest of England. We are going to be speaking to Reform UK Party Deputy Leader Richard Tice ahead of that vote. Plus, BMW is slashing its profitability forecast for the year and, as a result, ramping up cost-cutting measures. A lot to do with China, this story. More on what is fueling. We'll have to talk about fueling, the caution at the automaker next. Plus, we are going to take you back to Vivatech. And Evian, France, where G7 leaders are meeting. More insights on what's left on the agenda at the summit. Big clue, tech. If you've got any questions, if you want to get in touch with the show, IB Plus BVTV Go is the function on your Bloomberg terminal. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Cheryl in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
things are happening. The ships are starting to move now. We're going to have it fully open by Friday. The ships are starting to move nicely. Oil is starting to go, and the prices are coming down rapidly. Stock market is going up rapidly. A lot of good things are happening, and most importantly, Iran will not have a nuclear weapon.
President Trump speaking at the G7 Leaders Summit, of course, keeping the focus on the developments with regard to Iran. Those comments come as Bloomberg reveals details of the 14-point draft memorandum between the United States and Iran. We understand Tehran is set to receive broad financial incentives as part of the agreement. We've been through some of the details. Let's get the perspective of our chief Europe correspondent for Bloomberg TV, Oliver Crook, who is at the G7 event in Evian in France. So what can you tell us? What else can you tell us then about the discussions about Iran and where this goes from here then, Ollie?
For G7 leaders and some of the other partners that have joined in these discussions, of course, the Qataris, the Emiratis, the Egyptians were also here yesterday. That was really the sort of big geopolitical day where the focus was squarely on the Middle East, in Ukraine. And of course, for the Middle East, I think for the Europeans, really the focus, at least publicly, is that there is seemingly this MOU out there, that there's this deal that is in the works, that it will ultimately lead to a diminishing of oil prices. Whether or not this is a better deal, I think is something that probably is more of a debate behind closed doors. But I think for the Europeans, and it sounds like the United States would like to enlist some of their expertise on some of the demining. They really want this deal to be very, very secure. They have concerns about the security of their demining mission, which is really something that you can only do during peace times. So if that is to advance, they really want to make sure that this deal is 100% sound. The question of Ukraine, also prominent yesterday. It sounds like the President of the United States wants to re-engage with that peace process. It sounds like he's speaking a bit more constructively. There was the first meeting between Donald Trump and Zelensky in almost 4 months yesterday. And of course, Zelensky wants that re-engagement, not just in the sort of discussions, but that re-engagement to be on the sort of Ukrainian terms. We should say the Ukrainians are in a much better position than the first half of the Trump administration, where the mantra really was that you have no cards. The focus today, of course, turns now to AI, the global infrastructure for AI, global coordination for AI. We have the CEOs of OpenAI, Anthropic, some of the leadership from Google and some of the other AI companies here within Europe. But of course, there's a big question about sort of AI nationalism and cutting off a lot of these avant-garde models from foreigners, non-Americans, and that is going to be certainly one of the big discussions here. There's also potentially a discussion that there was some reporting from Reuters that some of these countries are pushing to have a sort of trusted countries list. So potentially the United States could draw a larger role, a circle around those AI models, not just the United States, but more widely. But of course, I think for the Europeans, all of this provoking a good deal of anxiety, as you guys were talking about a little bit earlier this hour, that they are really, if you know, you can even call them partners, very, very junior partners in the architecture of AI.
Ollie, we'll look forward to the coverage of that a little bit later on. Thank you very much indeed. Oliver Crook, our chief Europe correspondent, joining us at the G7 in Evian. Let's talk about what this all means for markets, for the economy. Christine Kumbi-Nielsen, senior fixed income strategist, joining us from Danske Bank. Christine, let's talk a little bit about kind of what's happened over the last 24, 48 hours. Oil prices have come down really sharply. Is that going to be enough for Kevin Walsh, the new Fed chair, to be able to signal a more dovish line coming out of the Fed going forward?
I don't think so. I think when we're looking at the communication from the Fed, if we're looking at the underlying macroeconomic developments in the U.S., I think what we're actually seeing in the U.S. looks to be a lot more underlying inflation really taking place. So very different than what we're seeing in Europe, for example. So I don't think that will open the door for a more dovish stance. I still think that they will remove this easing bias that has been in their communication so far.
OK, so I buy the dollar on this?
Yes, you do. I think that we'll see euro dollar coming lower. I think even if we don't necessarily get that communication today, I think they will be, I think, a bit withholding in terms of forward guidance. But I think as we trickle along the next couple of months, I think it will definitely open up for some more dollar strength.
OK, and Kirsten, more big picture from the Fed. Of course, the focus will be on all of that. But in terms of stepping back and thinking about the reforms that Kevin Walsh wants to bring through, do we expect anything to change today? Like not everybody participating in the SEP, the dots, or any other kind of change to the way that this meeting is handled or the conversation with the media unfolds?
Well, definitely. I think let's wait and see. I think that we will be a bit more cautious in terms of the forward guidance that we will be getting from the Fed. I think that's definitely one of the things that he has criticized central banks for before, that they really want to fine-tune their policy stance using forward guidance. So I think we'll get more like a data-dependent approach, a wait-and-see approach, akin to what we're seeing with the ECB. I think in terms of some of the larger reforms, I think we'll have to wait and see. He's also commented that he doesn't want to make too big changes before there's been a thorough discussion. But I think Dutch is a good example of, will we get there? Will we get everyone participating? But let's wait and see. Definitely an exciting meeting coming up tonight.
Yeah, exciting meeting. And what would we expect to be the fallout in FX markets? So buy the dollar was your suggestion. But where will that leave, for example, the yen, which is now hovering around that 160 mark? We've seen intervention at that kind of level in the past.
Yeah. I think it's been remarkable when we look at the dollar yen, simply how steady it has been trading for the past couple of weeks. Of course, we had some intervention a couple of weeks ago. I think when we look a bit ahead, if we do see some of these peace talks and peace agreements materializing, if we start to see more lower energy prices, I think that can push dollar yen lower. So I think against the yen, I'm more bullish on the yen than the dollar in that sense. I think there's room, if we get some of this relief in sentiment, that it could push the cross lower.
Kirsten, let's talk a little bit about the pound. What is priced into sterling right now? Is it a Bank of England that is going to hike rates or not hike rates? We've just had an inflation print that looks fairly stable. We've got a by-election coming up tomorrow. We could be about to see political turmoil, a new prime minister. What is priced? What is not priced?
I think, well, in terms of rate hikes, there's definitely an expectation that we'll get at least one rate hike from the Bank of England. When we look at the individual statements that we're getting from them, there's definitely starting to come some more hawkish-leaning elements. I think we will see one more member perhaps voting for a hike at the meeting tomorrow. So I think there's definitely the risk of hikes, and a full hike already priced by the Bank of England. I think in terms of the political risk premium, definitely a very big day for UK markets tomorrow. I think to some degree it is priced that we will start to see, if we see Andy getting this seat and if we start to see a leadership challenge in the UK. But I think it's not fully priced. I think the political risk premium of getting a leadership challenge, of perhaps relaxing a bit the fiscal stance, I think that's something that could drive the pound weaker, simply because it would spook investors in terms of UK markets. It would spook in terms of the gilt market.
How much weaker would you expect it to go?
I think against the euro, I think we could go at around to the 89 level, I think, here over the next 12 months. I think when we're looking at some of the other factors, I think looking at the relative growth outlook, the position is looking quite a lot weaker as well when we're looking at the euro area. So that factor won't be as dominating anymore. But I do think that we expect that the markets will gradually price out the expectations for hike from the Bank of England. I think data has also been to the weak side. If we do get a peace resolution, if we do see energy prices coming lower, I'm especially attentive to selling price expectations when I look at the UK. If that starts to come lower as well, I think this could all really feed into the narrative. Again, remembering markets were pricing cuts ahead of this war in Iran. So I think we could revert at least back to a more unchanged what can you say, unchanged rate decisions from the Bank of England in the coming months.
OK, Kirsten, thank you very much. Thanks for joining us. Kirsten Kumbie-Nielsen, Senior Fixed Income Strategist at Danske Bank, with a focus on FX as well, of course.
Looks like services was quite hot within that print, though, out of the UK. It'd be interesting to see how the bank deals with that. What else do you need to know this Wednesday morning? Goldman Sachs has advised on more than $1 trillion worth of mergers and acquisitions so far this year, the fastest any bank has ever reached that particular milestone. This is according to data from Deal Logic. The big deals include advising Dominion Energy on its $118 billion sale to NextEra, and Unilever's nearly $45 billion sale of its food business to McCormick. China's central bank has signalled a potential shift to an overnight policy rate, a move that would bring it closer to global peers and give policymakers there greater influence over short-term funding costs. A shift towards the overnight rate regime would mark another step in the PBOC's revamp of its policy, intended to promote the transformation of the monetary policy framework to a more price-based model. And the US Defense Secretary, Pete Hegseth, will attend a gathering of his NATO counterparts in Belgium this week. He is expected to push the message of burden sharing that has become the hallmark of the Trump administration's defense policy. European allies have been bracing for drastic cuts to the military assets the US is willing to dedicate to the continent's wartime efforts, especially amid conflicting signals from the administration officials on US troop drawdowns at overseas bases.
It's not a new theme, is it?
No.
From Pete Hegseth that he wants Europe to spend more on defence, he wants NATO to be more ready to defend its own backyard. So these are tried and tested. I wonder, it's interesting timing from the UK perspective, having lost a defence secretary and another minister within the Defence Department, and then seeing day after day coverage of minor acts, shall we call it, of Russian aggression around the UK and the way that is being delivered.
You're referring to what happened in the Channel yesterday?
Yes, which was curious. With a yacht.
A Russian warship firing close to...
And the day before that, where we saw the taking of a Russian shadow tanker by UK authorities, suggesting they were helping Russia to break sanctions. So all of that is just building, isn't it, to more of a defence conversation in the UK. And so maybe that is something that catches the attention of Hegseth. Interesting that we have some analysis from Bloomberg Intelligence saying that Europe needs to really up its defence spending, go from $587 billion to $850 billion in 2026 to really build out sufficient defence capability.
Do you cut spending on welfare? Certainly Rachel Reeves is talking about the idea that she won't raise taxes to fund defence spending. Now, how long she's going to be Chancellor for, I don't know, but I just wonder kind of whether the arithmetic really works.
These are active questions. Coming up on the programme, we will not lose sight of the AI story, and in industries perhaps we haven't focused on it too much, the AI benefit for the hair and beauty industry. That's up next. L'Oreal will be speaking to us. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. Half an hour to go until the start of trading this Wednesday morning here in Europe. We saw something of a sell-off in the United States yesterday towards the back end of the session. We now need to price that in. So we're seeing Euro Stoxx 50 futures down a little bit this morning, only down by 0.2%. The CAC is unchanged. US futures are bouncing. The Nasdaq is up by 0.6%, but still hasn't completely filled the gap we saw at the back end of the session. So we're a little softer on a two-day basis. Yeah, and the bond market story of yesterday was really interesting, which sets us up for a slightly more stable picture this morning. So we saw bond yields falling, certainly in parts of Europe. That was the story at the 10-year horizon. Now we see pretty flat bond market performers. The Japanese story has caught up with the rest of the world in the sense that we saw lower yields there as well. Have treasuries fallen as much as oil prices, though? That remains a question. Certainly at the short end, that is something that the bond market is thinking about as we head into that Fed meeting where we will be watching the dollar and treasuries very closely. Now let's talk about AI. The world's biggest beauty company, L'Oreal, has been partnering with IBM and with NVIDIA as it aims to use AI to speed up new discoveries. Bloomberg's Francine Lacroix is at the Vivatech conference in Paris, where the convergence between beauty and tech is a theme. Francine, good morning.
Yeah, good morning, Anna. There's a lot to talk about here with Barbara Lavernos, L'Oréal Deputy Chief Executive Officer, also in charge of research, innovation and technology, because it is a conversation about AI, but it's also a conversation on how we change, of course, our usage of makeup. Barbara, thank you for joining us here on Bloomberg. Pleasure. Look, first of all, there's inflationary pressures. There's a lot of concern about what's changing in the world. Does it actually affect what consumers want to buy? What category has surprised you in the last 12 months?
Alors, let's say that you're right. There is inflation and the world is very turbulent, but this is this dopamine effect on beauty, or what's called the lipstick effect. The dynamic of the beauty market is very high, 3.5 to 4% this year. So it shows you how much it's dynamic despite inflation, because people want to take care of themselves, want to care themselves, to indulge themselves. So the market is very dynamic, and if I may, L'Oréal Group is beating this market. We are far ahead because Q1 we were at 6.7% growth. The dynamic of the market, to answer your question, it's dynamic in every category, from skincare, hair color, but the two ones that are the most dynamic, hair care and fragrances.
And has this changed? Because, I mean, you also have a lot of these big events and trends. One of them is GLP-1, which changes the way that people consume food. Does it also change the way that they take care of their skin and hair?
Absolutely. GLP-1 has an enormous impact on beauty. First of all, and we hear that a lot, on skin, because of sagging, because of less plump, because of skin quality. Number two, on hair, because of hair loss, because the hair has less vitality. And we did a lot of study. You have almost 2/3 of people under GLP-1 have this side effect. But something maybe you don't know, or the audience doesn't know, is that it has also an impact on fine fragrances. GLP-1 user, I suppose, because they are less eating sugar on the diet, etc., are looking for sweet fragrances, the cherry blooming, the flower blooming, the vanilla. So for us, GLP-1 is already a reality. We launched very recently in SkinCeutical branch, eye restructurer, precisely to replump the skin, or the Kills collagen shot plump, or at Redken brand, our hair growth booster. So you see, GLP-1 users are really so much downside when it comes to beauty, and here we are. So
it's actually changing tastes and the way that the beauty market and industry will sell in the future.
Absolutely, because today in the US, solely last year, you had 20% of the population under GLP-1, and it goes to 15%, if I'm not mistaken, to women. In UK, it's only 4%. In France, it's only 2%. It's a beginning. But the projection is really that maybe 20-25% of the entire humanity will be under GLP-1. So imagine for us how much our labs and our brands had to adapt to precisely target those plumpiness, vitality, hair abundance, and the new fragrances we will launch with Prada, Yves Saint Laurent, Mugler are precisely those sweet, blooming scent.
Bala, talk to me a little bit about tech. So we're here at Vivatech. I was looking at numbers. I think 30% of users use some kind of AI help to find the next project that they want to use. How does that change how you sell, but also some of the commercial partnerships?
It changed very much because we had the first revolution, which is e-commerce, the traditional one. But today, maybe my generation, I'm 58, are searching on the bar today. People are talking with their own agents, the famous LLM, and describe their needs, make pictures of their own skin, describe the temperature, and they will be surrounded by what's called the exposome, and then ask for precision advices. That this is the agentic commerce. So it changed radically the way you discover products, the way you engage with brands. So we have been engaging into this revolution like hell, and today at Vivatech, L'Oréal Group just announced its new partnership with OpenAI, fresh from the press, and with OpenAI, give you tangible example, concrete example. For example, with it's GPT, of course, GPT. For our brand Maybelline New York, we will provide the virtual try-on of all the makeup, where you can virtual try all type of shades and different texture directly in ChatGPT. When it comes to product discovery, we are working hand in hand with OpenAI to really boost this discovery. But more than that, because OpenAI is not only on this conversation with consumers, it's also about deep science, and we are also partnering with them on the microbiome science life.
So how much of your marketing spend will actually be diverted for some of these AI?
I mean, we shifted to this AI massively. As you do know, L'Oréal is the number 2 or number 3 advertiser on earth, whatever the category. And most of our today investments are dedicated both, let's say, to digital, the TikTok phenomenon, the alley of the world, but also to this AI shift. And at L'Oréal, we invested massively into this AI transformation. Just to give you one figure. Guess how much we did invest last year purely in tech and AI transformation? 1.5 billion euro, and we will repeat it this year. So you see, it's an incredible, massive shift of our 40 brands, and the entire company is also shifting.
I mean, there is a lot of, I guess, societal or morality concerns that actually it's also pushing an ideal of the feminine beauty, which is unattainable. How do you, as L'Oréal, look at that?
I thank you so much for this question, because L'Oréal, we are against this archetype, let's say I want to look like an archetype, etc. You know, that's the contrary, because now with those type of agents, with this type of different TikTok, it is the reverse. You have the full diversity of hair type, of skin tone, of culture of beauty that is emerging everywhere.
But do you have these difficult conversations with the AI companies?
We don't have this difficult conversation with the AI company, because the way we interact, first of all, we are the leader in beauty. They need us to know what beauty conversations are. As such, we need their LLM. You see, so we have more than a century knowledge on beauty rituals and beauty conversation. So the way we do partner with them is in pushing our core values. And L'Oréal core values, since its beginning, is to create the beauty that moves the world, the entire infinite diversity of the world. So it's not one skin type, one archetype, one skin tone, one hairstyle. We are pushing the immense variety to have everyone on Earth finding his own, let's say, ideal on social network.
Barbara, thank you so much for joining us. That was Barbara.
देखो क्रूड ऑयल में इतना ही मोमेंटम था, ऊपर एक एफईजी है, मोस्ट प्रॉब्ली इट इज नॉट गोइंग टू ब्रेक दिस इजीली. नीचे का सपोर्ट अगर ब्रेक होता है तो इट गोज टुवर्ड 6700. ठीक है, फॉरेक्स में भी ये रेजिस्टेंस के अराउंड ही, इस एफईजी के अराउंड ही है ऑलमोस्ट. crude drops below $80 a barrel. Wow. ठीक है, नेचुरल गैस भी देखोगे वही है। इंडियन मार्केट भी जैसा मैंने बताया था, रेंज ही बहुत छोटी है तो कुछ खास होने वाला नहीं है। एज एक्सपेक्टेड निफ्टी मॉर्निंग पे ओपन हुआ, गैप अप, थोड़ा बहुत सेलिंग आई, वापस ऊपर गया, वापस ओपनिंग प्राइस पर ही आ गया, तो न्यूट्रली बना हुआ है। विक्स बहुत डाउन है, इंडिया विक्स देखोगे स्टिल मॉर्निंग पे 13 के अराउंड चल रहा था, स्टिल होल्डिंग 13। लो बनाया है 12.40, स्टिल होल्डिंग दैट लेवल, बट बहुत कम है। 13-15 के नीचे है तो बहुत कम है। नो फेयर प्रीमियम कह सकते हो, फेयर है ही नहीं मार्केट में बिल्कुल भी, तो मार्केट बिल्कुल फ्रीली मूव कर रहा है करेंटली। स्पॉट एट 70 पॉइंट अप, फ्यूचर 56 पॉइंट अप, नो बिग मूव टिल नाउ। कोई अगर ये नीचे सपोर्ट ब्रेक कर देता है क्रूड ऑयल, तो फिर नेक्स्ट सपोर्ट नीचे रहेगा एमसीएक्स के अकॉर्डिंग 6600 के अकॉर्डिंग। फॉरेक्स में देखेंगे बिकॉज चार्ट थोड़ा सा अलग है फॉरेक्स का और एमसीएक्स का, तो ज़्यादा एक्सपेक्ट नहीं कर सकते बहुत बड़ा मूव होगा। बाकी अगर देखो प्राइस को ऊपर जाना है और क्रूड ऑयल को, तो एटलीस्ट इस एफईजी के ऊपर निकलना पड़ेगा तभी कुछ हो पाएगा। यहाँ पर देखो सेल मैं नहीं कर रहा हूँ, सेलिंग का ट्रेड नहीं लगाया बिकॉज नीचे सपोर्ट है। अब किसी एक साइड पे मार्केट ब्रेक कर दे उसके बाद ही प्लान करेंगे अप साइड ब्रेक करे या डाउन साइड, क्योंकि उसके बाद ही रेंज ओपन होगी, अदरवाइज मोस्ट प्रॉब्ली इसी रेंज पे रहना। ये नेचुरल गैस भी देखोगे फर्स्ट 15 मिनट की कैंडल के अंदर ही है, देखते हैं 12:30 के। इसमें सेलिंग का प्लान है तो सही, थोड़ा सा फॉरेक्स अलग चल रहा है, अदरवाइज इसमें भी प्लान करते हैं। डॉलर 99.500 कंटिन्यूसली स्ट्रॉन्ग। गोल्ड और सिल्वर को देखोगे आज इंट्राडे में, कल थोड़ा बहुत सेलिंग आ गई थी सिल्वर में, रिकवर किया, साइडवेज है, भी रिकवर किया, साइडवेज है। 4300, सिल्वर $70। Israeli finance minister says there are real disagreement right now between US and between Israel and the United States. Challenge is knowing how to manage this crisis while standing your ground. Israeli forces has carried out airstrike on server areas in South Lebanon, state media report, despite a peace deal in the Middle East. पहले ही आ गया नेचुरल गैस थोड़ा सा ऊपर, यहाँ पर रेजिस्टेंस था नहीं एक्चुअली में करंट लेवल पे, कांट सी एनी रेजिस्टेंस। मिनट में देखोगे न्यूयॉर्क मर्सल्टाइन्स एक्सचेंज में तो लेवल अभी भी रेजिस्टेंस का काफी दूर है, उससे पहले ही गिर गए।
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherrian in Seoul, and this is Bloomberg.
Today, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
Welcome back to the opening trade. 16 minutes past 8, so 16 minutes into our session, and we're pretty flat across European markets. Sorry, US futures still pointing higher. Here in Europe, under pressure, the auto space. So that's one end of the spectrum. On the other end, technology, retail, media doing a little bit better, going higher.
Let's talk about where we go next with UK assets. The next 24 hours is going to be hugely consequential. We've got a Bank of England rate decision, plus we've also got a by-election in the UK. Now, internationally, by-elections don't normally land as an area of importance, but this one really could. It's taking place in the northwest of England. It is in Makerfield. It is a northern town in England. The UK, remember, operates a winner-takes-all, first-past-the-post political system. And current polls suggest that what we are witnessing here is a big contest between Manchester Mayor Andy Burnham, who has basically got designs on becoming the Prime Minister of the UK if he wins this and ousting Starmer, and the Populist Party Reform UK, which is struggling at the moment maybe to coalesce its vote because it's facing an insurgency on its right from Restore in the UK. How does this all fit together? Where do we go from here? How important is this by-election going to be for global and UK assets? We're joined now by the Deputy Leader of Reform UK, Richard Tice. Good morning, Richard Tice. Right. It looks as if Andy Burnham is going to... OK. Let me ask a question. It looks as if Andy Burnham is going to win this. We operate a first-past-the-post system here in the UK, and the vote on the right is fragmented between you, Reform UK, and Restore. How do you deal with that?
Well, this is the most important by-election this century in the United Kingdom, and it's neck and neck between Mr. Burnham and the Reform candidate, Rob Kenyon. Forget Restore on the right, they'll get less than 4%. And whether or not Mr. Burnham wins, as I say, it'll be very, very close on the day. The consequences for UK politics are clear, and that is that cabinet ministers over the weekend will threaten to resign unless the Prime Minister sets out a timetable for his departure. And you will see other leadership contests emerge, although Mr. Burnham, if he wins, thinks that he can secure a coronation. There will be a contest. The two ministers who just resigned, the Secretary of State for Defence, John Healey, and one of his deputies, Al Khan's, I think they're going to put forward a leadership challenge as well. So all will change in the leadership of the Labour Party over the coming months. It's just a question of how many people go for it, how messy the contest is. And the big number to watch here tomorrow is the UK's net borrowing number after a disastrous number for April last month.
Okay. Richard, let's just return to the vote split question, if we may, for just a moment. In theory, it is, as you say, neck and neck. But it looks like the fragmented vote on the right, and you say it's 4% that Restore will get, some people put it as high as 7%, could deny your candidate the win here. And I'm wondering whether or not we should start thinking about this as being a scenario that could be represented more broadly across a series of seats in the UK. We now have an increasingly fragmented right. We are unlikely, therefore, to see a coalescing around a single candidate. Can we start to maybe question Reform's ability to win what we thought would be safe seats? This should be, in some way, a more safe seat for Reform than many others out there. If you struggle to win this, is there a message?
It's the opposite. This was a safe Labour seat. The fact that Reform are neck and neck shows the complete transformation and the toxicity of the Labour Party. Mr. Burnham has his own personal appeal. But look, the reality is voters vote tactically, and we believe that in a first-past-the-post system, we've led in the national polls for the last 300-plus national polls. On average, we're leading by 9 or 10%. And let's wait and see. But ultimately, if that is the difference, and you know, we still believe that we've got a cracking chance of winning. If that is the difference, it will reinforce to people just how damaging it would be for Restore to continue. So let's wait and see. You know, we're not afraid of competition. I'm a businessman. We believe in markets, sensibly regulated, of course. So look, that's fine. But there's lots of splitting of the left. Don't forget, there's the Green Party, who are polling almost the same as the Labour Party. So, you know, that's the nature of a fragmented political system now, which is also riven with sectarian politics for the first time in Great Britain.
Richard, nice to speak to you. Thank you very much for joining us this morning. It is nice to speak to you, but I wonder where Nigel Farage is right now. We're on the eve of a big by-election, as you say, really consequential, and you have a candidate in that race. And we haven't heard very much from Nigel Farage, and people are asking questions about whether this has anything to do with the fact there's an inquiry into that £5 million donation that he received. I mean, are other people from Reform, such as yourself and others on the shadow front bench, if you like, are they taking the limelight because he is ducking the limelight? Where is Nigel?
He's literally on his way to Makerfield as we speak. He's campaigning there today and tomorrow. He's leading from the front. And on the one hand, people complain. They say that it's a one-man band. It's only Nigel. So then Nigel spreads the load to the very highly qualified team, and then we get complaints that he's not around. I mean, we can't win, can we? Look, I just make the simple point. Nigel is crystal clear. We are a growing team. We're leading in all the national polls by 8-9 points as an average, some of them by 10. They go up and down a bit in the same way that indices go up and down a bit. But the reality is this is an economy led by a party that's making a terrible job. The borrowing numbers are out of control. There's no growth, and the country wants change.
Okay, so it's a team effort. That's the message you're giving. Now, you flagged the borrowing story a couple of times, and I want to ask you actually about fiscal rules in that context, because just this week we have heard a bit from you about fiscal rules, and you said the problem with them is that they can be fudged, you don't meet them, and so do they really have much credibility? I'm slightly paraphrasing there. But if that's your view, and probably there are others with that view, but what kind of fiscal rules would you then adopt?
The most critical thing is we've got to get the borrowing down. You can't have an economy that's flatlining like ours is, that keeps borrowing £140 billion a year with no growth, and think that's going to end well. It's not. It's a bit like remortgaging the house ever upwards, hoping the value goes ever up, and at some point the value flatlines and then turns and you get into negative equity. So the borrowing number is a key focus. We have to cut wasteful spending, of which there's vast amounts, tens and tens and tens of billions, cut daft regulation. That will then start to trigger some growth. Only then can you achieve what we call performance-related tax cuts, when we show we can cut spending, because that's what the markets want to know. And, yes, you've got the fiscal rules, but they never seem to be met, and they constantly get pushed out. And at some point, you have to say, stop spending a lot more than you're earning, start cutting spending, get some growth back into the UK economy.
Thank you very much, Richard. Thanks for joining us. Richard Tice, Deputy Leader of Reform UK. We will also be speaking to the leader of the UK Conservative Party, Kemi Badenoch. That's coming up later on the programme. You can catch that exclusive interview after 7 o'clock London time. Really interesting, then, that he is talking about how close it's going to be. I suppose maybe that's just an effort to get out the vote. That's the context around this. But yeah, working towards what will be, for international investors, a by-election with some importance, which is odd.
You don't normally talk about by-elections being important, but I think the context here is important to understand. The first-past-the-post system that we have, winner takes all. We obviously saw that in the last general election. The Labour Party's vote count was relatively low. It took a huge number of seats. What happens now in a much more fragmented situation is going to be really interesting. He was highlighting Burnham's appeal in this particular seat. But what happens more broadly if you get this much more fragmented story on the left and on the right? How easy is it going to be to call British politics, price in British politics, the turbulence that it could cause?
Yeah, Keir Starmer's currently at the G7, of course, and that's where his focus is, although back here in the UK we're talking about this domestic politics. AI will certainly be a big feature of the G7 today, and we're going to be talking a lot about technology in the next part of the programme, so we'll keep you briefed on that front. This is Bloomberg.
Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
This is the opening trade, 30 minutes then into today's session, and this is a pretty unchanged picture that we have on the overall markets, actually up by 0.1%, but not by much. So we're pretty flat here in Europe. US futures continue to point quite substantially higher, in particular NASDAQ futures, and we're waiting to hear, of course, from Kevin Walsh later on today. So that's the big set-piece event of the day, waiting for the Fed under a new chairmanship. The DAX is under pressure today, and that is, of course, very much to do with the auto sector. We've had a new steer on profitability from BMW. That seems to be weighing on the sector more broadly. The CAC aren't going nowhere very fast, and the same really of the FTSE 100, guys. So a lot of the action to the downside on autos, but overall the Stock 600 moves a little higher.
Yes. I have nothing to add in terms of providing fireworks. Look at what we are looking at here. 301 stocks up, 283 down. I think we're fairly balanced when it comes to the winners and the losers. Volume is pretty much average, so nothing again, therefore, to see there. Let's talk about maybe some of the single name stocks. We're getting a bit of fireworks there. MSC, this kind of giant container ship business, looking maybe to get even bigger. There's a story that maybe it's looking, or its owner is looking to acquire a stake in Hapag-Lloyd. That stock is up very nicely. Straumann, this is a dental implants company, up by nearly 10%. Also, One Group, we were talking about the kind of the flip side. This is the used car side of the auto story, and it is up very nicely in Germany, up by 8.5%. So a mixed picture there emerging on the auto sector, because this is what we have on the downside. BMW down very heavily, talking about cost cuts, talking about a downgraded outlook. That stock is off its lows, but still down by nearly 7%. The whole auto sector is under pressure. Well, actually not the whole auto sector. If you're looking at a used car, the situation maybe looks a little bit better. Mercedes is, though, down in sympathy to BMW. And I think it's a Berenberg downgrade that is knocking Zealand this morning. It is down by 4%, Anna.
Let's get an update then, Guy, on the latest on the geopolitical agenda. Iran is set to receive broad financial incentives as part of its agreement with the United States. We understand that will include the right to sell oil immediately, to tap a $300 billion development fund, and get eventual access to frozen assets. SpaceX jumped for a 3rd straight day on Tuesday, overtaking Amazon in value to become the 5th largest stock in the world. The gains in SpaceX shares are a sign of consistent investor demand, calming fears perhaps that the record IPO would be too large for the market to digest, and paving the way for potential public offerings from AI competitors. And Federal Reserve policymakers are expected to hold interest rates steady later today, posing an early test for the new Chairman Kevin Walsh as rising inflation erodes households' purchasing power, and President Donald Trump continues to press for lower borrowing costs. Guy.
Okay. Let's carry on our analysis of what is happening in these markets and get an assessment of what this morning's picture looks like. We are basically waiting for the Fed to arrive and to figure out exactly who Kevin Walsh is. Is he a dove? Is he a hawk? Does he believe in forward guidance? Does he not believe in forward guidance? What message are we going to get a little bit later on today? Let's try and answer that question. Markets Live strategist Scarlett Montgomery Koenig joins us around the table. Good morning.
Good morning. Yes, very exciting day.
It is. We're waiting for Walsh. What are we waiting for? What do we think we're waiting for? What will be a surprise today?
I mean, I think it's a relatively low bar for a surprise in terms of it's his first meeting. We have no idea kind of what side he's going to come out on in terms of we've had a shift on the Iran view and that we have lower energy prices now. So maybe he takes that as a signal to be more dovish. But we also know that AI is inflationary right now and that it's just consuming more commodities, and that's meaning infrastructure build, et cetera, contributing to inflation. So I think there are a lot of questions around what his messaging is going to be. My kind of base case is in line with orthodoxy. There's quite a lot of data still to come. We're seeing how these shocks work through the economy. So if I'm Kevin Warsh, I'd rather wait to see how that develops and take it a little easy my first meeting. I think it's also important to note that the SEP and dots come out this time. And so I'm kind of more thinking about how much the market looks towards that versus Warsh if you have a more divided Fed.
Yes, it'd be interesting, to see what happens to the dots. I wonder, thinking about AI and the role it plays, you could see a world where Kevin Warsh came out and said in the short term in the short term it might mean this, but I stick to my longer term view where it means something more deflationary. But then that might look a little bit like forward guidance, and then he's not supposed to like forward guidance. So how do we limit our expectations, I suppose, Skylar, with that in mind? I mean, we spoke to Hugh Gimber earlier, who said he possibly doesn't want to communicate much in terms of the outlook. Really?
Yeah, and I mean, then you have to take direction from the SEP and dots. What I will say is you could have a forward view that inflation will eventually come down because of AI and the productivity booms, but they need to deal with the data right now, right? We've had a very dovish Fed for years now where they've had more easing in their policy bias despite inflation being above target for years. And that was okay when inflation was trending sideways, but it's rising now. And CPI, yes, the last print was a little bit more encouraging from a core perspective, but it's still more than twice the target. And so I think the market's shifted in reaction to that data, and because the data leads what central banks are doing at this point, because we don't know how supply shocks eventually feed through over time, that's going to continue to lead, and it's a relatively low bar for the Fed to be hawkish, and I think they just need to leave the door open for tightening.
How volatile do you think UK assets are going to be over the next 24 hours?
This is the big question. I'm actually relatively positive on the pound. I think the market's, kind of tired of hearing about political noise. It's been a really long time that it's like, Starmer's going to go out of power. We're going to get someone that has more fiscal ease bias. I think if Burnham doesn't win, yes, that's kind of more negative for a long-term outlook, but Labour is not going to call an election before 2029, right, with polling so poor. If he does win, what we saw at the last election when Burnham odds were rising was your GBP spiked up, and then it came down because he sustained this idea that you're going to have deficit improvement or at least some kind of fiscal tightening in the bias. And I think that's because the market has kind of shaped the way Labour does policy now from a fiscal perspective, and that's still there in the background. So I think it's very hard to see a lot of fiscal slippage from the Labour Party. And so, yes, it's a day risk, but further out, you're not having a huge fiscal change. And I think, too, for the pound, you have to keep in mind that it has one of the highest carries in G10. It's one of the only kind of risk-positive currencies that isn't highly correlated to commodities with oil prices coming down. And there is a premium built in from a political perspective.
And for the gilt markets then, Skylar, I mean, the fiscal rules, obviously they're written by politicians. They can be ripped up by politicians and changed. But the gilt market does seem to attach some importance to them, or at least they like some fiscal discipline by some form, in some format. We spoke to Richard Tice, who, of course, is from the Reform Party earlier on, and he just this week, he's been talking about the weaknesses, which are much discussed around having fiscal rules, that they can be fudged, people don't meet them, and then you wonder whether they have much credibility. And he says, really what matters is just getting borrowing down. Is that still a preoccupation, then, for gilt markets? What do you think gilt markets are watching in all of this political chaos?
Yeah, I mean, absolutely. I think the UK gilt market in particular is very vulnerable to fiscal slippage. We still have this kind of scarring from the Liz Truss crisis. And I think part of that, too, is you've got a greater hedge fund participation in the market. And so flows can move quite quickly. But maybe the more concerning thing is the inflation perspective. That's really the focus now. We had UK inflation data this morning. The headline number was encouraging in that it was below consensus estimates. It was a flat reading. I think more worrying is services inflation. Yes, it came down down in the last print we had, but it rose further than market expectations. And the Bank of England's very sensitive to this services inflation. And inflation is more worrying for gilts than other markets because there's such a high share of inflation-linked debt. So as we head into the Bank of England meeting, I think the worry is that you're going to get some members voting for hikes. And that's kind of the preoccupation now, particularly for the long end, rather than the kind of fiscal slippage, which I think has gone more to the background as you've had political members reinforce it.
Okay, well, thank you very much, Skylar. Skylar Montgomery coming from Bloomberg Markets Live. And we'll stick with the UK theme because over at the G7, Keir Starmer, the UK Prime Minister, has been talking to the media, and he is saying that he will fight any contest to oust him as Prime Minister. We've heard that before, but it's interesting that he is still saying that. And he's saying, I want Andy Burnham to play a role in the UK government. So if I suppose if Andy Burnham does not become leader, that is Keir Starmer's view of things he would like to offer.
I think this is really interesting because basically what he is saying is I'm going to fight. And I'm going to fight. This is my manifesto, and I'm going to fight for what I believe in. And if Burnham defeats him, then in theory Burnham... It pushes Burnham towards the idea of a general election, I think, because he can't say, I'm just a continuation candidate from the Starmer manifesto. I'm coming in with something new because we've had this kind of contested story in the Labour Party. And then you come back to the question of what Tice was talking about, and this vote fragmentation becomes even harder to call what happens in all those other kind of constituencies where Labour maybe wins because because the vote split is split on the right.
Which is a good reason why we might not end up in an election situation.
Well, no, I think it would make the Labour Party more willing. If you do see the splits on the right, it would make the Labour Party, would make Burnham more willing to call a general election because he will go, we've got a split on the right. In the first part of the post system, therefore, we can maybe win more seats, and maybe I do call a general election.
OK, a lot of moving parts then, lots to watch on the UK politics. In the meantime, Keir Starmer is still the Prime Minister, and he is at the G7 over in France, of course. We're looking at live pictures. Ursula von der Leyen gathered with other leaders from the IMF and from Germany there, I can see, and they are getting ready for their day, essentially. We've seen some of the leaders speaking to the media already. For more, let's bring in our Chief Europe correspondent, Oliver Crook, who's at that G7 event. He's in Evian in France. Iran was still a big topic of conversation during yesterday's developments at the G7 then. Ollie, we heard President Trump certainly talking about it, and a lot more has emerged in the past 24 hours about exactly what it is the US and Iran are going to sign up to in this MOU.
Yeah, absolutely. And I mean, we're all sort of waiting for that MOU, and I think a lot of the leaders were waiting for that MOU over the last couple of days. And I think that before it sort of made it out to the media, it was presented to a number of the G7 leaders. They got to take a look at it and sort of give their analysis. And of course, they've been spending the last 2 days with President Trump, impressing him in terms of what the substance of this MOU is going to be. And actually, of course, the role that the other G7 countries and, of course, the other partners, the Qataris, the Emiratis, the Egyptians, for example, attended this meeting and held meetings with the G7, what their roles will be going forward. Of course, the European role, particularly on the military side of things, trying to demine the Strait of Hormuz, reiterated yet again that that is something that they'd be interested in doing. The United States has signaled that they could actually use that help. But the problem is that these demining ships, it's a big concern for the Europeans. They're not basically appropriate for any kind of wartime activity. This is really a peace effort of demining the seas, and that is something that they need to have those guarantees of in order to begin with that. There is, of course, this other segment of this Iran deal, which has everything to do with sanctions and financial incentives. If Donald Trump wants to get the G7 on side with that, they're going to have to be part of those very sort of active discussions. And of course, the first deal, the JCPOA, the EU and many of these countries were directly involved in sort of that architecture. And of course, they have their own sanction regime. So if they want to now bring the Europeans into that, that is going to be a more extended conversation for the days and weeks to come. But that was really the geopolitical day yesterday, focusing on Iran and the Middle East and, of course, also Ukraine.
OK, so what was the takeaway on Ukraine? Progress made?
I think so. I mean, I think that Zelensky can walk away and say, you know, he got something fairly positive from the president of the United States. I mean, Trump said very explicitly that he's sort of ready to re-engage on the Russia-Ukraine question. You'll remember that they, you know, obviously Trump said he was going to end the war in 24 hours when he was campaigning in the election. There was this concerted, really hard push, these meetings between Trump and Putin and Zelensky, of course, and that, of course, didn't lead to very much. And then basically the United States withdrew from the process. They've been distracted by the war in Iran. Iran. Now that Trump says the war in Iran is in the rearview mirror, they're ready to re-engage. And it sounds like they're ready to re-implement those oil sanctions on Russia. Many of those were paused in order to ease the oil glut that we've had as a consequence of the war in Iran. And of course, Trump yesterday said that he'll do everything he can to basically bring the war to a close. But we should say that the first half of the Trump presidency, the focus was really, as far as the Ukrainians and the Europeans were concerned, helping the Russian side of things, because what he kept saying to Zelensky is you have no cards. Zelensky's acquired a few cards over the last few months. He's gained initiative on the battlefield. He's got that 90 billion euro loan from the Europeans. So going forward, it's about trying to get the United States on side and actually saying, you know what, we're in a much better position right now. We have this money backing. Now we need some military hardware and we need some goodwill from the United States.
I know that technology is on the agenda for today, a little bit later on in the day, perhaps, then, Ollie. Tech sovereignty, certainly something we've discussed around the AI theme running up to this G7. I wonder if that will get much of a mention as we see AI leaders from the United States gathering with G7 leaders and perhaps with a wider group as well. I can see that it's not just G7 leaders in attendance right now. They have invited friends.
Yes, indeed. So yesterday was geopolitics. Today is all about the economy. The session that's going to be kicking off this morning brings in the IMF and the OECD, and we'll actually speak to the Secretary General of the OECD right after that meeting to get his appraisal. And they'll really be assessing the economic impact, obviously, of the war and now of the ceasefire and potentially the end of the war. What is that going to do to global growth? What is that going to do to inflation? We'll maybe get some clarity from those discussions from the Secretary General a little bit later. But of course, the main event I think that many people are watching are the AI CEOs from the United States, from Europe, all assembling for that working lunch with G7 leaders, the CEO of Anthropic, of OpenAI, and of course some of the leadership over at Google, Mistral from here in France, and really trying to get the global conversation going on AI. I mean, of course, everybody on the planet is talking about AI, but there is not a sort of collective conversation about regulating AI, the sort of cooperation among nations. And of course, over the weekend, we've had the United States coming in and basically banning foreign nationals from using some of the more experimental models from Anthropic. You know, you're seeing that AI nationalism. So for the Europeans, they're going to want to be a part of the sort of inner bubble, the inner circle for American tech and being able to gain access to those models. So that'll certainly be on the agenda. It'll be interesting to see if you get a sort of joint statement potentially from the AI CEOs across the globe, bringing the Europeans in as well. But of course, as you've been talking about all morning, for the Europeans, the main focus here is, I mean, the valuations of these companies in Europe are all basically below $25 billion. And we're talking about IPOing Anthropic and OpenAI at about $1 trillion a bit later this year. That's going to be the main focus, trying to gain some traction, some sovereignty, and some initiative and some capital, of course, here in Europe.
Oliver, we'll continue the coverage. Thank you very much indeed for this morning's work. Our chief Europe correspondent in Evian, France. Much more on this story is coming up. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Today, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Welcome back. This is the opening trade, 8:49 here in London. So we are 49 minutes into a session that hasn't taught us a huge amount about appetite for European stocks. We're up by 0.1% on the stock 600. The German market certainly underperforms then, Guy. And that's really an auto story. It's interesting in this context. We've seen Barclays upgrading their view on European stocks. Hugh Gimber was quite positive with his view on European stocks and the opportunities that Europe offers now with the maybe Iran war in the rearview mirror. So interesting to see that we're making very modest gains with that as
that trade is not on yet, is it?
Yeah.
Certainly, that doesn't feel like it is on. What has been on, interestingly enough, has basically been the tech trade. So you would have thought you'd see a broadening out. You'd see the areas like we were talking about earlier, chemicals, energy, kind of some of the spaces that you would expect to benefit.
And Nasdaq futures are up. 0.8.
And they got hits towards the back end of yesterday's session, so maybe there's a little bit of a bounce going through there. But nevertheless, it's been the easy trade, which has been to go back to what the tech trade was at the beginning of this year, which seems to be driving that story. Which takes us very neatly and nicely to what is happening in Paris right now. The Viva Tech conference is underway. The reason why Tom is not here today is because he is there and joins us now. So, Mr. McKenzie, what is the vibe there? Europe obviously is struggling to gain traction when it comes to the tech trade. Is there evidence at this event, the conversations that you're having, that actually headway is beginning to be made? We heard about tech sovereignty down in Evian. What's the picture in Paris?
I think there's evidence, absolutely, that there is traction now in Europe. You've got 180,000 people visiting this event. It's billed as the biggest startup and tech event in Europe. You've got about 14,000 startups north of that. You've got the fact that Jeff Bezos is going to be taking to the stage in a couple of hours here, and that suggests that if he's interested in what's going on in Europe, then there is traction here. But I think the overriding concern right now, and certainly we got this from Maurice Levy, who's the founder of Viva Tech and, of course, the chairman emeritus of Publicis, is the concerns now that the US has the potential to cut Europe off from frontier models. The export controls around Anthropic. And Maurice Levy is saying it would be a bit like having electricity and the US having the power to cut that electricity off to Europe. He says this has been taken very badly here in Europe amongst European leaders. And it really is another, we talk about wake-up calls for Europe a lot. This is another wake-up call. We have the dependency on energy, we have the dependency in Europe on defense, and now a moment where we're showing there is a dependency on frontier, at least frontier AI. So how Europe responds to that is going to be a key question I think there's other paradigms, other shifts, other focuses in terms of how to build out alternative AI. We're going to be talking to leaders around world models, for example. Can Europe play a stake there? We're going to be speaking to the European Commission Vice President to see what the response is in terms of the sovereign play. To what extent should the stack on AI be owned by Europe? What is realistic? All of those questions are percolating here, but absolutely that decision to put in export controls around Anthropic has sent shockwaves through the European tech space, and how Europe responds to that is going to be front and centre.
It will, and it'll be interesting to see how it comes up in conversation as they pivot to talking about technology in Evian in France at the G7. Tom, thank you very much. Tom McKenzie, of course, at the VivaTech conference. And he and the team will be bringing us many more conversations from VivaTech. We'll be speaking to the French ambassador for digital affairs and AI. Plus, ASML's CEO, Christophe Fouquet, will also be speaking to the team on the ground there at VivaTech.
But Europe must be looking to the other side of the Atlantic, looking at what is happening in terms of the valuation story around the IPOs that we're getting. SpaceX in particular, just amazing over the last 3 days. Jumping for a third straight day yesterday, overtaking Amazon in value to become, get this, the 5th largest stock in the world. It IPO'd Friday. Shares closed 4.8% higher, pushing its market cap to $2.65 trillion, roughly $8 billion higher than Amazon's. We're joined by Neil Campling now, Bloomberg's senior strategist, to talk about all of these things. Somebody put out a note earlier on, which I thought was kind of about right. If I value a brick in my house at £1, does that mean I can then extrapolate that brick into all the other bricks that build my house to get you to an overall valuation? The free float on SpaceX is so small at the moment that I think the market's really struggling to deal with the demand picture that we are seeing. And I'm just wondering if we should be making that leap from kind of valuing one brick to valuing the entire house. So if there were more
bricks, they'd be worth less.
Well, I think I saw something similar this morning that was comparing the revenue pile of SpaceX today having a smaller revenue number in absolute terms than Reckitt Benckiser that makes toilet cleaner. So perhaps every bottle of bleach that we have, to your brick analogy, therefore means maybe Reckitt should be bigger than SpaceX. I know it's a bit of a stretch maybe, but in terms of clearly there's the options market, as you called out yesterday, started trading yesterday. Quite rather concerning. Some of these triple levered funds were at one point were up 60% intraday. And then look at the options market themselves when they started trading. We noticed that the 5th most active, I think, call option was out there, was one expiring tomorrow. 300 call, so buying the stock at 300. Another, the 8th most popular, was a $380 call compared to the $200 close. So that's a big short-term bet that we're going to see significant acceleration, which kind of suggests it's more of a bet. Right. Very much a retail trade than anything else.
And just briefly, Neil, I mean, this is a business that is now minting other billionaires. We saw them buying Cursor just yesterday. It's a very busy business, isn't it? For, you just listed your enormous enterprise, and now you bought this AI coding startup for a mere $60 billion.
A mere $60 billion, but Cursor itself, we have to remind ourselves that Anthropic, and I know there's lots of sovereignty issues around the AI stack, but Anthropic's revenue run rate is 20x greater than Cursor. Cursor is a startup. Today I was looking at the capex forecast. You mentioned overtaking Amazon's market cap. Amazon's going to spend more than 4x on the hyperscaler capex next year compared to all of SpaceX across all 3 divisions.
Neil, staggering thoughts as ever. Neil Campling, thank you very much for joining us for the latest on SpaceX and the tech landscape. No doubt that will continue to be a feature over the G7. More on that on the Pulse. That's it for the opening trade. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here at Viva Tech in Paris, and these are our top stories. Bloomberg learns that Iran is being offered a range of financial incentives as part of its agreement with the U.S., which is set to be signed in Switzerland on Friday. The Fed is expected to hold steady in its first policy decision under Kevin Warsh, but the Iran deal clouds the path ahead. Plus, SpaceX overtakes Amazon to become the fifth largest stock in the world, and Elon Musk's wealth climbs to more than $1.3 trillion. So there is quite a lot going on. There's a lot, of course, in geopolitics. We always look at, of course, not only the price of Brent, but also what's going on with WTI in the U.S. Now, U.S. stock futures, bonds climbing, oil falling further. Again, investors really awaiting the Federal Reserve's policy decision for any fresh clues on the outlook for global interest rates. I'm also looking at NASDAQ futures are actually gaining some 0.8%. S&P futures gaining 0.3%. Let's also look at the European markets map. Now, this is a picture across the board for the CAC, the FTSE, and elsewhere. Also, the DAX, a little bit of a mixed bag. We did have some inflation numbers in the UK that were surprisingly not bad, is maybe how I would describe them. And we're seeing the FTSE down a bit with the DAX, but actually the CAC gaining a touch. Well, we'll have plenty more throughout the day. Good morning, everyone, and welcome to The Pulse, live from Viva Tech here in Paris. Now, the conference is billed as Europe's largest event connecting startups, investors, and of course, tech leaders. This year's speakers include Jeff Bezos, the founder of Amazon, Christophe Fouquet, the chief executive of ASML, and even Bernard Arnault, the chief executive of LVMH. Now, the French President Emmanuel Macron will also be speaking here tomorrow. Then elsewhere in France, AI and tech high on the agenda at the G7 summit in Evian. Will be live there very shortly. But our first story, let's start with the latest on the U.S.-Iran deal. Now, Bloomberg understands that Iran is set to receive broad financial incentives as part of its agreement with the U.S. A draft of the deal seen by Bloomberg shows that Tehran will get the right to immediately sell oil, tap a $300 billion development fund, and eventually access its frozen assets. Now, President Trump made clear that he saw as the main win from the agreement.
Here's what it says. Iran will never have a nuclear weapon. That's what it says. It won't have one to buy, to develop. They will not have a nuclear weapon. And I would say that's about 99.9% of what I wanted, because we couldn't let that happen. You couldn't let that happen. And they won't have a nuclear weapon. Now, in addition to that, the Strait is going to be open toll-free.
Well, let's bring in our Abir Abu Omar in Dubai. Abir, good morning. So based on what we know on the terms of the deal, which side stands to gain the most?
Good morning, Francine. So look, you said it in your intro, all the financial incentives that Iran is getting seemingly out of this draft that Bloomberg was able to see. We still have to await, of course, the official signing ceremony that will take place later this week at the sidelines of the G7. But from what we know so far, what we can understand from this MOU, the 14 provisions in it, is that some of the financial concessions that Iran will get include a $300 billion at least of economic aid that it will help Iran rebuild after the massive economic damages that it has suffered out of this war. Other incentives include unlocking the blocked assets that Iran has been asking for since the start of this war and lifting the oil sanctions. Now, these are some big concessions delivered by the United States to Iran. For the United States, what it is set to gain out of this is the reopening of the Strait of Hormuz, which was open before this war started, and then it will stop Iran from attaining a nuclear weapon. Now, it's important to note here that Iran had always maintained that it wasn't seeking developing a nuclear weapon and that it uses its uranium for civil purposes. Now, you heard President Trump and what he said, Iran will never get a nuclear weapon. And the extension of the ceasefire over the next 60 days, Francine, will be mainly targeted towards this goal to get a negotiation going for the Iranian nuclear program. Still a lot of details there, not clear, so we'll have to wait and see what the official document actually says and what both sides will agree on by the end of this week.
Abir, I had a pretty great conversation yesterday with Jeff Curry that says, look, even if there's a deal, this is not going to reopen quickly. So how quickly are analysts saying that the Strait of Hormuz can reopen?
Well, just like Jeff, a lot of the analysts are saying this could take weeks, if not months, essentially, for traffic in the Strait of Hormuz to go back to pre-war levels. Now, we're seeing some trickling movement, if I were to say trickling, in the Strait of Hormuz. We're seeing, for example, Qatar ships making their way back to the Strait of Hormuz. Now, ships and tankers are still very weary of what the situation looks like, what we know about the mining situation. For example, in the Strait of Hormuz, we heard the latest from Italy's Giorgia Meloni, who said that Italy is not going to take an active part in the demining process unless hostilities against Lebanon stop by the Israeli side. But what we're seeing right now is still the movement in the waterway is not what it was compared to levels seen before the war. And then you have a lot of European officials at the sidelines of the G7 really questioning just how immediate the impact is going to be once the Strait of Hormuz is opened, as immediately as Friday, according to President Trump. So it's wait and see for the time being about the movement of those ships, but definitely good news for the oil market and for Brent prices that are falling below $80 at this point, Francine.
Abir, thanks so much. Abir Abu Omar there from Dubai. Now, G7 leaders have voiced their support for the deal with France and Germany, saying they're ready to help clear mines from the Strait of Hormuz. So let's get more from Oliver Crook, our Chief Europe correspondent. Ollie, good morning. So how are leaders responding to the U.S.-Iran 14-point draft memorandum aimed at really ending this war with Iran?
Yeah, I think it's a relief for everybody here at the G7 leaders meeting. It's just not just the G7 leaders meeting, of course. There's also the IMF here and the OECD, the economic session, which is underway now this morning. That'll be really sort of helpful, I think, in appraising what the economic impact will be of this ceasefire, this potential peace deal, what the impact is going to be on global inflation, on global growth. But yesterday was really the geopolitical day, the day that was really focused on the Middle East and on Ukraine. We had, of course, the leaders of Qatar, the UAE, and Egypt here also present at Evian France, holding those meetings with President Trump and other G7 leaders. And I think for most of them, listen, they may think that this is an imperfect deal. They may not be entirely clear what the sort of long-term plan is here, but it seems to show that there is goodwill on both sides, the Americans and the Iranians, to basically end the war, the kinetic part of this war. And now the Europeans can try to find what their place will be within it. As you were hearing there from Abir, there's been a lot of conversations at the European side about taking an active effort in the demining of the Strait of Hormuz. We've gotten signals from the U.S. side that has helped, that they would be willing to sort of embrace from the Europeans. But for the Europeans, in order to be active in that sort of scenario, demining is only a peacetime activity. It cannot happen basically when there is any risk of warfare. So for the Europeans, it's going to be very important that this war is effectively concluded and that there's not really any risk there. There is, of course, the other side of this, because this 14-point plan has a lot of stipulations about sanctions, about financial incentives. You'll remember the JCPOA, that was struck with the consent and with the Europeans as part of that architecture. They are not part of those discussions right now. So if you want to enlist the Europeans to help create financial incentives for Iran, that is going to be a longer process in terms of discussions for the coming weeks and months.
The AI executives are also planning to attend the summit today. So what can we actually expect there?
Yeah, that's right, Francine. I think everybody, yourself and myself, will be focused very much on the AI trade today, and very much so for the G7 leaders who have this working lunch with the CEO of a number of different of the American tech giants. You have the CEO of OpenAI, Sam Altman, will be here. There will be leadership from Google's AI division, as well as the CEO of Anthropic. And really, obviously, everybody around the world, Francine, is talking about AI, but there is not a sort of a single coherent AI global conversation. I think this is an effort by Emmanuel Macron to try to bring all of these leaders together, trying to get more connected, try to get more of an interconnected framework of how to deal of AI, both to unlock its potential, but also to deal with its risk profile. I think also for the Europeans, they're going to be very aware of the fact that in any conversation of AI, you can't even really call them a partner or junior partner. They are basically nothing compared to the United States and indeed China. You look at the valuations of companies here in Europe, they don't basically break $25 billion, and you're talking about IPOs later this year from OpenAI and Anthropic that approach $1 trillion. We've also had over the weekend all of these reports that the United States is cutting down or clamping down on Anthropic, basically giving access to its models to foreigners. I think that the Europeans would like to see a wider circle be drawn around that American tech empire, and that the Europeans could be within that. So that'll be part of the global conversation for that working lunch, which is going to kick off over the next couple of minutes and a couple hours later today.
Ollie, thanks so much. Oliver Crook there, Bloomberg's Chief Europe Correspondent. Now, we'll have plenty more, of course, from the G7, Evian France. Ollie will also be speaking to Matthias Cormann, Secretary General of the OECD, at 10:40 a.m. UK time. Now, artificial intelligence set to take center stage at Viva Tech. Of course, it's getting underway in Paris today. So we have the billionaires in Evian. We have the entrepreneurs here in Paris. SpaceX has overtaken Amazon in value to become the 5th largest stock in the world. Chief Executive Elon Musk, nearly a third of the way to his second trillion. It's up again in pre-market trading. So our Tom McKenzie joins us now. Tom, look, I mean, SpaceX is really something that we're spending quite a lot of time on. There's SpaceX and Anthropic. SpaceX just keeps on rising.
Yeah, in this incredible moment, really, for Viva Tech, when we look at what's happening with SpaceX, because it's a reminder of the huge gulf that exists when it comes to capital, when it comes to innovation around AI and tech, and arguably, and some may push back on this, ambition as well. And you see that from Elon Musk. Now, Europe has plenty of ambition, but it certainly has a shortage of capital. And we heard that from Maurice Levy, who, of course, is the founder of Viva Tech earlier. And on the Anthropic story, this is a reminder, and then Maurice Levy describing this as a shockwave, really, for Europe. The idea that the US could potentially cut off European companies from this technology, he said, would be a bit like the US having a switch to cut off electricity to Europe. And the fact that that is another wake-up call for a European nation that's already, of course, dependent when it comes to energy on other suppliers, and when it comes to defence, largely on the US. So that Anthropic moment is really key, and I think it's going to be a key part of the conversations here, which is how does Europe respond to that? How does it own more of the AI stack so that it's not dependent on decisions in Washington, Beijing, or elsewhere?
But, Tom, so I've been told this started 15, 20 years ago, that actually the U.S. laid the foundation of this interdependency that now brings up sovereignty and things like that for Europe. And Europe actually can't play catch-up. I mean, they can get guardrails, but they can't really play catch-up with either the hyperscalers or the big three.
Just in terms of capital, I mean, the idea that you've got about eight companies in the U.S. that are worth about 1.5 times the entire stock 600 in Europe. They're worth about 24 trillion US dollars. 24 trillion US dollars, 8 companies versus about 15 trillion thereabouts for the European stock 600. So yes, there is a massive gap. To your point, Morris Levy, again quoting him, says, "Look, we are a fragmented market. We need to consolidate." I know you've talked to him about this as well. That is key. You need to consolidate to get that capital going. Europe has the talent, and it's building real companies that can provide solutions, companies like Mistral. But again, in terms of the valuation of that company compared to its US counterparts, it's not close. It's not at the frontier. But Mistral is working with companies and embedding with them because it offers that sovereign solution. And it may not be at the frontier, but it has AI optionality that is still very powerful.
Yeah, but would this be an integration of the systems rather than actually selling the Ferrari?
An integration of the systems, US and Europe. I mean, Europe can play. There's one argument, which is Europe can't be, tell me this how you define sovereign. It can't be fully sovereign. It can't own the full AI stack. Clearly, data centers, chips, the energy piece, the frontier models, but it can own parts of the bottlenecks. And if it owns parts of the bottlenecks, then it can sit at the table and it can have some leverage. And that's why there is a focus on alternative approaches to AI. The kind of measures being put in place by Jan LeCun, formerly of Meta, world models. Can Europe play a place when it have skin in the game when it comes to those different approaches to AI and world models? The industrial base, the robotic strength that Europe has, embedding AI and world models into that, is that an area where Europe can have some strength as well? But there is an argument as well that, and you're seeing that in terms of the numbers, Europe's not building enough data centers, doesn't have enough compute capacity. That is also something that Europe's going to have to address as well. So whether or not they can hold some of the bottlenecks and have a seat at the table, I think is going to be part of the conversation here at VivaTech.
Tom, thanks so much. Tom McKenzie there with very latest, of course, on VivaTech. And we'll also, we have some fun stuff lined up for you. Now, coming up, we'll be joined by Tanuja Randeri from Amazon Web Services. We'll discuss how European companies can make the most of AI. That's coming up next. And this is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Today, the Fed decides.
America's future will truly be unlimited with Kevin at the helm.
To fulfill this mission, I will lead a reform-oriented Federal Reserve.
If the Fed chair chooses not to speak, you're basically outsourcing forward guidance to everyone else.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis.
What is the worst Fed's response mechanism to inflation?
And what does it mean for the dynamics of the American fixed income market?
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, European companies' margins are set to expand for the first time since 2022, driven in part by artificial intelligence as more and more companies adopt AI. Now, the EU is also aiming to boost tech sovereignty on the continent, encouraging the use of local products over foreign alternatives. Well, let's discuss all of this. Let's discuss Europe's AI ambitions with Tanuja Randeri, Vice President and EMEA Managing Director of Amazon Web Services. Tanuja, thanks so much for joining us. Look, there's a lot going on. I know there's a lot of soul searching if you're a European executive right now looking at AI into what comes next. What do you think chief executives in Europe now need to think about that maybe we weren't talking about only 6 months ago?
That's a great question, by the way, and it's wonderful to be together with you at Vivatech. Look, I think what's wonderful to see is European adoption has hit a tipping point. So we finally crossed over the 50% mark, which is great. Yeah. But what we also see is there's two kinds of users. You've got users who are using this AI technology, which is transformative, to do some basic email, summarization, chatbots. Then you've got the advanced users who are using them in their processes, take claims processing or predictive maintenance in the factories. When you're embedding AI into the core of what you do, you're getting significant more productivity. I mean, the difference is stark. It could be 40% or 60%. And that advanced usage is what I would encourage European CEOs to think about.
Tanuja, at what cost? So we speak to a lot of, the banks. I mean, if you call them digital tokens. I mean, in certain cases, we've reported that, for example, an employee spends more in digital tokens than their own annual salary. So is this now the time to play around with it because then companies will cap?
Yeah, it's again a very good question. And by the way, it's true. I mean, token consumption is increasing. We see that. I think the way you think about this is when you've got a very clear AI governance and strategy, and you know that there's three things that are going to make EBITDA better or your growth better or your innovation better, and you throw your resources behind that rather than filtering it all over the place, then I think you get a great return on your investment. On top of that, I will tell you, it's not just about the AI or the generative AI technology. You've got to get your cloud foundations. Right. I'm obviously biased to some extent, but having that cloud foundation in place means you can scale at lower cost. Yeah. Then having your data modernized and available, then you can layer on the generative AI. And I think if you've got the full stack, and that's what we've been very focused on, you can drive great innovation at lower cost. I'm confident about that.
I mean, do you have difficult conversations with chief executives or even heads of state that say, look, I'm worried about a kill switch, that if tomorrow the U.S. asks Amazon Web Services to no longer provide or service or give, that you'll have to comply?
There's clearly a lot of conversation around sovereignty, as you know, in Europe in particular, but not only. And look, I think we've been hearing this for some time, right? And responding to it actually extraordinarily, because sovereignty means different things to different people. True. Some people think of it as residency of data. Some people think of it as security of data. All of that is really, really important, actually. We've been operating in Europe now since 2007. It started like a little region in Dublin, and now we're 13 regions. I mean, Francine, we're talking about over 300 billion euros of investment. We have 200,000 employees here. We support 1.5 million jobs. And so the way I think about it with my customers is, look, the most important thing is your data is your data. You're the only ones who can access your data, move your data, lose your data. I mean, the keys protect that. And the way we built our systems, we put technical safeguards. So I can't access your data. Only you can. And I think when people understand that, they suddenly realize that it is the technical safeguard that gives them the biggest security, and not, sort of the rhetoric in public.
Tanuja, give me a sense. I mean, one of the other conversations that we're trying to have is actually, what do you think is a position of AI in Europe? So not using it, not becoming more productive, but actually making it, because there are a couple of bright spots, but they can't really catch up to the US one. So is it a different, proposition in the value chain?
Yeah, it's a really good question. Look, I think Europe has incredible talent, universities, research institutions, and some really great champions. I mean, look at Mistral right here in France, like we're sitting here, or look at Synthesia or Lovable. Yeah. But I think there's three things we as Europeans, government, policymakers have to worry about. One is we really need to make the regulatory environment innovation friendly. So what I hear from the startups who are the fuel of the economy, they say it's too costly. 40 cents of every pound, euro they spend goes towards compliance. Yeah. Imagine if you could reinvest them. Yeah. The second thing they say is there's no unified regulation. It's multiple markets, multiple regulations. Yeah. So I think we got to continue to regulate, but make sure it's innovation friendly. The second big thing is skills. There's that's one of our biggest problems here. Not having enough digital skills means...
And why? Is it a university problem? Is it a school problem? I think
it goes back to starting at the unis, but also, if you think about it, our education systems are great, but AI is just something new, and so we've all got to adapt around it. So I think ensuring that we are skilling in universities differently, and we're investing a lot, by the way, in AI education at university level, but then reskilling. I mean, you and I need to learn how to work differently in our jobs. And so I think really putting power behind that in Europe will make a big difference, because over half of companies say they can't find the skills, by the way. And then I think the third thing I would tell you that's really important is for public sector in Europe to be really leaning in to be the role models of using this technology, because it creates a domino impact. So I think those are some of the things, but I think Europe, with our manufacturing companies, with our service organizations, we can lead on what I call inferencing. So it's not just about the model. There will be one or two or three big models. It's how you use the model.
And integrate it.
Exactly. What do you do with your processes? Do you reinvent your processes? If you're in insurance, you can't just automate. You need to completely rethink your insurance sector.
Yeah, and you adapt. You said we'll work differently. Are we going to work less?
Are we going to work less? You know what I think we're going to do? I think we're going to do more deep work. All of that basic things. Think how much research you probably do, right? I do. The basic stuff that we spend a lot of time on, which is grueling, is going to get done by AI. I today wake up in the morning, I have Amazon Quick on my desktop. It's read my emails, it's done my summaries, it's done all that. But I have more time to do deep work. Strategic thinking about how we in Europe are going to unlock the innovation we need to make Europe incredibly competitive.
But so it changes you as a leader. I guess your function is deeper, but is it also one of morale boosting of employees? I mean, do you have to become a cheerleader or an enforcer?
Look, whatever. I think as a leader in today's age, with so much change coming at us, some of the core things you do in leadership during change is in fact that. Spend more time with your customers. Understand what it is that they really want to do differently. In Amazon, we call it the why quotient. Spend more time with your teams. There is anxiety about this technology. I mean, my son's 25, but if you've got a 10-year-old or a 9-year-old, you're wondering what are they going to do. And then I think the very important thing is, as leaders, we really need to make sure that we're also helping stakeholders understand how this technology can be put to good use, and being conscious of responsible AI at the same time. So there's a lot coming at us as leaders, but there's never been a better time, I think.
Tanuja, thanks so much for joining us. That was Tanuja.
Thank you so much.
Randuri, Vice President, EMEA, Managing Director of Amazon Web Services. Now, coming up, we'll have plenty more, of course, on the pulse. It will not be from Paris. It will be, of course, from London. That's it from Viva Tech for today. We'll be back tomorrow. Again, there's a lot going on. Here we hear from Jeff Bezos. And then in London, Guy Johnson will be speaking with Stefan Hoops, the Chief Executive of course, of DWS. So this will be a great conversation on asset management and the rest. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And
I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward. Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
How about that? Welcome back. You're watching The Pulse. I'm Guy Johnson. We're back in London now. Quick update on what the top stories look like first thing this morning. Bloomberg is learning that Iran is being offered a range of financial incentives as part of its agreement with the United States, which we think now is set to be signed in Switzerland on Friday. The Fed is expected to hold steady. Remember, it's the first policy decision under the new chair, Kevin Warsh. The Iran deal certainly complicating matters. What's happening with inflation? What kind of a message are we going to get from Kevin Warsh? Plus, SpaceX overtaking Amazon to become the fifth largest stock in the world. Elon Musk's wealth climbing to more than $1.3 trillion. So that's where we are this morning. Those are the main headlines. There is a lot going on. We've got a G7 meeting that's taking place in Evian. We've got VivaTech, as we've also been understanding. We've got a Fed meeting coming up a little bit later on. The UK is going to be active tomorrow. There is a lot going on out there this morning. It is a pretty confusing picture. Let's start with the Fed and get an idea of what we can expect from Kevin a little bit later on. The Fed is expected to hold interest rates steady. It's the first policy decision under the new chair, who is, of course, Kevin Warsh. The outlook for inflation, confusing at this point. We've got developments in Iran. We've got uncertainty there. We've also got uncertainty on what the picture looks like when it comes to the AI story. Is it inflationary now? Is it deflationary later on? How will Warsh pitch that one? Let's try and find out. Alistair Bull, Bloomberg senior editor, joining us on this. Alistair, I don't know what to expect from Kevin Warsh. Does the market have a clear picture of what he's likely to deliver today?
No, I think the market's going to be listening very carefully to find out whether they're going to get the recent Kevin Warsh, who sounded quite dovish. Critics would say he sounded dovish as he was auditioning for the job with President Trump, or hawkish Warsh, which is based on his track record of when he was a Fed governor and the comments and remarks in his writings when he was at the Hoover Institute. So a lot of the questions in the press conference are going to focus on his read on inflation and how it could be shaped by the events over the weekend with Iran, which has obviously lowered fuel prices quite a bit. But there's also a lot of details to dig into. So expected to be a unanimous vote to hold rates. There's an expectation that the language in the statement will be tweaked to remove a line that's come to be synonymous with easing. Is that a hawkish signal, or is that consistent with what Chair Warsh has said in the past about wanting to withdraw forward guidance? And then you have a summary of economic projections and the dot plot. The dot plot in March showed a quarter-point cut. That's expected to be pushed back into 2027. But then there's the question of whether Chair Warsh will even submit his own dot. He suggested that the dot plot is kind of constrains the Fed's flexibility. So that would be a big statement if he didn't submit a dot.
OK. So there's a lot going on. There are a lot of questions. Isn't there an argument to say, actually, that we may all be disappointed if we're expecting detail? That actually, in some ways, Kevin Walsh, and there's evidence of this already, in as much as he hasn't come in and made big changes at the Fed already, that what he may do is just say, we're going to figure this out. Don't expect answers today. We'll give them further down the road. We're establishing a policy framework working forward. We're not there yet. Are we overestimating the details that we may get today?
In his nomination hearing, that there's a lot of things he'd like to change and like to look at. Those things could take time. They certainly require a certain amount of consensus and could even require votes. He needs to build the consensus and coalition around that. So it probably, dialing up expectations probably isn't going to help the market, but they can't help themselves. I mean, the Fed's been leaning into, the comments have been leaning into a more hawkish stance. Now we've had over the weekend developments with the oil price. That could give him a little bit more breathing room. Every word is going to be weighed and listened to so carefully as the markets build their own assessment of how he's going to communicate. They've had 8 years of listening to Jerome Powell. Now they have to sort of learn the muscle memory of listening to Chair Kevin Walsh.
It's going to be fascinating. 7:30 tonight, London time. That is when we're going to be watching that. Alistair Bull, thank you very much indeed. And of course, Bloomberg will have full coverage of the first Fed decision under Chair Kevin Walsh. It's going to start at 6:30. Presser, I think, is at 7:30. It's going to be an exciting evening. Plenty of football to watch as well. This could just be the warm-up act. You can watch not only what is happening at the Fed, but also England winning at football. Maybe that's going to happen a little bit later on. Stefan Hoops is the CEO of the asset manager, the asset giant, DWS. Good morning.
Good morning, Guy.
Nice to see you.
Very nice to see you.
I'm pretty confused about what is happening in the world right now. Got the Fed. Don't really know what's going to happen there. Got a deal potentially coming out of the Gulf. Don't know what's going to happen there. I've got an AI story. I don't know if it's inflationary or deflationary. I've got a SpaceX story that's taking off to the moon and Mars and beyond potentially. Don't know what's going to happen there. What is your degree of conviction right now as the head of one of the world's biggest asset managers? How do you see the world?
Well, I mean, as you just said, it's quite exhausting, all the things that are happening at the same time. And obviously, our job is to make sense of it for our clients.
Yep.
Now, one of the things that I found remarkable over the last 6 months or so is that whatever you throw at the market, it finds a way to go up. Right? I mean, you have so many conflicting messages. I mean, is AI inflationary because of all of the capex or deflationary because of efficiency gains? You look at the wars going on, which obviously should have had a massive impact, but the market's really back. And therefore, it's quite remarkable how many competing forces are at play. But so far, the market is always finding a way, at least the equity market, of going up.
Yeah, equity market, big shiny thing, just keeps going. Are you surprised by that? Did you surprise that it passed the test of the Iran war as easily as it did?
So typically, when you look at political events, they tend to have a pretty short-term impact on markets, right? So typically, after 60 days, markets tend to be where they were before, and we've seen that play out now. Look, it just seems that retail investors, I mean, they're just investing, right? I mean, you just mentioned SpaceX. I mean, for SpaceX to now be more valuable than Amazon is quite remarkable, right? And so to some extent, what asset managers, what fund managers have to focus on is really supply and demand as much as valuations.
So how do you position your business around all of this? This turbulence that we're getting, this shiny equity market that is taking off, a bond market that maybe lacks conviction, an oil market that's all over the place. Hard to get a handle on what is happening here. How do you position DWS for that?
So our story is a pretty simple one. I mean, we work very hard to make sense of markets for our clients and therefore drive strong underlying organic growth, and at the same time keep costs stable. Right? So what we've been able to do over the last couple of years is drive net income in 40% last year by simply doing those very, very simple things. Now, going forward, we want to have the same. So cost should stay flat. I mean, frankly, I don't expect cost to go up ever, at least the controllable cost. And at the same time, on the revenue side, we benefit from what we call gateway to Europe, where there's lots of interest from people around the world in all the things happening in Europe. And we are one of those asset managers providing solutions.
You don't expect costs to ever go up again?
Well, we have been able to do it for the last couple of years. And I think the combination of thoughtful management of your workforce, investments in automation, and lots of efficiency gains have been able, I mean, we decreased our costs over the last 4 years. And so, yes, I expect them to, the controllable cost, to not go up ever.
Okay, that's an interesting point. You have invested in the Middle East quite significantly. How is that playing out, given what we are now seeing in the Gulf? There is certainly the message I get from investors I'm talking to is there is a desire to keep money in the Gulf now. How is that working out for you? Do you regret it in any way? What do you think the trajectory looks like?
So Middle East investor base has always been important to us, and then we opened an office last year to actually be on the ground in Abu Dhabi. I mean, what I like about the region is when you think about a proper melting pot where you can have a dinner with friends, smart people from the US, China, Russia, India, Turkey at the same time. You know, Abu Dhabi, Dubai may be the only two places where you can actually have that.
That's still the case now?
I think that's still the case. I mean, obviously there was an impact over the last few months, but I think that they are ready to get back to what it looked like before. Now, at the same time, yes, you certainly have Saudi Arabia that have lots of internal, so like infrastructure investments on the ground domestically. But I think Qatar, you know, the Emirates, Kuwait, they will continue to be a net investor across the globe. And, you know, again, when they want to invest in Europe or India, you know, we are one of those providers.
So you don't regret that decision?
I think was the right call. And again, very smart people and lots of interesting things that we pick up from there.
One of the stories since the start of the year, certainly back into last year, going into this year, has been private credit.
Yeah.
And the redemption story that we've seen kind of quarter after quarter and what's been happening there. How has that changed your thinking around private credit and your position in private credit?
So overall, when you think about private markets, we are very optimistic. We think that's an amazing investment universe for institutional and retail investors. Now, there are some parts which are very hot, infrastructure, for example, and some private credit vintages have had issues, no question about it, right? I would say there's really three reasons for that. One, when you think about what private credit does, it really invests in private equity-owned companies, at least in the US. So it's not that private credit said, we want to have software. It's that private equity invested in software companies and private credit funded that. Secondly, you have the issue of, you know, lots of dry powder which sat on the sidelines, and then private equity owners that had every incentive to throw in or throw on leverage. So probably a weird incentive structure to some extent. And then thirdly, putting that into retail vehicles with a promise of instant liquidity is definitely leading to some of the issues we see now. But again, I think those were some very specific vintages. Overall, we are very optimistic.
So it's those vintages. So the latter point of putting retail into, like sophisticated retail, into those kinds of investments, has the calculus changed there?
I think you shouldn't be promising instant liquidity with very illiquid underlying. So the idea that you can have the benefit of the illiquidity premium with instant liquidity, that just doesn't really work. And I think people have learned. But again, the underlying thesis of private credit being an interesting, diversifying asset class for institutional retail investors, that's still intact, and we are quite focused on that.
Are you going to partner with insurers going forward? Are you having conversations with more insurers? Is that the nature? I'm trying to work out which direction you take the business in. And that will be one partnership idea that's certainly being explored elsewhere, done elsewhere. And I'm wondering whether DWS is going to be the next one that I think about.
I think going forward, people will focus much more on actually the origination side. So the insurance partnership is one where you get essentially the investments from the insurance company, which in the past, because there was so much supply of private credit, the problem was, or the focus was where to actually invest, like where the investors. I think going forward, it's going to be much more differentiating to have strong access to origination. There, our partnership with Deutsche Bank will be benefit from the vast origination channels of Deutsche Bank's corporate bank, investment bank, wealth management that we find differentiating.
That sounds like a no to me.
How?
Well, do you need the insurers? You've got Deutsche Bank, you've got that kind of flow story. Do you need something else?
Well, on the origination side, I think you need to have differentiated access to risk, and I think that we get that through Deutsche Bank and potentially other partnerships. And then when you think about the investor base, for sure, insurance companies will continue to invest, but so will sovereign wealth funds, pension funds, and other investors. But again, I think going forward, the origination side will be more differentiating.
It's great to see you. Thanks for stopping by.
Great to see you.
Stefan Hoops, the Chief Executive over at DWS. Staying in Germany, BMW shares under a little bit of pressure this morning. Earlier on, I think they were down 11%. We're now down by 6-7%. The German auto giant slashing its profitability forecast. What it's basically signalling is that it's struggling in China. This is the biggest market, and this is now rippling across into some of the other areas of the market as well. Let's talk to Danny Lee, get his sense of what is happening here. Danny, we're down hard. We're off our lows. Investors are clearly concerned. Is BMW basically signaling that it can't make China work here? Like, the Chinese market is unbelievably competitive. Is this a signal that basically it is not going to be able to deliver on the promises that were made regarding that market?
I think there are big questions for BMW in particular in the China market. You know, the longer run, given the competitive backdrop and the pressures that all automakers, including now the Chinese, but foreign makers at large, there are questions. But the fact that the stock fell to almost its lowest in 5.5 years, and the worries that it brings to investors and to analysts who are reappraising this stock, who thought that BMW, frankly, was in a much better position than your Mercedes and your Porsches. That is now not the case, according to analysts who have seen this stock being pummeled, and the fact that the shares dropped by almost 12% at one point today in Germany. So the fact that the BMW is looking at a margin of around 1% from as high as 6%, and the fact that the guidance only a month and a half ago was and held steady, but under new CEO Milan Nedeljkovic, he is really clearing the decks here to try and get a better sense of what is going on and to try and give some kind of base for investors and shareholders, especially as he starts his new tenure, that this is a difficult situation for BMW to navigate, particularly because of the China market, because of the war, and now that he's looking to deepen cost cuts. We've seen efficiency savings, cuts to R&D and investments, but now Nedeljkovic is looking to deepen that and go for more structural cuts and bigger efficiency savings. The question really is, how far would he go, and will that include job cuts? So it remains to be seen just what detail there is, but definitely look to go harder and faster, given sales will not grow and will in fact fall.
Yeah. What does this mean? How do I sort of translate this story into what is happening in Europe, core market, the United States, core market? What is the read across from China into those other areas?
Well, I think for the China market, it's certainly having a downturn moment. But I think when you look at some of the peers, your Mercedes, your Porsches, with their new models they're bringing out and focusing back closer to home and to other areas, mature markets like the US, this has all been well received. The fact that they are seeing sales optimism, stuff that will help offset their declines in China, that is definitely not the case for BMW, who's rolling out these new EVs under the New Class brand. They've invested billions of euros. The fact that there is a big weakness for BMW, they are struggling, and therefore their new rollout of EVs could face an even bigger problem, the fact that they are going to see a sales decline. So there is a real contrast there, but overall the China market and the wider slowdown there. It's also going to be just a challenge for wider automakers as they try to wean themselves off a little bit of China. But yeah, not a great day for BMW over the last 24 hours.
Danny, great stuff. Thanks for the update. Danny Lee joining us out of Hong Kong on the BMW story. What are we going to do next? We're going to discuss how we fund European defence, the build-out, the energy story. How do we fund data centres here? That conversation we're going to have with Nadia Calvino, the president of the European Investment Bank. It is coming up. It's next. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
.49 past the hour. Welcome back. Let's talk about European investments. The European Investment Bank says it's on track to commit 5% of its financing in the EU on security and defence, with support for Ukraine still a priority. But that's not the only issue that Europe now faces. We've got a whole range of issues that we've got to figure out how we're going to finance them, build them. There's a lot of challenges ahead. Nadia Calvino is at the forefront of all of this. She is the president of the European Investment Bank. Good morning.
Good morning.
Europe has a sovereignty crisis in a number of different areas at the moment. Defence is one of them. We rely on others for our defence. We rely on others for our energy. We're trying to figure that one out. We rely on others for our technology. We're trying to figure that one out. What is your assessment of the progress that we are making, the EIB is making, to solving some of those challenging sovereignty issues that we now face?
Well, you're right to say that the fundamentals underpinning the phenomenal success of the European Union for the past 80 years, since the end of World War II, are being put to the test. They're outright attacked from many areas, from many sides. Whether it is the economic foundations, the defence foundations, technological leadership, etc., the multilateral framework, rules-based, rule of law, respectful international framework. But I do think, and I do see, that the minds are focusing and we are making progress in a number of key areas, and the European Investment Bank is playing its role as Europe's financial engine.
So if you are Europe's financial engine, what is the brake that is stopping us accelerating at this point?
We're actually putting our full power to work, Europe's capital to work, trying to mobilize private investment. We just had our governors, that's the 27 finance ministers of the European member states, and they have fully supported our strategic roadmap to support Europe's top priorities and trying to maximize the impact of our power, our capital, our capacity to crowd in private investment.
You look at the United States, look at SpaceX this week. Say what you want about SpaceX, but what it has been able to do is harness the power of the US financial markets to deliver a phenomenal outcome. Why can't we do that?
I was discussing that yesterday with a couple of people. I mean, we shouldn't underestimate the importance of Brexit in terms of because
access to London.
Well, London was Europe's financial market.
Right.
And after Brexit, we have divided our forces, if you will. And we have been trying to create that internal, strong financial market ever since. I see progress in the integration of Europe's capital markets. This is probably one of the top 3 priorities ahead. And I see progress, and I think by the end of the year, we will have made significant progress so that we can really put Europe's capital and capacity to its maximum impact.
Can we prioritise between energy sovereignty, defence sovereignty and technology sovereignty at the moment? Are they equal? Is one a priority over the other? Do we have the capacity to solve 3 problems? It used to be that we had just one, which was to solve the energy crisis. Now we have a defence one and we have a technology one. Do we have the capability to deal with those 3 issues?
Absolutely. Of course we do. Of course, Europe can do and deal effectively with these 3 challenges. But I fully agree, these are the 3 top priorities for all of us, because Europe needs to break free of the excessive dependence on fossil fuels. So we need to regain energy autonomy. We need to reinforce Europe's tech leadership. We do have this tech leadership in a number of areas. Now we need scale and speed in this regard. And thirdly, we need, of course, to regain our autonomy, or maybe not regain, but gain, our autonomy and strategic independence in security and defence. But great progress is being made in these 3 areas. It's just, I think we were just a moment ago saying the world seems to be turning faster. So we need to gain speed, in undertaking these reforms.
Otherwise you get left behind. You've made progress. Obviously, you've been a huge participant in the energy transition. Now it's defence and now it's sovereignty. Can the EIB do more when it comes to the defence story? You're beginning to make progress in that area. Do we need to see the EIB moving into the data centre story and other areas that Europe needs infrastructure in?
Yes, we certainly need to do more. We can do more. We will do more. In the last 2.5 years since I became president of the European Investment Bank, I've tried to align the bank much more with Europe's strategic priorities and tried to reach the necessary scale to make a difference for Europe and for the world. Whether it is in the green transition, making it a success. Just yesterday, for example, we announced financing for the largest onshore wind park in the Nordic region, in the Baltic region. Today, we are announcing the acquisition of a green bond in Latvia. Latvia Energo, 20 million euros we will invest in this green bond. So, pioneering the green bond market shows that we can really scale up our capacity to make a difference. We're in the area of tech leadership, you mentioned it. We are currently assessing very important large-scale investments in AI infrastructures in Europe. And we see things are also moving in terms of regaining independence. And security and defense has been a real game changer for the EIB in the last 2.5 years. We have, as you mentioned, reached the 5% of our investments inside the EU. We have a robust pipeline of more than 20 flagship projects throughout the whole EU. And I think we will continue on this upward trend in the coming years.
Can we talk about Spain for just a moment? I won't mention the football. We'll talk about that after maybe England have won tonight.
Okay.
We'll do that further down the road. Do you think a Spaniard should lead the ECB next?
I think there are very good and strong Spanish candidates to lead the ECB, for sure, also from other member states.
Who should it be?
I really cannot express a view on that. No, it's not my job. In the past, I could have expressed that view when I was a vice president in Spain. I cannot now.
Okay. Could it be you?
Oh, no. I am definitely where I should be, leading the European Investment Bank, which is actually, I think, a key player in Europe and the world right now.
I only ask because I checked back and I've heard your kind of, no, it can't be me. No, it can't be me.
No.
I also heard that from Christine Lagarde.
Okay.
When she was looking to maybe take over that position.
I'm quite honest in my reply.
Okay. So what do you 2.5 years?
Yes. And I have a 6-year mandate.
I was about to say, you have a very long mandate.
Yes, and I'm 200%.
What do you want to do with the rest of it?
Well, right now, scaling up in these 3 areas, so energy autonomy, tech leadership, security and defense, these are our 3 top priorities. And I really hope that 2026-27 will be a game changer for Europe in terms of financial integration and the ability to scale tech effectively to try to match the developments that we're seeing in other parts of the world that you referred to.
Okay. Thank you very much, Steve, for coming to see us. We always appreciate your time.
Lovely to be here. Thank you.
Nadia Alcovino, the president of the European Investment Bank. Talking of scaling, we've got some great interviews coming up from VivaTech. This is the scale-up centre of Europe at the moment in Paris. Look at these great guests we've got coming up. Europe needs to scale up in tech. We're going to be talking to the key people that are going to be potentially doing that. Up next, it is Bloomberg Brief out of New York. I will leave you with this great lineup of guests coming up. This is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions.
a poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures rise as markets await the first Kevin Warsh-led Fed decision. Details of the US-Iran memorandum reveal Iran would gain major financial relief. And the last day of the G7 summit, AI executives gear up to meet with world leaders for security discussions. Don't miss our interview with one of the participants, Synthesia CEO Victor Riparbelli, later this hour. Let's get a check on markets around the world now, though. First over to Asia and Winnie Su. Winnie.
Good morning, Bonnie. Well, all eyes are on that upcoming Fed decision meeting under Kevin Warsh later today. But for now, MSCI Asia rising for a 4th day as oil remains under $80 per barrel. Now, technology shares still leading gains today with the Kospi here up about 1.6% and also the Nikkei 225 to another fresh record. Now, today's drag, though, is in the Chinese offshore stocks as we flip aboard and see how that underperformance has been worsening over the past year. We're talking about the MSCI China here down about 10% so far this year versus a 24% gain in the MSCI Asia index. Now, we are just about 2% away from entering that bear territory. However, the headwinds still remain, especially with that lack of AI exposure, the weak earnings growth, and also sluggish economic outlook.
Absolutely, Winnie. Thank you so much, Winnie Su there. And now let's get to London for a look at Europe. Louise Moon joins us. Louise?
Morning. So first up, taking a broader look at kind of the European space. We've got the European stock 600 pretty flat, unchanged, staying steady at kind of those record highs. The attention now really is on the Fed and what happens later today. So holding there near record highs. But one of the key sectors that we should be really looking at is autos, dragged down over 2% into the red. That is, of course, on the back of BMW, which you'll hear more about in a bit. But BMW, their forecast and profitability going lower. So dragging those auto sector, that's the worst performing sector here in Europe. A quick look at yields here in the UK. The 10-year yield dipping, gilts rallying on the back of this inflation print that we've seen, holding steady in May here in the UK. Surprisingly, holding steady given everything that's going on in the world, but holding steady there, and traders trimming those rate hike bets for the BOE tomorrow. That is coming up tomorrow. Taking a quick look finally at the krona over in Sweden, krona versus the euro. Again, holding steady. It's risen slightly over in the past few days ahead of the Swedish interest rate decision, which was this morning. That was held at a flat, and the krona there keeping those gains. But again, the main attention really is on the Fed and that impact on the global environment.
Absolutely, Louise. Thank you. That is Louise Moon there in London. As she said, the focus is on the Fed, and one of the key questions for the Fed is how disinflationary is this move in oil going to be? As you can see, it looks like we're higher, but in fact, Brent crude below $80 a barrel now. And if you look out forward month contracts, so the December contract, the January contract, we're down at around 76 and change. WTI already trading at 76 and change. So this oil market has really priced in the reopening of the Strait. Assuming it all goes well, and it's a big assumption, and it's a big assumption that barrels come back on the market very quickly, then the Fed may have less of an inclination to indicate that a hike, for example, might be next. But the question is, what is next for the Fed? Could it be a cut? Could it be a hike? Or what will the expectation be like as we head into it? Certainly for now, we're seeing futures bounce back. We did have a major sell-off yesterday. The SOX index was down almost 5%, for example. The Nasdaq 100 bore the brunt of it, with energy and financials outperforming. But right now, it looks like all of the major indices are going to be bouncing back just a little bit today. That chip trade coming back online as well. And if you look at yields, they're at close to a 1-month low, not really moving. Nobody is taking any further bets. There's about an 80% chance of the next move being a rate hike, and that before the end of the year priced in. And nobody is doing anything to upset this apple cart, at least until we hear from Kevin Walsh. All right, let's get to some individual movers now for that. Back over to London and Chloe Melly. Chloe.
Good morning, Bonnie. So here up on the board, there's Nvidia, but there should be Lionsgate this morning, which is down this morning after Netflix said it was not interested in acquiring the studio. And we had seen the shares in Lionsgate really jumping on the back of those takeover rumors and reports. But Netflix denying it has really dragged down those shares this morning. Moving on to the furniture manufacturer La-Z-Boy, which is up quite strongly this morning after earnings beat estimates. And this is something analysts have said that this was really thanks to some acquisitions and some divestments, and that really helped this company really, the weaker consumer spending that's been affecting that sector. It has been resilient in the face of that. And finally, BMW over in Europe is down this morning after cutting its profitability forecast. That is due to some weakness in China and also the impact of the Iran war. And so this is really going to be a wake-up call for the entirety of that European car-making sector that has been really struggling in the face of those competitive pressures.
Chloe, thank you so much. Chloe Melly there in London. And coming up this hour, our exclusive interview with Victor Riparelli, CEO of Synthesia, as AI executives are set to meet with G7 leaders. We'll also push ahead to the Fed decision with Ian Lingen of BMO Capital Markets. Turning to the US-Iran MOU now, Bloomberg understands that Iran is set to receive broad financial incentives as part of its agreement with the US. A draft seen by Bloomberg shows Tehran will get the right to immediately sell oil, tap a $300 billion development fund, and eventually access all frozen assets. For more, let's talk to Bloomberg's owner, Ant, in Dubai. Owner, based on what we've seen, Iran stands to gain pretty nicely financially if it meets certain conditions. Can you give us some more details?
Sure, Vonnie. There are two parts to the financial gains, the financial relief that Iran should expect from the signing of this interim deal. One, the immediate ones. It will be allowed to resume its oil and petrochemicals exports, which is going to be a source of much-needed FX that the Islamic Republic was grappling with since the start of the war. In addition, we expect a timely release of frozen funds, estimated to be in the tens of billions, according to the text of the MOU that we have seen overnight. What is a bit less clear is going forward how much exactly does Iran stand to gain from the so-called Economic Development Fund. The US, according to the MOU, undertakes to put together a development fund that is going to be at least $300 billion in size, along with its regional partners. The MOU doesn't say when exactly that fund might be created or who pays for it, but it is there, and we expect that to be a prominent feature of the talks going forward, because that is something that the Islamic Republic has been very persistent about since the beginning of the war. It wants the rest of the world, or US and others, to pay for some of the damages that it says it suffered since the war began in February, Vonnie.
Presuming the MOU is signed, how quickly could the Strait of Hormuz theoretically reopen, Onur?
Well, the Hormuz will probably reopen almost immediately, and we are already seeing signs that quite a few companies and countries, including Iran or Qatar, the world's largest LNG exporter, are sort of turning their ships towards the region, expecting that the closure will come to an end as soon as the signing is confirmed on Friday between the US and Iran. How long it takes from the reopening of Hormuz to the pre-war levels, where we saw about 130, 140 tankers or ships going through the strait on a daily basis. It is less certain, but at least we know that the two sides, according to the MOU, commits to try to bring the maritime traffic through Hormuz to its pre-war levels in about 30 days following the signing of the agreement on Friday.
Well, speaking of going through the waterway, the UAE telling Bloomberg that they're now moving to cut dependency on the Strait of Hormuz to zero. Is that even possible, Onur? What more do we know?
Maybe cutting down to zero is a very ambitious target, but we know that since the war began, some efforts have been made, not only by the UAE, but other Gulf countries, to mitigate the impact from the closure of Hormuz on their economies. Some of that response was obviously about mitigating the impact of the war, but some of them actually points to a more strategic shift in the way the Gulf countries see where Hormuz lies in the overall economic ecosystem that they are living in. And yes, that would require them to work on ways to circumvent Hormuz as a choke point for trade with the rest of the world, including for oil.
Fascinating. Onur, thank you so much for bringing us all of that reporting today. That's Onur Ant in Dubai. Stocks and bonds rising as we look ahead to the Fed decision, and Kevin Warsh's debut as chair. Joining us now is Bloomberg's Ven Ram. Not too much difference in positioning in the last couple of days. It seems like the bond market has made its call, or at least is holding its breath. Then what would surprise the bond market today?
There's plenty that can surprise the bond markets today, Vonnie, and the markets are just not positioned for that outcome. If you look at the MOVE index, which captures volatility expectations in swap rates, I mean, we are at lows. They're thinking that, we could see a 50 to 60 basis point move in swap rates over a 1 year horizon. And I think that the markets are underpricing the risk that Kevin Warsh is going to be someone like Alan Greenspan, not someone like Powell. He's already expressed his distaste for Fed's communication style. He thinks that the Fed should be talking less and working more behind the sidelines. And I think that, he could very well miss the dot plot today. We may not get a dot from him, and he may eventually come out in the press conference and say that, look, he's not for holding long press conferences, 1 hour style, as has been the case for so long now. But if you throw back to 2011, pre-2011, Vonnie, the Fed wasn't even in the habit of holding press conferences. He may well come out today and say that, look, we are not going to hold these press conferences regularly from now on. He could say that he could do away with the dot plot altogether and the summary of economic projections. That means that the markets will have to work out on their own what the Fed's next move is going to be. So it's going to be a guessing game, which is not factored in by the markets at all from the positioning today.
No, it would be back to the old days. And as you say, it's been a long time since we've had a very expressive Fed. So there's a whole generation of people that don't know anything different. Would less talk, less expression work for these markets?
Well, I think the markets have to make it work. They don't have a choice. If you throw back to the era of Greenspan, the markets were constantly on their feet, guessing what the Fed's next move was going to be. Greenspan once famously said that, if you think that you've understood what I've said, you must have misinterpreted what I actually said. So I think that, we are going to go back to those days, and that means that higher volatility. And if you take that together with Kevin Warsh's inclination to shrink the balance sheet, it means higher rates. And I think that, that is the game, that's the trick that the markets are missing today.
All right, Ven, we'll be waiting with bated breath. Bloomberg's Ven Ram, thank you so much. Now to other top stories trending on the terminal this morning. China's central bank signaled a potential shift towards an overnight policy rate, a move that could give policymakers tighter control over short-term funding costs. It's also a sign that the PBOC may eventually move away from the 7-day reverse repo rate as its main benchmark. The move to an overnight rate would bring the PBOC closer to global peers such as the Fed. By the Luce move up the waitlist. Bloomberg sources say Ferrari is using orders for its poorly received electric car as a loyalty test for wealthy clients. Buyers are said to be told that purchasing the $36,000 EV could help them preserve access to future exclusive Ferraris. Prices for gasoline cars in China slumped after the Iran oil shock weakened demand. A new locally made Range Rover is going for almost 60% less than the recommended retail price. Used car prices have dropped by 19% almost. The weak car sales weighing on automakers and the economy. Chinese retail sales declined for the first time since the pandemic. Coming up, G7 leaders and AI executives are scheduled to meet at their summit in France. Our exclusive interview with one of those participants, Synthesia CEO Victor Riparelli, up next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. As the G7 summit continues in France, leaders have been discussing access to advanced AI models from U.S. firms. It'll be a key topic of discussion at today's lunch, which will include executives from OpenAI, Anthropic, and Google DeepMind. Bloomberg's Oliver Cook is in Evian, France, with a guest who will also be attending that lunch. Ollie.
Yeah, that's right, Vani. If yesterday the focus was all about geopolitics, today it's all about the economy and, of course, the companies that will be increasingly driving that economy forward, the AI companies, with a number of CEOs attending the G7 leaders meeting with Donald Trump and, of course, the leaders of those G7. So I'm very pleased to be joined by the CEO of one of those companies here on the sidelines of the Evian Summit, Victor Riparelli, who is the CEO of Synthesia. Thank you so much for joining us here at the sidelines of the meeting. You're about to go into that meeting with the G7 leaders and President Donald Trump. What do you hope to get out of that meeting?
I fundamentally hope that Europe and the US can get together and work together on winning in what will be the most important paradigm shift in our era. I think what we've seen is that the US have built the best frontier models. They're really good at that. They have the world's biggest labs. And in Europe, what we are seeing is that we're increasingly becoming very good at the application layer. So taking those models, building products, building businesses on top of them. And I really think it's super important that we work together and that we don't end up as less allies than we were before.
And so what is the risk of that happening, of that sort of allyship sort of breaking apart? Because, of course, over the weekend, the headlines were all about the Trump administration effectively blocking foreigners from using the sort of avant-garde models of Anthropic, the sort of AI nationalism. What are the risks associated with that?
Yeah. I mean, look, I think there is a risk, but I think if I look back at the past 2 years of AI, it's just been a frenzy, right? It's been up and down. The narratives switch all the time. There's a lot of fear, there's a lot of excitement. But I think in general, when we look back at what's happened the last 12 to 18 months, I think even though we may be over-indexed in some of these things, like what happened over the weekend, I'm definitely hopeful and positive that we will get to a solution where we work with the U.S., not against the U.S.
And for something that is so present in the global conversation all across the planet, there is not really a sort of global way of addressing the sort of issue of AI, whether it's regulatory, thinking collectively between nations, how they can work together. And it seems like Emmanuel Macron is trying to begin that conversation here. What should that conversation sound like? What should these leaders be focused on?
I think it's very important that it becomes practical. We've heard a lot of talk the last 2 years, and there's a lot of uncertainty because the market and the technologies move so fast. But what I really hope to do is that we can create a great environment for both American companies and European companies to work together, to build great tools and make sure that we maintain our world-leading power in AI. So for me, as a business leader, it is things like access to models, for example, ensuring that the European Union doesn't over-regulate, making it harder to compete on the American market, for example. So I hope we can focus on those things and less the sort of existential risk, more sort of sci-fi conversation that's always going on. I think that is really important, and philosophically I think it's very interesting. But there's a lot of things in front of us that we can do today that will make the environment much better for businesses like mine.
And also sort of expanding the dialogue, I think, between the AI companies, the private sector, and the public sectors. What sort of information do you need to convey to global leaders? What do you think that they miss about AI and the transformatory power that it has on the economy?
So I think one of the things I would love to change about the conversation is right now everyone is talking about the frontier labs, the large language models, the lowest level of the technology, which are very important. But most consumers, most businesses are going to interact with these technologies through what we call the application layer, right? So companies like Synthesia, like 11 Labs, like many of my other peer companies who take these models and build products around them. And that is really, really important. And we should not focus all of our efforts purely on the underlying foundation models. That's kind of like the cloud providers of the next era. There's going to be so many companies built on top of it. I think particularly for the European conversation, it's so important that we focus on the application layer. That's where we've proven that we're really good. It's where we have a real chance to win. And I think pouring lots of money into government supercomputers and efforts to nationalize LLM development, I just think it's a losing battle, and I hope we can be smart about that.
And do you think that we could get something like a communique? Do you think we could get the CEOs of these companies from the United States, from Europe, to come together and kind of get a collective message out? Do you think that's on the cards for today?
I hope so. I mean, I think that's why a lot of us are here. Yeah. There's already, I think, a good community, especially the business community, where we talk, we develop technologies together. There's lots of partnerships going on. So I'm hopeful that we can get to an agreement today.
And thinking also about, obviously, we talk about the sort of the race in AI. Obviously, everyone is trying to sort of win in this technology. The United States is ahead by, I think it's fair to say, at least a country mile. The Chinese are sort of gaining speed. In Europe, I think it's again fair to say that they're very, very sort of far behind. How do you close that gap? Is closing the gap, should that not be the focus in Europe? And what ingredients do you need from governments in order to sort of change that narrative?
I think we need to look at this as a business strategy that's practical. And I think a business strategy would not be, let's try and replicate the American frontier labs in Europe.
Yeah.
We don't have the talent for it. We don't have the capital for it. And I just think it's going to be a losing battle where we're going to end up with a subpar technology. Let's focus on where we actually can make great strides, which is in the application there. Let's work well with our American counterparts. And I think really just focus on where we can actually win. We want to play to win. Historically, I think Europe has not been very good at this. Yeah. I think in America they believe in capitalism for good and for bad. In technology, in China they believe in technology for good and for bad. I'm not really sure what we believe in Europe anymore. The most obvious answer is regulation.
If you could have one thing change in Europe, is it regulation? Is that what they should be focused on, getting out of the way and letting companies sort of experiment and sort of get off the ground?
Yes.
Absolutely.
Less regulation and easier cross-border
And as transformative as AI technology is, I think we can all acknowledge that there is also some fear that there is a bit too much hype in there, that there is a bubble growing. When we think about the valuations of these companies, you had SpaceX, and of course, you have the sort of pure play AI companies, Anthropic and OpenAI, $1 trillion valuations, something around that coming into the end of the year. Is that a place that we as the rest of the world should be comfortable with?
I mean, there's definitely bubble tendencies, right? I think we're seeing all sorts of crazy things, but I think there's undeniable a huge macro trend. In 5 years, everything is going to be AI-fied. And I think we look at the revenue ramp of these companies, in particular Anthropic and OpenAI, it is very real. In the short term, maybe we'll see fluctuations. I'm seeing, especially in the early stage, the seed stage market right now, valuations are going absolutely crazy. I don't think that's necessarily a good thing, but I do think these big companies are going to be able to live up to the valuations that they have today.
So obviously we're talking about the products, the sort of applications for businesses, for people. Of course, there's the question of compute, there's the question of energy and everything upstream, and of course this issue of critical raw materials. How sort of secure do you feel in the way that the governments are dealing with that? That obviously is going to be a focus for the leaders here. Do you feel secure with the sort of upstream that, you know, we're not going to block there that will really hamper your ability to grow?
I mean, I think we're hearing politicians say the right thing. I think we need to see the investments. I think in the UK particularly, like, we need more power, we need more data centers. We're still so early in the age of AI, and I think we will need many multiples the capacity that we have today, and I hope we can move really fast on getting that done.
And thinking about your business specifically, what is your sort of focus going into the next 6 months, the next 12 months, and trying to sort of gas up the sort of interest and, of course, experiments with AI?
Yeah, so we already work with 90% of the Fortune 100, the world's largest AI video platform for businesses. And what we're actually focusing a lot on is training and upskilling the workforce. So we signed an MOU with the government of UK last week, which is basically us promising to help upskill millions of workers. I think that as much as AI will change jobs, will displace some jobs, I think the core DNA of a great company and a great country is great people. And I think that's going to be the same in 5 or 10 years. So upskilling the workforce is going to be one of the most important priorities for any country leader.
And you also run a global business. I want to think specifically within Europe, obviously large operations in the UK and France and Germany. Yeah. Do any of these nations stand out of getting it better in terms of how they're creating the environment for you?
Well, I think in the European Union, there's no doubt that the UK, I think, is the best place to build a business. In some ways, the fact that they're not actually in the EU, I think, has been a benefit for them because they don't have to follow all the same bureaucracy that's going on in the EU, don't have to follow the same regulations. And I think there is some sense of a close relationship with the US. So I'm happy to have my business based there. I do feel like there's been a vibe change the last 12 months. Everyone is realizing that it is not a nice to have to become a player in the AI economy. It's a need to have. And so I do think there is, in general, a positive shift toward country leaders and business leaders like wanting to succeed.
Well, Victor Riparbelli, thank you so much for your time, the CEO of Synthesia there. It really sort of getting into that meeting with the other AI CEOs coming over from the United States and the G7 leaders, including Donald Trump. And of course, you don't want to hear it where I'm from, based in Brussels, that actually it's an advantage to have your company outside of the European Union, but something that hopefully the EU is waking up to.
Ollie, thank you so much. Bloomberg's Oliver Cook covering the G7 for us. Time now for your front page news. And first up, the Wall Street Journal looking at the Georgia primary results. Trump-backed Mike Collins winning the GOP primary runoff, setting up a showdown with the Democratic Senator Jon Ossoff. The Times says it'll be a key battleground state in November. Next up, the Financial Times leading with bullish dollar bets. The FT saying investors around the world flocking to the dollar in a bet the AI boom will push the U.S. economy ahead of its peers and force the Fed to keep interest rates high. And finally, on the New York Times, the World Cup GOATs. The Times looks at Lionel Messi's hat-trick against Algeria in Argentina's first game of the World Cup. Phenomenal game that was. Coming up, countdown to the Fed with Ian Lingen of BMO Capital Markets. That's next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world. And I thought, okay, I can rise up. I can play this game. And I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures rising as markets await the first Kevin Warsh-led Fed decision. Details of the US-Iran memorandum reveal Iran could gain major financial relief. And the last day of the G7 summit, AI executives gearing up to meet with world leaders for security discussions. One thing and one thing only on this market's mind today, and that is the outcome of the Federal Reserve meeting. But one question that will be discussed at that meeting, no doubt, is oil and how disinflationary a force it will be. Look at Brent crude trading below $79 a barrel now, and that's right out through the winter months. If you look at the December and the January contract, we're talking about $76 and change. WTI trading below $76. So that market really pricing in a pretty straightforward reopening of the Strait of Hormuz, it would seem. Seeing a little bit of an addition to gold now. Bitcoin bounced back as well, although we're a little bit lower now. The idea is that some money came out of these asset classes, perhaps for the SpaceX IPO. That's at least one theory out there. Let's take a look at futures, because yesterday we had that sell-off. The SOX was down 5.7%. We might be getting some of that back today with Nasdaq 100 futures pointed pretty substantially higher. Also, just in general, the mood has shifted because of the Memorandum of Understanding and the fact that we're finally here. It's a Fed day, and to that end, let's take a look at bond yields. We're pretty much at our lows of the month, down less than a basis point across the board, really. The two-year yield at 404.53, still pricing in there about an 80% chance of a hike this year. Let's get to some individual movers now pre-market. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Lionsgate shares are in the red this morning after Netflix said it was not interested in acquiring the studio. So we had seen the shares in Lionsgate initially jumping on the back of those takeover rumors and takeover reports. But now that Netflix has fully denied it, we are seeing a reversal in sentiment, and we're down about 6% for Lionsgate this morning. Moving on to the furniture manufacturer La-Z-Boy, which is up very strongly this morning, about 16% after delivering solid results. And the analysts have said that the company has really benefited from the recent acquisitions that it's made, and also some of the divestments that it has made as well. And so that's meant that the company has been able to be really resilient, even in the face of that weaker consumer spending that we've been talking about a lot for retailers. And finally, let's cross over to Germany, where BMW has been having a tough morning. It's down about 6% this morning after cutting its profitability forecast. It blamed a slump in demand in China, and then that broader hit on consumer confidence from the Iran war. And so this is really piling pressure onto the new CEO who's just started, and is really seen as a wake-up call for that broader car-making industry in Europe that's been dealing with so many competitive pressures, especially in the key Chinese market.
A bit of a ding there for BMW stock. Chloe, thank you so much. Chloe Melly there in London. BMO's Ian Lincoln looking ahead to the Fed's rate decision this afternoon, writing, quote, monetary policy is set by the majority on the committee, not a single participant. It's a process of consensus building, one that we suspect Warsh will prove adept at over time. Ian is head of US rate strategy at BMO Capital Markets, and I'm pleased to say he joins us in studio now. So, Ian, what preset notions is Kevin Warsh coming into the job with? I mean, we know that he thought the Bernanke monetary experiment went on way too long, for example. Is that something that we're going to see evidence of today?
Well, I do think that the market is expecting him to push back against the amount of communication that the Fed has typically been engaged in. The size of the balance sheet is also topical. But I think that the market is overpricing the ability of Warsh to come in day one and make a great deal of changes. The idea that he would attempt to get rid of the dot plot on his first meeting, he might be laying the groundwork, he might be having the conversations behind closed doors or even at the FOMC meeting itself. But those type of announcements and those type of changes will probably take several meetings or quarters to actually come into effect.
So I hear you that he's going to want to build a consensus on the committee, and it's been a pretty dissenting committee in the last few meetings. At the same time, he's going to want to come out strong and show the market that he can gather a committee around him. And also, any changes that he might make, he might want to signal them now, no?
Well, I do think a lot of that comes out in the press conference and the way in which Warsh chooses to respond to questions about the balance sheet, questions about the SEP and the dot plot. I think that will really set the tone more so than being able to build consensus to make wholesale changes. Now, I do anticipate that it will be a unanimous vote, in part because he will probably drop the slight dovish lean in the statement, and we lost Mirren on the committee, so there's no one left to dissent effectively. So I would characterize that as a successful first meeting and one that he does come out strong with a unanimous vote.
Who does he most align with on the committee? Who will be his allies, let's say, when he makes whatever arguments he may make for reducing the size of the balance sheet or changing how the Fed communicates?
I think that he'll have an ally in Williams because that is...
John Williams?
Yeah, because that is typically a position, head of the New York Fed, very markets-oriented, very in tune with what's going on. So I suspect that while Williams has a unique seat in terms of the FOMC as a whole, that is a good place to start for consensus building for Warsh. Aside from that, he is a known quantity, and I wouldn't be surprised if more members than not ultimately did align with him.
I would have thought Williams would lean a little more dovish, though, in terms of monetary policy and just money supply than somebody like a Kevin Warsh.
Well, we are operating under the assumption that the Warsh Fed chair is the same as the Warsh governor. And I would caution against doing that because it's not entirely clear that Warsh is going to be hawkish per se. In fact, given that he received the nomination from Trump, there is some assumption that he's going to make the case for lower rates over time. Now, that case might be accompanied by a smaller balance sheet, which kind of intuitively makes sense, which is less accommodative on one side, but not necessarily hawkish per se. It's more a function of being less involved in the markets. And that's also consistent with his communication stance. It's less involvement, it's less direction, it's allowing the markets to engage in the process of price discovery without too much guidance from the central bank.
And he's expressed a number of times his view on American productivity and, America first and how, the economy needs to support American business, right? So that would tally with what you say. That said, how will the Fed be speaking about this decline in oil prices and its impact on inflation going forward? Will we see numbers come in slightly?
So I think that that's actually the most relevant conversation piece within the Fed at the moment. We've spent the last 3 months with energy prices running ever higher, gasoline contributing a significant amount to headline CPI. What happens if there is a continued flow-through of lower oil prices to lower gasoline prices? What had been a pillar of inflation will become a drag over the course of the next 3 or 4 months. And that, if anything, that just reinforces the prudence of the Fed's decision to wait and see how it plays out. There has only been a small amount of pass-through to core inflation. Core goods last month was negative in outright terms. That buys the Fed plenty of time. So I do think that the energy shock remains extremely topical for monetary policymakers and will probably ultimately drive the tone of what we hear from Warsh.
If he does decide to thread the needle and not give away too much about whether the next interest rate move might be a hike or a cut. Does this market reprice, particularly the front end?
I think that the reason that 2-year yields are at 4% or effectively hovering around 4% is because we've priced in the probability, very low probability, but of a rate hike sometime over the course of the next 6 or 8 months. So the market is comfortable with the idea of symmetry around the current policy rate. So I wouldn't be surprised if we shrugged off a slightly hawkish tone. I think the bigger risk is that we're all poised for a hawkish, ready to fight inflation wash. What happens if he comes out and he's a lot more dovish or erring on the dovish side of balance? I think that we haven't had that priced in. That gets 2-year yields to 385 pretty quickly.
Wow, so that could happen in the next couple of days. Potentially, it's one of the outcomes, right?
Yeah.
If that happens and, you know, front-end yields come down, is there also the potential for a market event if he starts talking about maybe reducing the size of the balance sheet at some point? Several guests have said, look, the economy has changed now. It's not going to be able for that, not immediately at least.
So I do think that the argument for a smaller balance sheet over time makes sense. If it were to come to fruition, it would be runoff of maturing Soma holdings. I don't think there's an appetite to sell bonds outright. What I'm more worried about is I'm more worried about what it does to risk assets, because there was a very strong correlation between QE and the performance of the equity market. You take away some of that support, now do we start to see a repricing in equity valuations over time? I think that is one of the wild cards that's out there.
Fantastic, Ian. Very briefly, what was your reaction to the amount of appetite there was for NVIDIA's offering? I know you don't specialize in corporate issuance per se.
I wasn't that surprised given the fact that the sector has been performing so well, and there's money on the sidelines and there's cash to be put to work. So there's going to continue to be strong demand on the corporate side, I suspect.
All right, Ian, thank you so much. A real primer there for your Fed meeting and news conference ahead. That is Ian Lingen of BMO Capital Markets. Now to other top stories trending on the terminal this morning. United Arab Emirates is working on a plan to end dependence on the Strait of Hormuz. The plan includes a major expansion of several eastern ports. It's also looking at building at least one other harbour and investing in new pipelines, rail and road networks. China's central bank signalled a potential shift towards an overnight policy rate, a move that could give policymakers tighter control over short-term funding costs. It's also a sign that the PBOC may eventually move away from the 7-day reverse repo rate as its main benchmark. The move to an overnight rate would bring the PBOC closer to global peers such as the Fed. SpaceX shares poised for a 4th straight day of gains. It's already overtaken Amazon as the 5th largest stock in the world. The strong gains in SpaceX shares are a sign of consistent investor demand, calming fears that the IPO would be too large for the market to digest. Coming up, we'll get into the details of the US-Iran interim MOU as President Trump is set to hold a news conference on the last day of the G7 summit. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Shevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football. And you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. It doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Financial details of the US-Iran interim deal emerging. Bloomberg learning that Tehran is set to receive broad financial incentives as part of its agreement with Washington. President Trump had denied that the US would pay $300 billion noted in the draft of the deal. For more, Bloomberg's Oliver Crook is live at the G7 summit. Ollie, what more do we know about the actual agreement and what the response of America's allies has been?
Yeah, so we saw some drafts of this MOU, the 14-point plan that came out sort of overnight, and we understand that those were also shared with a number of the G7 leaders yesterday with Trump, who sort of talked them through it and sort of, continued to sort of tout his deal, sell his deal to the world. And again, it sort of seems to be in some ways kicking a lot of the more complicated issues a little bit further down the road. You'll notice that there was no reference to the sort of the ballistic missile system that was supposed to be at one point one of the war aims was to dismantle. But of course, a large part of it, and what the Trump administration will point to, is some of the agreements that were made by Tehran. Although we should say that the language said that Iran reiterated they will not pursue a nuclear weapon, because of course Iran's public position for many years has been that it is not in the pursuit of a nuclear weapon. What is interesting about the proposal is it begins to move from the stick side of things, that was the military operation, to the carrot side of things, trying to build financial incentives, potentially reduction of sanctions, and that is something that the Trump administration is going to try to use as a lever going forward in order to try to get the compliance from the Iranians. Now, where the Europeans can play a role is really twofold. There's one big conversation about their role in the Strait of Hormuz, potentially being active in there and demining. If that is going to be the case, the Europeans need very, very clear assurances that the kinetic part of this war is over, because those demining ships are not really built for battle. They are built really for peace times. And then the question of where the Europeans come in on the sanctions front. Of course, the Europeans have their own sanctions, and at the JCPOA, the Europeans were very much involved in sort of negotiating that full architecture. And now it seems that the Europeans are coming in fairly late into that discussion. And of course, this is something that's going to be worked out over the next weeks and months, but that is going to be a very active conversation in terms of how to create that incentive structure and what role the Europeans themselves will play as well.
Absolutely, and I thought it was interesting, Ollie, that the 14th point in the MOU is that the final agreement would be approved through a binding resolution of the UN Security Council. So a lot of people will have their voices heard. Now, when it comes to other matters, the other theatre of war that we keep an eye on, G7 leaders agreeing to strengthen Russian sanctions and boost defence help for Ukraine. So what more do we know about concretely what they'll provide?
Yeah, so what's interesting is, of course, this was the first opportunity for President Zelensky to have a one-on-one or have really any kind of face-to-face discussion with the President of the United States, Donald Trump, in basically the last 4 months, because obviously the United States has been very distracted by the war in Iran, but the United States also effectively entirely withdrew from the negotiation process. You'll remember in the lead-up to the presidential election, Trump kept saying he would end the war in about 24 hours. That has, of course, proven much more difficult than he had anticipated. But we've been hearing from the president here in Evian over the last couple of days that he's effectively ready to now re-engage in that conversation. So for Zelensky, it's an opportunity, A, to get the Americans to re-engage, but to do so on terms that are potentially more favorable to the Ukrainians than the first half of the Trump administration. You'll remember the first half of the Trump administration has been focused basically solely on this idea that the Ukrainians have no cards and that basically they should accept a lot of what the Russians were trying to foist upon them. This sort of narrative has changed in the last few months. The Ukrainians are in a much better position on the battlefield battlefield. They now have this 90 billion euro loan from the European Union that can fund them for the next 2 years that had been blocked by the Hungarians. Now with Viktor Orban out, that clears the way. So for Donald Trump, who really understands these geopolitical dynamics in pure power terms, the Ukrainians are in a much better position to have those negotiations and hopefully potentially want to rely on American support, not just in terms of course, the sort of moral support, but of course also in terms of military hardware, and potentially some of those flows can recontinue now that they're less distracted by the war in the Middle East.
Yeah, and then a separate question completely, Ollie. We know that AI executives, including Demis Hassabis of Google DeepMind, also Sam Altman, are joining G7 leaders for a lunch discussion. What could they possibly want, if that's not too bold of a question?
Yeah, I mean, I think that for the Europeans, I mean, we just spoke to one of the CEOs of the European companies there, is that what they want to make sure does not happen is some of the things that we saw over the weekend, which is effectively the Trump administration banning foreign nationals from using some of the more experimental AI models that Anthropic has. I mean, basically what he was saying just a little bit earlier, as a company that's based out of the UK, but really with a global footprint, was that the Europeans are too far behind on AI to really compete on the sort of models themselves. What they can be good at is integrating the existing American models, really finding applications for that to boost productivity and sort of contributing to the ecosystem there. So I think for Europeans, it's going to be really about not bifurcating the whole AI ecosystem, not creating this sort of AI nationalism, because they're so reliant on the United States. And of course, if you do ban foreign nationals, I think what the Europeans will sort of be angling for is to try to draw the circle a little bit wider, not just around the United States, but also some other partner countries, potentially the G7.
Yes, trusted partner countries, right, Ollie? Thank you so much. That's Oliver Crook there at the G7 in Evian, France. BMW shares falling as much as 11%, down about 7% at this point after it slashed its profitability forecast for the year. For more, we're joined by Bloomberg's autos and aviation reporter, Danny Lee. So Germany is just getting so much bad news these days. Danny, what's gone wrong for BMW?
Well, Bonnie, good morning. The fact that BMW is struggling in the China market is unsurprising. A whole slew of foreign automakers are finding the competitive pressures increasingly tough, and particularly at a time when China's auto sales are continuing to fall. But for BMW, they're being hit harder against the expectations that they were doing better than some of its rivals like your Mercedes and your Porsches. And with them in the backdrop of sales will now fall this year rather than be flat, this is a bigger blow for them, considering its rivals are in a much better position, whether it be rising sales, having new models to stimulate that, or are cutting deeper. The fact now that BMW is going to have to cut deeper already, having already cut its R&D budgets, investment budgets, now looking to do more structural changes. What that ultimately means remains to be seen, but the fact that you have a profitability margin going to down as low as 1% from 6% clearly spells a lot of trouble for the German luxury automaker.
And Danny, I thought it was interesting, Range Rover is also having problems in China. Now, is it because the Chinese want to spend less and that's why they're moving to EVs, or is it just a very different culture at this point because they led so strongly in EVs?
Well, for Range Rover, it is a symbol of the gasoline car market that is really struggling as the transition to EVs continues to take hold, the fact that fuel is more expensive. And what we have seen is that for a Range Rover, the Evoque L SUV can be bought new, locally made in China for a 60% discount, according to one media report. So it's a significant discount. And when you bring the broader context of this, the fact that gasoline car sales, the discounting rather, has been around 25% for the last 3 months, it is a really tough situation for car makers who still have gas guzzling cars, new or used, and yeah, very much so having a steeper discount than EVs, unsurprisingly.
Yeah, the thing is, Danny, if you're going to make an EV, you better do it right? And Ferrari did it, but apparently it's had to come up with a way to sell its poorly received EV. A little bit of pressure, actually, on potential customers.
Yeah, we have some great reporting from our colleagues in Italy that Ferrari is trying to, whether it be strong arm or convince its most loyal customers that if you buy the Ferrari Luce, the EV, you will get top priority for some of its more exclusive, limited edition models, having better priority. And it's that way that they can start to drum up and stimulate sales of its very poorly received EV. The fact that it's been panned and criticized by some of the more loyal fans of Ferrari It's Ferrari's way of trying to issue a loyalty test to its most beloved customers, those who could really afford €550,000. And yeah, this is an interesting kind of stance that Ferrari is taking. They have confirmed that they are engaging with customers to try and drum up a unique kind of sales, but it is an interesting tactic given that it has been widely criticised.
You have to wonder if it won't backlash on Ferrari, right, Danny? Danny Lee, thank you so much. A font of information. Coming up, we're going to get you set up for your trading day, and what a day it is. The first Kevin Warsh-led Fed meeting. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, we do get retail sales at 8:30 a.m. Eastern. And then President Trump is set to hold a news conference from the G7 summit. That's due to begin around 10:30. Then the Fed's rate decision, 2 p.m. Eastern, followed by Fed Chair Kevin Warsh's first news conference. That news conference at 2:30. We imagine there will be more, but you never know. So we will be tuning in for that. Let's take a look at your macro picture before the Fed news conference. S&P futures pointed higher, but this isn't giving you the full picture. NASDAQ futures pointed even higher after that sell-off yesterday, particularly semiconductors, so we might see a rebound today. The dollar index holding in there, and the two-year yield just not moving for now, 404.53. That's it for Bloomberg Brief.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Warsh will say there's tremendous uncertainty.
I expect his tone will be a little bit more dovish.
Too high inflation, strong labor market, that argues, of course, for the Fed needs to move towards a more hawkish stance.
The Fed's primary job is controlling inflation.
It's a long shot to call for a rate cut this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Welcome to the Fed, Kevin Warsh. Markets looking for guidance from the new Fed chair with the central bank's rate decision coming later this afternoon. Investors bracing for more volatility as SpaceX surpasses Amazon as the world's fifth largest company, even with rates a bit higher than they had been, and with details emerging about the memorandum of understanding between the U.S. and Iran's financial benefits coming right now to Iran.
And you know what, Lisa? These stories are really intertwined. We might have easier inflation, not so high inflation, given the fact that we're going to see more oil flowing if the Strait of Hormuz does open in earnest. And also this administration, if you look at the MOU that our Bloomberg colleagues got a hold of, it looks like more Iranian crude is going to be able to get to market. We're going to see some sort of waivers on Iranian crude. So you're going to see oil prices potentially even lower than they are today.
And right now we're looking at oil prices that are about $6 to $9 above where they were before this conflict started on February 28th of this year, which raises this issue. Is the inflationary push that we've been seeing entirely due to the oil price increases, or is there something else behind it that Kevin Warsh has to pay a bit more attention to?
Well, this is going to be the big debate amongst him and his new colleagues as he takes over in the new era of Kevin Warsh. Part of it is going to be potentially they're going to see disinflation when it comes to the oil prices. And Citi yesterday was talking about how now they think there's a dovish risk to today's meeting because of what we're seeing in oil prices. But then there's the entire AI trade and build out and all the capital expenditures that is going to that trade. And in that, at least in the short term, I know what he's going to say long term, but in the short term, does that put inflationary pressures on this economy?
There are inflationary pressures in Elon Musk's bank account because right now we have seen SpaceX become the fifth largest company in the world, surpassing Amazon, even though people talk about the fact that its earnings are a fraction of Amazon's total earnings. And this is a new company less than a week after its IPO, and suddenly it has hurdled to almost $3 trillion valuation. Is this a bubble? Is this healthy? A lot of volatility in some of the memory stocks, the chip stocks over the past couple of days. SpaceX on poised for a fourth day of gains. At what point is it just too much?
Well, this is a big test to the market. How much can the market digest? Well, they're certainly digesting SpaceX. Are they going to digest more down the road the rest of this year when we get these liquidity events? When you talk about revenue of SpaceX, all the banks are saying it's going to be by 2030, maybe close to $500 billion. Well, Elon Musk says that is going to be $1 trillion. And if you believe in that, then potentially, where the stock price is trading right now makes more sense.
$1 trillion here, $1 trillion there. I think that right now Elon Musk's net worth is equal to about the total net worth of the 5 next richest people in the world. Right now we're looking at a market that is trying to inflect higher after yesterday's sell-off, led by the tech trade. This has been incredibly volatile. Yesterday it led the way down. Today it's leading the charge up. 0.4%, essentially flat on S&P, as flat on the Russell 2000. Can we get a broadening out? A lot of that is hinged to the bond trade. Do we see a rally into bonds after the news conference today? Who is the real Kevin Warsh? Remember, he was the youngest governor on the Federal Reserve Board back in 2006 when he was nominated under George Bush. Now, can he come out? Is he going to be hawkish the way he was, or is he going to be a dove? And if you bleed this through, ultimately, a lot of this has to do, as Anne-Marie was talking about, with the oil market, continuing to see it hold below $80 a barrel, though today, some questions about the MOU, whether it will stick, whether this is going to be something that can truly bring an inflection point for the conflict. Coming up this hour, George Concalves of MUFG as Wall Street awaits a Fed rate decision. Stephen Cook of the Council on Foreign Relations as details of the U.S.-Iran truce emerge. And Henry Schwartz of SEBI as SpaceX soars past Amazon in market cap and trading rises to records. We begin this hour with stocks pushing higher. Treasuries holding steady as investors look to Kevin Warsh in his first moves as Fed chair. George Concalves of MUFG writing, inflation concerns have been misplaced and rates may have seen the high prints for 26. That plus Warsh talking hikes off the table is about to unleash a bond rally. George joins us here this morning. George, great to see you.
Great to see you. Happy Fed Day. Happy
Fed Day, if you celebrate. A real question about how much this bond market can rally, given some of the inflationary pressures that, yes, are tied to oil, but also to some other issues as well.
Yeah, look, I think we are entering a summer of the bond market. I think we probably have seen the high prints for rates for a whole host of reasons. Look, oil prices, even in the midst of like literally 1 billion plus barrels of like less production getting through the Strait of Hormuz, managed to stay contained, right? So like this idea that you're going to see like a second wave of higher oil prices, I don't buy that. We don't buy that. We've been skeptical of the move in general, and inflation has largely come from the inflation from the oil shock, and then some second order round effects around some sort of pricing surcharges that were added to core prices. But in general, there's not really an inflation problem. Look at wages. Look at the way that the jobs market's behaving. It's still low-paying jobs. You're not seeing the sort of impulse of inflation. We think that we've kind of seen the highs in rates.
So we'll get to the economic discussion later, because there's a lot of divergence, even within pros, about exactly whether all of that is true in terms of wages and some other aspects. Do you think that Kevin Warsh truly can unleash the summer of bonds, given the fact that ultimately he's really squaring off against credibility on one hand and the overhang of what could be coming from the White House on the other?
Look, I think everyone has to temper their enthusiasm, including myself, because let's see what happens with the MOU, and if that gets done, it's a done deal by tomorrow, I think, right? So let's see, or Friday. Let's see what happens there. But I think we're going to start off at 2 o'clock into 2:30, right? 2 o'clock, we're going to see, did Kevin Warsh participate in the dot plot submission process? Like, that's going to be a big deal. And like, what are the dots telling us? Is there going to be like a removal of the easing bias? At first blush, I think this is going to be a kind of gradual toe in to becoming more like a changes at the Fed. But we don't see a drastic change at the Fed starting off today. But we do think that this is going to, he's going to start pivoting the Fed differently, and that's going to rearrange the focus and less forward guidance and a shift from focusing on other policies towards rate policy. I think that if inflation truly has peaked, if oil has peaked, if rates have peaked, then you're going to see, you can open up a window to cut rates at the end of the year.
Does the labor market need to weaken further? I mean, it's not weak now, but does it need to weaken for him to be able to cut interest rates? I
mean, I think we have to realize, we have to look back and see if the labor data actually is honest. We've had 2 years in a row of massive revisions every single year. The later we get in the year, we'll get more clarity on the true health of the jobs market. So it doesn't have to necessarily weaken. I think it just has to be a combination of it's not strong as people think it is, and two, the inflation story probably has peaked. It gives a window for the Fed to cut.
But they're not going to get back to the 2% target this year. So what is going to be the catalyst for them to really have that confidence, given the fact that there are a lot of members on the committee that are concerned that basically inflation prices are still too high and the labor market's not weak enough to have this bias?
I mean, look, there's a whole host of things. I mean, depending on how you look at the data, and you look at real pure cores, you can get down towards mid twos by the end of the year, and into projecting into 2027, you can start to get into the twos. So I think it's not about, and plus, by the way, the Fed's eased in the last 2 years with inflation well above their target, right? So it's more about what's your understanding of neutral, and that's why I think today's we get the dot plot most likely, how the dot plot looks like, and then what is the glide path from this year, which we think they're going to remove the one potential cut that was in the last forecast or projections, and what is the path towards neutral? Because like they've been very gingerly moving up neutral rate to around 3 1/8. Are they going to move that up now at Kevin Warsh's first meeting? That would make no sense. So, like they had to get down to neutral or redefine what neutral is.
Well, that's something people are looking for. What is inflation? If you could choose your inflation, is it an inflation target that we're going to care more about? I'll choose one inflation target. How about anyone who's invested either in Cursor or SpaceX and the new billionaires that have been minted? There's some inflation there. Given the fact that markets have absolutely been on a tear, how does that factor into the Fed's assessment of current conditions?
I mean, look, the going is great when it's going. The question is, how does it look like at the end of the year? And we've had moments where we have these massive euphoric moves like we're in right now, and then they peter out and they burn out. So the question is if the momentum continues and stocks continue to make new highs, yes, then you're building in financial conditions easing, which takes pressure off the Fed to do anything. Or, like, at least in their calculus, it would be less of a need to ease. But that's really a judgment call on where you think markets are going to be at the end of the year.
If you put this another way, is the summer of the bond going to be also the summer of the stock? Because we've seen correlations between stocks and bonds essentially go to one, right? They've been directly correlated rather than inversely correlated as they have been historically. Why wouldn't any additional bond rally just continue to fuel an even bigger move in the equity market?
I mean, for like the long duration type sectors like technology, it probably would, right? I mean, until something breaks that correlation down completely, it probably would have kind of a self-reinforcing mechanism. But I do think that as we get towards the end of the year and we realize that our more optimistic outlook, collectively the market's more optimistic view on the macro is proven wrong, you're going to see the bond market end up winning out versus the stock market.
George, wonderful to see you. Thank you so much for being with us this morning. George Goncalves of MUFG on This Morning, where Kevin Warsh leads his tenure at the Federal Reserve. He was the youngest Fed governor back in 2006 when he first came in. He left in 2011 after the financial crisis. Now coming back at a moment of real question and given a reprieve, as you've mentioned before, AMH, given the fact that we've seen a subsiding in the tensions in the Middle East.
It's kind of a gift to him this week that he kicks off and you have Brent crude trading and holding as of yesterday under $80 a barrel. That is definitely going to be a massive sigh of relief for Kevin Warsh as he greets the press and his colleagues. Bank of America has a note out this morning. Is he a hawk, dove, or none of the above? I love how you've been saying, will the real Kevin Warsh stand up? Because when he was governor and the youngest governor, he was an inflation hawk. And then, of course, during his interview process with the president, he leaned very dovish. I think the world really wants to understand where he sees the economy and the Fed going forward.
Yeah, a lot of change between 35 and, however many years later. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Bonnie Quinn.
Lisa, thank you. Details are emerging of the US-Iran interim peace deal. The draft of the Memorandum of Understanding shows Iran is set to receive sanctions waivers that allow it to sell oil immediately, with other financial incentives deferred. SpaceX overtaking Amazon in value to become the 5th largest stock in the world. Shares closed nearly 5% higher, pushing its market cap to $2.65 trillion. At the stock's intraday high, SpaceX topped Microsoft to briefly become the world's 4th largest stock. The NBA Finals drawing a massive audience of 20.6 million viewers per game, making it the most watched since 1998. Game 5 scored the highest viewership in the series with 24.5 million people watching as the Knicks beat the Spurs to win their first championship in 53 years. That's your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. Did you see people with televisions on their heads and broadcasting it on the walls of buildings?
Yes, my favorite is projecting it onto buildings. But you know what's even better than watching it on TV?
Oh, God. Don't even start it.
Don't
even start it.
Incredible.
She still has the glow. Many days later. Up next, learning the details of the deal.
We just signed a deal with Iran. Here's what it says. Iran will never have a nuclear weapon. In addition to that, the Strait is going to be open toll-free. We were focused on Iran. That's going to be in the rear view mirror.
Stephen Cook of the Council on Foreign Relations joins next. This is Bloomberg Surveillance. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Trying to get a bit of a gain this morning after yesterday seeing a decline led by the tech stocks, led by the memory chips, led by some of the high flyers that we've seen really lead the charge up on up days and lead the charge down on down days today. A rare respite from some of that incredible volatility, at least at the headline level, essentially flat on S&P futures, seeing just a little bit of dollar strength. And this all being led by what's going on in the crude space. Crude essentially flat up about 1/3%, although still far below $80 a barrel on WTI, $76.33. Really notable given how much potentially has to be brought back online. In the yield space, 10-year yields 4.43%. Down just a touch this morning ahead of that Fed meeting. A real question for Kevin Warsh. How much does this actually give him a reprieve, given this concern that inflation's coming from many places? It seems like this morning, everyone's saying, actually, maybe it really is just an oil story.
Potentially, it's just an oil story right now, but you have to think about some of the other price pressures we are seeing in this economy when it comes to the AI build-out. We're obviously seeing it in the financial markets, but we're seeing some of that as well when it comes to the real economy. But this is a gift for him to walk into this meeting and say, look, as many people have said, like tariffs, you can look through energy price shocks. The issue is, of course, and you brought this up, how quickly do we get back to pre-conflict era of 20 million barrels a day floating through the Strait of Hormuz? Yeah. I'm told it's the start of a deal, and it's going to be a little bit messy.
We're getting some details, but really a question of whether this will stick and what exactly is all in that memorandum of understanding. Under surveillance this morning, learning the details of the deal.
We just signed a deal with Iran. Here's what it says. Iran will never have a nuclear weapon. In addition to that, the Strait is going to be open toll-free. We were focused on Iran. That's going to be in the rear view mirror. I'll go over the document with the media in a couple of days.
Here's the latest. The U.S. and Iran planning to formally sign a peace deal on Friday. The interim agreement set to bring major financial relief to Tehran. Bloomberg's Tyler Kendall joins us for more from Evian, France. Tyler, what do we know so far about this MOU?
Hey, Lisa, good morning. Well, according to a draft of the MOU seen by Bloomberg News, Iran is set to be able to immediately sell its oil to market once this deal is signed. For context here, the U.S. has long maintained that any financial relief for Iran would be conditioned and accrue based on progress and whether or not Iran is upholding its end of the deal. But this would be an immediate point that Iran would be able to access, as the U.S. Treasury Department is set to issue waivers for the export of Iranian crude and petrochemical products. In relation to this, the U.S. will also immediately lift its U.S. naval blockade even before the Strait of Hormuz is fully reopened, though the goal, of course, is to get the strait opened within the first 30 days of this ceasefire extension, which we know will take time considering that they still need to clear some mines that are in the strait. The MOU also outlines that there will be financing for about $300 billion that Iran can access in what is being called a development fund to help rebuild the country, though the draft text of the agreement does say that the actual vehicle, the mechanisms to deploy this still need to be worked out and would aim to be in the 60-day negotiating period. It is becoming clear that it seems that the U.S. is trying to use some carrots rather than sticks here to get Iran to the negotiating table for those potential curbs on its nuclear program, as the White House maintains that they are looking for a finalized deal that will include the retrieval of Iran's stockpile of highly enriched uranium, curbs on Iran's nuclear program when it comes to the moratorium potentially on uranium enrichment, and also a very stringent inspection regime. Lisa, I'll put one other thing on your radar that potentially could complicate things. The text of the MOU does say that all the ceasefire will extend to the fighting in Lebanon as well, which would include Israel's front against the Iranian-backed militant group Hezbollah.
Heather Kendall, thank you so much, as always. And we'll be catching up with you throughout the day. Stephen Cook of the Council on Foreign Relations writing, clearly the president was done and grabbed the deal before him. He is going to spin it as a victory, but it heavily favors Iran. This raises the question, why did we even go to war? Stephen joins us now for more. Stephen, why do you say that this is giving a win to Iran, given that we don't really know all the details yet?
Well, we have a fairly good sense of what is going to be in this deal based on what's been leaking out to Bloomberg, to Al Arabiya English, and a variety of other news outlets. And what we've seen so far would suggest that the Iranians will retain their right to enrich uranium. They'll be able to export oil immediately. The blockade will be lifted, although the Iranians are saying that there will be freedom of navigation through the Strait of Hormuz, but only for 60 days, and then they will levy a surcharge on transit through that waterway. Then, of course, there's nothing in the document about dismantling proxies. Yes, giving up the highly enriched uranium, but if they can enrich uranium, they can replace that stock of highly enriched uranium. Basically, the United States walks away from this with a lot of tactical battlefield achievements, but what can only be described as a strategic defeat.
Stephen, I also noticed that there is no language when it comes to Iran's ballistic missile program. Has the Trump administration given up their 3 red lines, which has always been, for years, nuclear, ballistic missiles, and money to proxies?
Yes, indeed, they have given it up. There is nothing that we know of regarding ballistic missiles. The United States and the Israelis did a lot of damage to the ballistic missile program, but the fear is that all of these resources that can flow into Iran, including the revenue from immediately exporting oil, can be devoted to reconstructing their capacity to build ballistic missiles. And it is one of the biggest ballistic missile programs in the world.
So the first point, and Tyler brought this up, according to the text Bloomberg has its hand on when it comes to the MOU, means that this would include a permanent end to the war on all fronts, quote, including Lebanon. Is Israel in agreement with this?
Absolutely not. The Israelis maintain that they will not give Tehran a veto over their security. But the Israelis are in a very difficult position. If Hezbollah attacks and the Israelis respond in a neighborhood of Beirut, for example, the Iranians will threaten to close the Strait of Hormuz once again, putting tremendous pressure on the global economy, as we've seen over the course of this war. But Israelis are in an election season, and Prime Minister Netanyahu is not going to give up the fight in Lebanon, which is actually quite popular among Israelis, as President Trump's popularity among Israelis has dropped precipitously in recent weeks.
There is a sense right now that everyone's buying time. It seems like the Iranian regime is buying time to try to survive. And it seems like some Middle Eastern nations are buying time to create alternative routes from the Strait of Hormuz to export some of their supplies. The UAE this morning saying that they're planning to cut the dependency on the Strait of Hormuz to zero, saying that even if the Strait of Hormuz does reopen, nothing will change that plan. How much is this going to be an interim type deal for months, maybe even years, trying to get enough through while nations in the region figure out workarounds?
Yeah, I think that's a very important point. The Emiratis and the Saudis certainly have options to build their way out of the Strait of Hormuz. The Qataris, the Kuwaitis, the Bahrainis absolutely do not have the ability to do what the Saudis and the Emiratis do, just by geography. So there'll be some countries that will be able to see this as an interim deal, and there are others that will put pressure on it in order to see through so that they can navigate through the Strait of Hormuz. Their economies are absolutely dependent upon it. There is a big question, though, whether we will get beyond this 60-day period of the MOU. There's lots to be worked out here, especially on the nuclear front. That took the Obama administration a couple of years. The president is suggesting that this is going to happen in 60 days. But overall, I think you're quite right, Lisa. The Strait of Hormuz is something that is now seen as a problem for countries in the region, and they're going to do everything possible they can to ease their reliance on it.
20 months. The JCPOA took 20 months. Stephen, how long do you think this could take?
Well, I think it can take quite some time, unless the president really goes back on his red lines. There's every indication to suggest that he will. And the U.S. intelligence community has warned the president that their Iranians are unlikely to give up their nuclear program.
Stephen Cook of the Council on Foreign Relations, thank you so much for being with us this morning. And we will keep parsing through that this morning. If you take a look at oil prices, they are essentially flat to where they were yesterday. I'm looking at WTI right now, $76.23. If you take a look at the beginning of the year, I mean, it's sort of interesting to look at a benchmark to in January when you saw oil prices hovering around that $55 a barrel mark. So we have priced in nearly $20 of premium. How much of that comes out? Do we get back to where we were before? And ultimately, how much of a risk premium, a la what Jeff Curry was talking about, remains baked into these prices?
This MOU is not just about reopening the Strait of Hormuz. According to the document we've seen, point 10 says regarding after the signing of this MOU, the U.S. Treasury is going to give Iran waivers to be able to export their crude. So it's not just that the Strait of Hormuz is reopening, it's the fact that they're going to be helping Iran export Iranian crude. So this is not the maximum pressure we've seen under the Trump administration of the past. And this is all to get the deal across the finish line.
It is boosting at least expectations for a potential easing in some of the pressures on Kevin Warsh, on inflationary pressures ahead of the midterm elections. It has a real moment where we are currently. Is the inflationary pressure coming just from oil prices, or is it a broader base kind of push up? Coming up, Adam Posen of the Peterson Institute predicting a year-end rate hike from the Federal Reserve. Plus, Yahaira Anand with your morning movers. SpaceX, once again, fourth straight day, moving up about 3% in pre-market trading. Shooting for the moon.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
If you just take a look at the broader indexes, it really doesn't give you a sense of just how much action there is under the surface. This morning, we're looking for maybe something of a reprieve from yesterday's declines, although we've really faded a lot of the earlier gains, at least in the S&P futures, down essentially now flat. NASDAQ, though, regaining about 0.5%, flat on the Russell 2000. Yesterday, we did see a decline led by big tech, but most S&P constituents were higher on the day. The KBW Banks Index was at a new record at the end of close yesterday. At the same time, you saw the SOX, the Philadelphia Semiconductor Index, plunging more than 4%. It just shows you the incredible volatility under the hood, where there is not volatility. With the MOVE Index falling to one of the lowest levels of the year, with just a real sense of steadiness, is the bond market. And you can see that this morning with a sense that, yes, yields have ground lower, and they continue to do so, albeit higher than where they were to start the conflict. 10-year yields at 4.43%. That 2-year yield, 4.05%, continuing its inflection lower. And now we're pricing in about an 80% chance of a Fed rate hike for the remainder of this year. Does Kevin Warsh push back? Ultimately, that's a real question. Yes to dot or not to dot. Yes, some of these other questions. Does he reframe the way that we look at inflation? But does he allow this sort of hiking bias to remain in markets, even though we're still with an easing bias, at least on paper, at the Federal Reserve?
Right, and we spoke to Betsy Duke yesterday, former Fed governor, and she thinks actually the statement's going to be completely rewritten, given this is a new Warsh era at the Federal Reserve. But he has, of course, a difficult line to walk. Of course, he's going to have a message to the markets, but he also has to have, because he wants to anchor inflation expectations. At the same time, he's going to have a message to an audience of one. And that's the President of the United States, who obviously is giving him a little bit of reprieve when it comes to this deal. And you see yields lower because oil prices going much lower based on the fact that the president says the Strait of Hormuz will be reopening on Friday. I don't think anyone thinks we're getting 20 million barrels a day floating through on Friday. But this direction is that they want this to get back to pre-conflict levels, even so much that they're willing to give waivers to the regime once the deal is signed.
Take a look at oil prices, as Anne-Marie was just talking about. You can see them just flicking higher a touch this morning, but still far below where they have been. You can see WTI, $76.25. Brent crude at $79, with the IEA seeing a potential supply glut coming as soon as 2027. 3 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with SpaceX heading for a fourth straight session of gains with a move of 3.3% in the pre-market. The stock has surged over 50% since it IPO'd less than a week ago, marking a remarkable start to its life as a public company. The rally has pushed SpaceX to a valuation bigger than Amazon's, and Microsoft is the next mega cap that it could surpass if this continues. Meanwhile, we are seeing a rebound in the chip stocks with names like Intel, Marvell, and AMD all higher in the pre-market after a day that saw the Philadelphia Semiconductor Index fall 5.7%. Marvell was the biggest decliner amid that pullback, now getting a 3% boost. Intel also seeing a boost up 4% after it announced production of its most advanced chip yet, as rumors continue to swirl about a future relationship with Apple, and this could be a step toward that. And we end on Lionsgate. Those shares are falling 5.9% in the pre-market after Netflix came out and disputed reports that it was interested in acquiring the studio. The stock had rallied on that speculation, giving all that back. But the idea was that Lionsgate could emerge as a potential target as we continue to see this wave of consolidation across the media industry after seeing Fox saying that it plans to acquire Roku, saying that earlier this week. Lisa?
Thank you so much, Yahira. On our radar this morning, the interim deal between the U.S. and Iran set to bring major financial relief to Tehran. The deal will allow it to begin exporting oil immediately and give it access to a $300 billion development program. Elsewhere, SpaceX soaring out of the gate in its first 3 days of trading. Shares rallying a mere 49% since its IPO. Its valuation topping $2.6 trillion, overtaking Amazon as the world's fifth largest public company. And top AI executives are gathering alongside world leaders at the G7 in France. CEOs from OpenAI, Anthropic, and Google taking part in a lunch today. As AI rises to the top of the global agenda, the U.S. and the move on Mythos 5 and Fable 5 really setting a shockwave across the world, saying, hold on a second, this is a sovereign issue, not just potentially a technological one.
And already there was concerns in Europe about having too much dependence on US AI companies. Now that's been absolutely heightened, given the fact that you have these export controls on these two models coming out of Anthropic. At the same time, did you see the semaphore report about Commerce Secretary Howard Lutnick and Treasury Secretary Scott Bessent are talking about and trying to figure out how actually an equity stake or some sort of nationalization of Anthropic would look like. So Treasury Secretary favored using equity in AI firms to seed Trump accounts. The Commerce Secretary, Howard Lutnick's preference was that any equity be directed to a type of sovereign wealth fund. How is this the beginning of more we're going to see when it comes to the AI space from this administration?
There are two separate issues here that are important issues. On one hand, it's how does the broader public participate in what seems like a sea change that could potentially have malicious effects on the labor market, could potentially lead to some changes in composition there. The second thing is national security and questions about what this AI can do with respect to eating into some of the software holes and other bugs that this software is able to discover that other people really haven't. And those are two separate issues, a question of what this does to national security, a question of what this does to sort of popular support and popular prosperity. And both of those are at the top of mind this morning.
Well, if it's a national security issue, where are they with the other AI models? Where are they with OpenAI and XAI and some of these other models we see that everyone in the market says they are basically competing at the same sort of levels? Are we going to see export controls on them, or is this an Anthropic issue in itself? And we know that Dario Modi is having a lot of problems with the DoD. The DoD has labeled Anthropic a supply chain risk. So this does feel a little bit messy. And does it just get, figured out because the United States government says we're taking a stake in it?
Well, meanwhile, we're going to hear maybe from Kevin Warsh what he expects to see from the AI outcropping, counting down to that Fed rate decision at 2 p.m. Chair Warsh's first press conference at 2:30 p.m. Adam Posen of the Peterson Institute writing, the statement will shift to a neutral bias. They won't hike before the election. They will hike in December 2026 and January of 27. Adam joins us now for more. Adam, always great to see you. Thanks for being with us. So what are you expecting to hear today from Kevin Warsh?
Thanks, Lisa, to you and Anne-Marie for having me back. I think Kevin is going to do, Chair Warsh is going to do something that he's very good at, which is say a lot of things that sound deep about monetary policy while not committing to anything. And I'm not saying that to be dismissive. That kind of worked for Greenspan, and Kevin has said repeatedly that's a model he has some sympathy for. As you quoted me, I think they're going to move the statement a tiny bit. There's the one passage everybody interprets for the bias, and I think they're going to move it to a neutral bias. In contrast to what you cited a minute ago, I don't see any way that they rewrite the statement in this amount of time. Everybody knew Kevin was going to be chair. Everybody knew the meeting was coming up. But you haven't been able for the chair to have more than a bilateral meeting with each member at best. So I can't imagine they've rewritten the statement.
Do you think that he will try to make a bold statement by, say, not putting a dot on the dot plot, not putting forward some sort of projection? Or do you think that he's going to try to toe the line and gain popular support on the FOMC?
I think both, actually. I think he is rightly, in my view, going to downplay the dots. The dots now, and have been for some time, like the monetary aggregates were after the 80s. They were something that nobody wanted to take away, even though they were not a predictor or indicator of much of anything. So I think it's entirely justified for him to say, I'm not putting up a dot. We're going to change that. But I also think that is not so bold. I think that's a reasonable communications improvement, just as his pressures to keep the cacophony of too many members speaking at once will kick in. But I don't think he's going to want to rock the committee. I expect him, again, to sort of dodge things and talk about not the meaning, not the word transitory, but he has the gift, in a sense, of the Iran deal, being that he has legitimate reason to say, let's wait and see, and the committee will live with that.
Yeah, and he has legitimate reason to say we can look through, at least right now, the energy shock price. So you think they're going to hike this year. How offsides is this going to put Kevin Warsh with the Trump administration?
And Marie, I actually think it's a legitimate argument in theory to look through, but I don't think it's right in practice. As we've discussed before, as Peter Orszag and I have written about, there's a lot more inflation in the pipeline. We're still seeing the import prices go up. We're still seeing the lagged effects of tariffs, and the lags are because companies had to make really hard decisions. Similarly with migration issues, we're seeing a labor market that the Fed has repeatedly underestimated for 2+ years now. And we're seeing some erosion of inflation expectations. So I think he will argue that they can look through it. He will argue that productivity growth is going to disinflate, which for reasons you've discussed with others, doesn't seem imminent to me. But in the end, I guess the rate hikes are going to be inevitable. Chair Warsh, I do think, knows enough Fed history and cares enough about being a central banker that he will, in the end, say, I'd rather be Volcker or Greenspan than Arthur Burns. And B, that whatever President Trump says, and he may say some awful things, it will not be seen as effective if Trump tries to use lawfare against a second straight Fed chairman, particularly if inflation is rising.
Adam, what do you see as Jay Powell's role going to be, given the fact that he is sticking around?
I must admit, that's the forecast I got wrong and I'm surprised by. I am very surprised former Chair Powell decided to stick around. And I think we have to take it at sort of face value. There's something there we don't see, which is that the lawfare threat to him and the Fed over the costs of the new building, making it criminal rather than political oversight, and the ongoing non-resolution of the, in my opinion, totally unjustified attack on Governor Cook. Jay obviously thinks there's more threat there than we realized. I expect him to stay totally mum on monetary policy issues.
Adam, just real quick here, do you expect to hear anything on the balance sheet today?
I expect some vague rhetoric latest on the balance sheet and commit to shrinking it, but maybe the most you would get is him saying we're going to have a study group on it. I don't expect any firm commitments of any kind.
Adam Posen, thank you so much for being with us this morning. We'll all be watching, I'm sure. Adam Posen there of the Peterson Institute. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. BMW slashing its profitability forecast for the year due to worsening demand in China and negative sentiment from the war in the Middle East. The German automaker also expanding a cost-cutting program, leading to a one-time negative impact in the second half. Microsoft is considering using Chinese company DeepSeek to power its Copilot co-work. Axios reporting the company is looking for cheaper alternatives to Anthropic and OpenAI as bills for compute skyrocket. And Lisa spoke to RBC CEO Dave McKay about the growing demand for artificial intelligence.
The push for AI and capacity, compute capacity, memory capacity is driving an insatiable appetite for all forms of capital, debt and equity.
Okay, going on to say RBC has the capacity to meet leading lending demand for the AI build-out. And that is your Bloomberg Brief. Lisa.
Thank you so much. Right now, there is a bilateral meeting happening between President Trump and Egypt President Abdel Fattah el-Sisi as they meet at the sidelines of the G7 summit. We want to listen in.
Of your kind person, and thank you very much for allowing this opportunity despite all of the hard work and very busy schedule that you have, Mr. President.
هبدأ كلامي بالتهنئة والتهنئة الكبيرة جدا جدا على ما أنجزته فخامة الرئيس فيما يخص استعادة السلام في الشرق الأوسط والاستقرار.
Well, let me start by expressing big congratulations for the breakthrough that you have achieved, Mr. President, of restoring peace to the Middle East.
اسمح لي فخامة الرئيس إن بمجرد الإعلان عن هذا الاتفاق كان في تقدير كبير جدا لفخامة الرئيس، ولكن هذا التقدير زاد والإعجاب زاد في إدارة أزمة بمثل هذا المستوى، وإحنا مستنيين الإعلان عن هذا الاتفاق حتى يتم توجيه الشكر والتقدير علنا من خلال مؤسسة الرئاسة والدولة المصرية لشخصكم لهذا الاتفاق الذي أنجزتموه.
Once the deal was announced, there has been great appreciation, but the admiration has increased in this marvelous management of such crisis at the highest level.
Thank you.
We're waiting for the deal to be declared as a final deal, so that we can react appropriately and state our positive views and perspective of that great deal from the presidency and on behalf of the Egyptian people.
Up next, we'll be talking more about this and we'll be tracking it throughout the morning, particularly given its timing ahead of that MOU and the announcement of a potential signing of that deal on Friday. Key to hear both of those commentaries plus questions. Up next, we'll also be looking at SpaceX.
It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing.
They're totally overvalued, and it's so obvious. When you have these great winners, you have to let them run.
We're at the beginning of a new frontier here.
Henry Schwartz of the SEBI joins us next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Coming into another day of volatility chop, we saw earlier futures inflecting higher. They're essentially flat on the S&P, although still maintaining about 0.1% gain. You're seeing a much bigger gain in the tech space with NASDAQ leading the charge once again. A little bit of, essentially stasis in the euro-dollar cross 116. 10-year yields just a little bit lower, nudging lower ahead of that FOMC meeting and press conference of Fed Chair Kevin Warsh later this afternoon. 10-year yields 4.43%, and crude essentially flat here at $76.28, with a real eye toward that MOU and what will happen on Friday. Under surveillance this morning, betting on SpaceX.
People are playing a little bit of hopscotch amongst the AI winners.
It's SpaceX, so it's Elon Musk, so it's also all of the things that Elon Musk is doing.
They're totally overvalued, and it's so obvious. When you have these great winners, you have to let them run.
This company kind of feels like a growth company on steroids.
We're at the beginning of a new frontier here.
Here's the latest. SpaceX shares rising in their first 3 days of trading. Its market cap topping that of Amazon, making it the world's 5th largest stock. Options trading kicking off with a record volume. Henry Schwartz of SEBI writing, volatility skew indicates a high degree of upside interest, aka speculation, and is sharply inverted with higher upside call volatilities. Henry joins us now for more. Henry, can you just give us a sense, and welcome, of what yesterday was like, given that it was the first day of publicly listed options trading on SpaceX?
Well, absolutely. I mean, the options market's been setting records actually for 6 straight years. And I think everybody knew SpaceX was going to be big. And, we used an accelerated listing process to get options just 3 days after the IPO. And so that first day activity, we saw 1.77 million contracts trade. It was very interesting, basically, because we saw a very balanced flow between buyers and sellers. I mentioned that the volatility skew favors the upside. So basically, it implies a distribution where investors are actually more worried about a move to the upside than to the downside. We call that kind of a speculative setup, but we've actually seen a trend this year. About a third of the listed stocks out there kind of have this upside skew, which is actually what we saw during COVID as well. So it's not kind of unheard of, but it really does tell you what investors are thinking.
How are people using options right now? Are they using it to hedge positioning, or are they using it as retail investors to just get in as early as they can and bet, as you've been mentioning, to that upside volatility?
Well, it's a mix. So in terms of the larger trades, and we did see some very big trades yesterday, some 7,000 contract trades, which equivalent to 700,000 shares. We saw some big hedges. So we saw basically people buying puts and selling calls. And when the volatility shape favors the upside, that collar strategy is actually very attractive, because in some cases, I looked actually last night at the end of the day in the July options, you could buy the 180 put and sell the 235 call for a credit, okay, and with the stock around 201. So basically, you can actually, in that case, you keep about 18% of the upside and you get a 10% downside hedge. That's the power of kind of this upside skew. We don't see it very often, and you almost never see it in kind of at the index level.
How does this volume compare to what you've seen in other mega IPOs prior?
So I went back, and the best example I could find was Meta, which was Facebook back in 2012. It did about 370,000 contracts, so super highly anticipated. That was around 2.5% of the market at the time. And actually, the volume that we saw in SpaceX yesterday was around 2.1% of the total market. So it was actually kind of comparable. I think, though, that seeing that we're seeing basically put buyers and also kind of people positioning, as you said, the other way to use options is basically for upside exposure and leverage. We're seeing kind of both of these things at the same time. It was in the top 3 yesterday, and I think it's probably going to stay in the top 2 or 3 for the rest of the year.
How has some of the retail trading changed the nature, just more broadly, of markets, of institutional investors that don't want to bet against them, of retail investors that follow certain popular names and want to get in, and different metrics than, say, traditional Wall Street analysts?
Well, retail used to be kind of a pretty small segment of the listed options world, maybe 10, 15%. That really changed during COVID. So now we can look at the data. We can see basically coming out of the big retail brokers, brokers like Robinhood and Schwab and Fidelity, they make up about 55% of the listed options market now, which is really kind of amazing. And they also show a very noticeable preference for short-dated options. So you've heard about the zero DTE phenomena that's now been running for 4 years. So I wouldn't call it it's now very well established. In SpaceX yesterday, about 58% of the activity was in short-dated options that happened to expire this Thursday. Now, there's not even weekly options yet in SpaceX, although I believe we're going to see those very soon. And then, we've recently rolled out Monday, Wednesday, Friday options in some of the super liquid names. It looks like SpaceX is going to be a super liquid name, and so I expect we'll see that as well. But retail loves to trade the shorter-dated options. They're lower priced because they have a shorter kind of time span, and they also really let traders and investors position for exactly what they're expecting within the next, sometimes within the next hour.
Well, if someone has a better sense of what's going to happen in the next hour, honestly, kudos to them. Henry Schwartz, thank you so much for being with us. Henry Schwartz of SEBI here on SpaceX. We are getting some headlines from President Trump at the G7 summit in his discussion with the Egypt President El-Sisi. Emery, talking about how some of the reporting is false, particularly the $300 billion fund for Iran.
Right, and if you look at the memorandum of understanding, the text that we have, you could see at point 6, it says that there's going to be $300 billion in financing when it comes to the rehabilitation of Iran. The president also says this Iran MOU is not final. So are they still tweaking and working out some of these details? Of course, once it's signed, we should be able to see the text, and the president's going to have to answer a lot of questions. As we heard from Stephen Cook, this doesn't reach all of the U.S. red lines.
Yeah, well, there also are questions about what is and isn't accurate. President Trump saying that the U.S. is not investing 10 cents in Iran. They're not having to fund. They're not having a fund to invest in Iran. Is this about the U.S. financing of it? Is it about the access to financing by Iran? Clearly, it comes as there's some pushback. I mean, that's also part of this from within his own party about what exactly was conceded.
A lot of pushback, and a lot of individuals doesn't think it goes far enough. The U.S. made too many concessions, and obviously something the president does not like to hear because he got out of the agreement. A lot of people are likening this to the JCPOA.
We'll keep tracking those headlines as they come out. We'll also keep tracking SpaceX, as well as the rotational churn under the hood of this market. Coming up next, Mike Wilson of Morgan Stanley seeing that churn continuing. Bob McNally of Rapid Energy on what to expect for oil prices. Former Boston Fed President Eric Rosengren and Holly Liss of BTG Pactual. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
At any point in your tennis career, did you say, I've had enough and I'm just going to retire at the top? Do you ever worry about that problem, staying too long?
It's a great question, and it's one that I think every athlete finds a different answer to. Mine came a little bit later than when I would have liked. I think stubbornness was a great quality that shaped a lot of my victories, but in the end of my career, I think it became a flaw because I was so stubborn to get healthy, for my shoulder to recover. I was also at an age where just my body didn't recover as quickly. And so for a year or two, that stubbornness got in the way of other great things in my life.
What would you say is the thing you're most proud of having done as a tennis player? Was it winning Wimbledon? What was the highlight of your tennis career?
I'd say consistency. I think consistency is you can have results and they could, come at various times in your career, but I was consistent for many years, and you have to show up. You don't just show up to play first round of the finals, but you have to show up for press conferences before every match, before every tournament, and just the consistency and the mental wear and tear of showing up week in, week out. So I felt like I consistently showed up for my team, for my sponsors. As I look back, I'm proud of that.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We continue to think third inning of this AI revolution.
It's still a bull market.
We're expecting a broadening out here.
Lower oil prices and lower inflation expectations is going to fuel, hopefully, more of a rotation.
The market is sensing an economy that's been very resilient.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. As we try to see a little bit of a gain following yesterday's declines, an incredibly volatile market with so many different pistons firing. On one hand, you have a question about Kevin Warsh, the new Fed chair, who is going to be stepping to the helm of his first meeting at the head. Later this afternoon, he will be giving a press conference following the FOMC's decision. Plus, you're potentially going to get some sort of decision on Iran and the United States. Right now, markets trying to shake it all off, looking through the noise, trying to take a look at positive gains in the tech-focused sector once again. Yields just a touch lower ahead of that Fed meeting at 4.43%. Crude prices, basically flat around here. Yes, they're up about 0.5%, but this isn't exactly anything to write home with, given the WTI trading at $76.36. A key question here, Anne-Marie, going into this meeting later this afternoon and then on Friday is how much do lower oil prices really take the temperature off Fed Chair Kevin Warsh at a time when ultimately he has to make his stamp, given that this is his first speech?
Well, we just heard from Adam Posen, even though he thinks there's so much more inflation built into the system right now and he cannot look through the inflationary pressures. At the moment, in the short term, he can look through the energy price shock and say, well, look where oil prices are today. They're not $100, they're not $120 a barrel. We heard from Citigroup yesterday, Andrew Hollenhorst was on the program, and he thinks this is definitely going to help Kevin Warsh have a bit more of a dovish tilt today. And that's what everyone wants to hear. They want to hear how he speaks about the economy right now. And where is his tilt, since obviously they're going to keep rates on hold?
Well, SpaceX also rallying as the market seems wide open to IPOs of all types. Mergers and acquisitions are on fire. A sense that the financial markets are looking beyond and are not exactly looking for anything other than a Kevin Warsh that isn't going to stop the party. I mean, at what point does that enter into the consideration for this Federal Reserve?
Well, I think the Federal Reserve is going to be looking at the financial markets and saying, wow, they're off to the races. But of course, they also have to deal with an economy where, the labor market is okay, but the lower end of the K is still struggling, somewhat resilient. But after survey and polling you see, people are saying that they are having to dip into savings, and it's becoming much harder to keep up with price pressures.
Right now, we're looking at a market that on the surface looks fairly calm. Under the hood, keep watching some of the components. The KBW index, the bank index hit a new record yesterday. You saw more stocks gain than lose, even with declines On the benchmark indexes, you saw the semiconductor index plummet more than 5% yesterday. This morning, a bit of a rebound, although how much does this churn really indicate the path forward? Coming up, Mike Wilson of Morgan Stanley saying the bull market remains intact. Bob McNally of Rapidan Energy on uncertainty surrounding the deal between the U.S. and Iran. And former Boston Fed President Eric Rosengren as Chair Kevin Warsh presides over his first rate decision. We begin this hour with stocks rising, crude holding below $80 a barrel. Investors betting the U.S.-Iran deal to reopen the Strait of Hormuz will ease inflation concerns. Mike Wilson of Morgan Stanley writing, if there is a stable resolution in the Middle East, the bond market might walk back the Fed hike it's currently pricing in. Our conviction in the current bull market is intact. Mike joins us now for more. Mike, always great to see you. Thanks for being here. Let's start there. This idea of what a bull market means. Does it mean stocks just go up and to the right, or does this mean that there is some sort of cyclical undercurrent that shows an economy that truly is strengthening?
Well, let's go back to why we're in a bull market. It's all about the recovery from the rolling recession from a year ago, this operating leverage story. It's an earnings-driven bull market, right? So last year we got the multiple expansion in advance of, predicting that was going to happen. And as you recall, going into this year, there were a lot of kind of boo birds on the economy. People were very nervous about earnings. And we took the opposite view. I mean, nominal GDP is booming. It's 7 to 8%, and that's in place. So what's going on now is the multiples coming down, over the last 6 months, but the earnings have been so good that the market can still go up. So the next phase of the bull market at this stage typically is multiples are flat to down. Earnings come through as expected, but that can drive the stock market higher. And you get rotations to the areas where that earnings growth is underappreciated. And we think that yesterday's action is some evidence that maybe we're going to have that next rotation. We've already had several rotations this year, and we think that next rotation is in some of the areas you mentioned, like regional banks or consumer goods, which are asymmetrically, positively, inspired by oil prices coming down.
This has been the argument that the rally in the equity market is entirely driven by fundamentals. And then SpaceX happened. How much does that kind of torpedo some of this thesis?
Well, look, I mean, markets are driven by fundamentals and animal spirits at the same time. I mean, you can't separate the two. They work in harmony. And so, yeah, I mean, is it a little frothy right now in certain areas? I mean, not necessarily. In areas, there's a lot of leverage in the system in semiconductors, as an example. And that's coming out now a little bit. That's something we wrote about 2 weeks ago. To me, that's a healthy development as long as there's some place to go to, right? And so if there's no place to go to, then you can have a much more serious downturn that can turn into something that's more severe. We don't think that's happening. We think this is a normal transition. I want to go back once again to the beginning of the year when people were really, kind of pessimistic about growth. All we've seen this year is one rotation to the next from commodities. What happened this year? The Fed started printing money again, right? They did the RMP. That went into gold and silver stocks. Then it went into metals and rare earths. Then it went into energy stocks. Ended up in semiconductors. What do all those have in common? They're all commodities. So we've had a commodity rally basically bouncing around. And we think now we're going to get that broadening out story that was kind of going in January and February. Then it was halted by the war in Iran and the oil price spike and the repricing of the Fed. That now is subsiding. And so we can rotate back to some of these areas, pro-cyclical areas where the earnings are quite good, but they're underappreciated by the market.
What if we get a hawkish Kevin Warsh? Could that hurt the rotation?
Well, define hawkish Kevin Warsh. I mean, there's a couple ways to think about that. I think one is on the rate side, which I think is unlikely. The other's on the balance sheet. And we don't really know yet how he's going to want to position that. What I would say, and we wrote about this past week, is we already know what's happening, which is that, Jay Powell left him a nice little package, which is that we're basically already seeing a deceleration in the RMP. So this is I've spent the last 2 years painstakingly trying to follow liquidity because that has been the main driver of kind of the animal spirits. And it was very positive at the beginning of the year when they restarted the RMP or asset purchases, and you had Treasury buybacks as well, and the SLR, increased some capital from the banks. That now is decelerating, right? We've gone from $40 billion a month in RMP to $10 billion a month. So that's a deceleration that's already in place. He's inheriting that. Is he going to come out and say, hey, we're going to increase that? Probably not. Is he going to say we're going to kill it? Probably not. But that deceleration is still in place. So I think we already know the answer to the test, We're having a deceleration in liquidity in the moment, and that, to me, as we've been talking about, is sort of that's where you can have this sort of summer chop and summer correction. Like in this rotation yesterday, you said it already, we're getting a rotation in a down tape, That's what I expect. We're going to get a down tape, but we're going to get a rotation, and that's a signal that we're seeing a leadership change.
What's the next risk on the horizon? The market was able to get through tariffs. Obviously, they're looking beyond now the conflict in Iran. For the rest of the year, is it just that potentially, I mean, the president says if he doesn't like what he sees in Iran, he'll start strikes again. Is that what potentially could be disruptive?
Well, I mean, your viewers probably won't like me saying this, but the markets moved past the war. You know, they moved past tariffs a year ago. I remember in this time last year, June of 2025, everybody was still harping around tariffs, and we had said a month before, like, we've moved past tariffs. In this war, which is amazing, okay, and I didn't expect this, is we just learned how much supply is out there, okay? I mean, like, if you had the situation, this is a perfect storm. If you were an energy bull at the beginning of the year, by the way, energy stocks did incredibly well, and then they peaked literally the day of the attacks. So if you think about this event, you can only get to $125 in oil. And if you inflation adjust that, that's so far below where we were in the Russia-Ukraine war that began, 5 years ago. So that, to me, is just a really strong signal that the world is very resilient in terms of finding energy supply. China's a big part of that because of all the storage. But to me, it's a very bearish view for oil going forward.
You're pointing to something that's fascinating. Do you think that the trade in terms of bullish on commodities is ending? The idea that that is going to be the outperforming sector in the rally, which has worked, at least year to date?
Well, no, I think what I'm saying is that there are multiple types of commodities. And the reason why commodities have done so well this year at different times is because of the liquidity picture, which was so robust. We've written a lot about this the last 2 weeks, which is we think that between the Fed, the Treasury, and then the deregulation, they've added over $500 billion of liquidity to the system. So the whole rates argument is a sideshow to me. It's just a sideshow. I mean, it's been neutral. Yes, to date, has the Fed been less dovish than expected at the beginning of the year, including me? Yes. Have they been way more dovish on balance sheet? Absolutely. And that has trumped, the negativity. Now, having said all that, multiples have come down this year. Okay, so multiples have come down because we're later in the earnings cycle. We're going to get our peak rate of change in earnings revisions too. So the combination of peak rate of change on earnings revisions, peak rate of change on liquidity tells me that we're in a corrective mode right now.
I guess another way to ask this is, do you expect that Fed Chair Kevin Warsh to pull back some of this liquidity in the face of these pockets of froth, as you called them?
It's already happening. It's already happened. In other words, the path has already been set. We're having a deceleration, okay, or a deceleration on the rate of change of liquidity being provided to the market. That's what the market's picking up on now. The question, which you may or may not answer today, is what are you going to do going forward? Are you going to be active using the balance sheet in helping funding markets stabilize, which is what the last Fed chair did, Jay Powell, which is still there, by the way, so they're probably having a conversation about this. So, I think they will ultimately. Like, in other words, I think the Fed and Treasury will provide more liquidity if they need to. But right now they don't need to because bond volatility is totally under control. Funding markets are totally good. We're seeing issuance of equities and credit being absorbed. So they don't need to do anything right now. Why spend your bullets? But so there's a lesson in that. We kind of need the markets to pressure them to provide more liquidity. And the reason why we need more liquidity is because the economy is booming, okay? I mean, we're growing 7 to 8% nominally. That absorbs a lot of capital. Money supply is only growing 6%. So that money's got to come from somewhere.
Do you think that the market could still hit your 8,000 target for the S&P by the year end if you do see a rotation away from some of the hyperscalers, away from some of the semiconductors, given how much they've rallied, given the proportion of them into the entire rally, and given how small the relative economy has gotten in response?
Yes, because I don't expect these stocks to correct more than whatever, 5-10%. I mean, they're going to correct and then they're going to come back. Like, I don't anticipate that this is the end of the AI CapEx cycle or the end of these stocks working. I'm just saying the relative outperformance doesn't make sense to me, given the relative earnings revisions in these other areas. And by the way, just a reminder, that happened at the beginning of the year. At the beginning of the year, these stocks were all underperforming. So, it's just the hot dot becomes all, the attention of the market goes right there. And I like to try and think 6 months in the future. Like, I try, my job is to tell you what's going to happen, not what is happening. Okay, that's harder. And so people don't like to do that, but I try to do that. And I'm telling you that I think we're going to get a rotation, but it doesn't kill the bull market.
Mike Wilson, such great perspective. Thank you so much for being with us. Mike Wilson of Morgan Stanley joining us here in New York. Right now, let's get you an update on stories elsewhere. Here's your Bloomberg brief with Vonnie Quinn. Vonnie.
Lisa, thank you. President Donald Trump telling reporters at the G7 summit reports of a $300 billion fund for Iran are false and that the U.S. will not invest, quote, 10 cents in the country. President saying the memorandum of understanding reported by Bloomberg is not yet final, and he will share more details of the deal in a press conference today at 10:30 Eastern. Goldman Sachs marking an M&A record. According to Deal Logic, the bank has advised on more than $1 trillion worth of deals so far this year. That's the fastest any bank has ever reached the milestone. Democratic Senator Raphael Warnock criticizing Elon Musk's trillionaire status.
I think news of the first trillionaire in the world is not good news. I think that's bad news. It is a bright indication of growing wealth inequality in this country.
Warnock going on to say the tax system is structured for people like Elon Musk. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vani. Up next, pushing back on the details.
It's a memorandum of understanding, and if I don't like it, we'll go back to shooting at them. We'll go right back to dropping bombs right smack in the middle of their head.
Bob McNally of Rapidan Energy Group joins us next. This is Bloomberg Surveillance. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
A lot on deck today with the first FOMC board meeting for Kevin Warsh as Fed Reserve Chairman. We're going to be getting that later today, and right now markets are pretty calm. S&P futures up about 0.1%. Real stasis in the Eurodollar cross at 116. 10-year yields inflecting just a little bit lower, 4.43%. And crude hovering around that $76 mark after plummeting from near $100 a barrel not so long ago as people look to Friday with that memorandum of understanding being called into question this morning, a question about how much this truce and, frankly, this resolution to the conflict can stick.
Well, we heard from the president in the last hour, speaking alongside the sidelines of the G7 in bilateral meetings, and he's basically saying he doesn't like what he sees out of Iran and the regime, that he's willing to go back to strikes again. So how it's been described to me is that it's the start of a very long process, and it's going to be a bit messy.
Yeah, under surveillance this morning, pushing back on the details.
No, it's not final. It's a memorandum of understanding, and if I don't like it, we'll go back to shooting at them, dropping bombs on their head. If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head.
Here's the latest. President Donald Trump returning threats and pushing back on the details of the memorandum of understanding with Iran. Trump saying the deal is not final and fighting could continue. Bloomberg's Oliver Crook joins us now from the G7 summit in Evian, France. Ollie, what's the sense there on the ground in terms of what the resolution is and what some of the allies, how they feel about it?
Well, I think that overall everyone is going to be very relieved to think that, there is at least a window here for the end of the kinetic part of this war, the potential reopening of the Strait of Hormuz. The Europeans have put their hands up again to say, listen, that we are very happy to be active in the participating in the demining process of the Strait of Hormuz. This is something we understand from our sources that the United States has been receptive to. But of course, they're only willing to do that once you have a final peace agreement that they can feel is sturdy and that they can feel is reliable. And comments like that from the President of the United States potentially undermine some of that faith. In terms of how the Europeans feel more broadly about how sound this architecture is, whether or not this is better than the JCPOA, and you'll remember the Europeans were actually involved intensely in the negotiations on that. They're really coming back at the end of this. If the United States wants to use financial incentives, as it seems the 14-point memorandum is really leaning on, the Europeans will have to be a part of that conversation too. I think that here there are a ton of questions from European allies about how Trump is exactly seeing the so-called new regime in Iran. He said basically that the Iranians are on their third regime now, that of course the Iranians don't see it as a new regime. And there's some real questions here, I think, about how docile, how compliant, how willing the Iranians are going to be to comply with the wishes of the United States just for some of those financial rewards. Of course, the Iranians have had sanctions on them for a number of decades. And of course, the supreme leader, the new one, almost his entire family has been wiped out by the President of the United States. So I think a great deal of a lot of sort of optimism at the front end of this conversation and a lot of skepticism and a lot of questions on the back end.
Oliver Crook, thank you so much for being with us. Ollie there in Evian, France, for the G7 meeting. Crude, meanwhile, holding below $80 a barrel following reports that the U.S.-Iran deal will reopen the Strait of Hormuz. Bob McNally of Rapid Energy Group writing, even if Hormuz tanker traffic resumes shortly, the risk of a summer or fall oil spike has not completely disappeared. Bob joins us now for more. Bob, great to see you. Thank you for being here. Let's just start with the move so far. Have you been surprised by how much of the risk premia have been taken out of oil markets since the initial discussions of some sort of resolution?
Hi, Lisa. Yes, Rapid and I've been much more successful at predicting this crisis and analyzing it well before it happened than we have how prices behaved since it started, really. I think it's oversold. I think the market continues to have a strongly optimistic bias toward this crisis. President Trump has validated that with what looks like now a signed MOU. We have to see the details. But yes, I think I'm still surprised, and I think it's unwarranted. And I think a lot of this sell-off is going to retrace when those inventories keep drawing in the coming weeks and months.
The view on markets from markets, Mike Wilson of Morgan Stanley was just on, and he said what we've learned throughout this conflict is just how well supplied we actually are, that actually there's plenty of oil sloshing around. The reserves in China in particular have been incredibly robust, not to mention the others. Why don't you believe that's enough?
Well, that only explains how we skated by the last few months. What we have to wait for now is when the shortages start to appear in further inventory declines. On a seasonal basis, we are at 11-year lows in U.S. gasoline stocks, 29-year lows in distillate stocks, and our SPR is at 43-year lows. And we're going to be soon, IEA is reporting we're hitting new multi-year lows in commercial inventories. Lisa, I see this almost as an echo of 2022, when the market mispriced the Russia disruption. Back then, it was pessimistic. Crude oil prices roofed in the first half of the year, despite 2 SPR releases, because the market believed we were going to lose 3 or more million barrels a day of Russian supply. But in the second half of the year, when the data showed that didn't happen, Russian supply was not disrupted. It was reshuffled. Prices aligned. Now the market has taken a very optimistic view of the largest actual disruption. We've lost 3 or 4 times what we thought we were going to lose in 2022. So it could be that all of us barrel counters just got it wrong. But I think there's a mispricing here. And yes, we were well supplied as long as we destock and as long as China went on a crash diet and stopped importing crude oil. It's like holding your breath, though. you can do that for a while, but you can't do that on a sustainable basis. Eventually, you got to exhale, you got to eat, you got to drink. And when Asia comes back to buying, as we get in the high demand season here in the summer, I think oil prices are going to head up.
Bob, when it comes to the IEA, they put out a report saying the impact on oil demand will be much deeper this year, but they're seeing a supply glut in 2027. Do you agree with that assessment?
Yeah, our base case has assumed that Hormuz would start to reopen in July. And in the coming months, we will see Gulf producers restore production, and we will have surpluses even by the fourth quarter, possibly. But those are surpluses. I wouldn't call it a glut. We are going to be refilling stocks, commercial, strategic. China can turn on a dime and start importing again 1.2 million barrels a day. 1.5 million barrels a day. So I don't think we have a glut in the sense of massive oversupply that OPEC Plus will have to cut under necessarily. I do think we'll have surpluses if the Hormuz recovery happens.
How many barrels do you see getting out every day now?
Well, on an average basis, so on any given day, it could be 7 million barrels a day, depending on how many VLCCs are through. We estimate a little more million barrels a day on a sustained basis is getting out now, but that number is going to go up. The U.S. has been successful at getting more ships out, and we're learning about that. So there's upward skew to that forecast. We could probably be hitting 3 million barrels a day on a sustained basis, say over a week or two.
If Iran were to put oil back in the market, how much would that affect your forecast in terms of just supply increasing much beyond what you've currently priced in?
No, that's aligned. We think that we've had the view, 70% probability, that in July, Hormuz would be open to freedom of navigation, more or less. And so Iran will start reloading quickly. They haven't had to shut in too much yet. And we'll start to disgorge the inventories. And then we'll see if the Gulf producers, how quickly they decide it's safe to restore their shut-in production. So Iran coming back fits with our forecast and perfectly.
Bob McNally of Rapid Energy, thank you so much for being with us this morning. Can you imagine, Emery, if that's part of what ends up happening if the U.S. and European nations start restocking their oil supplies with Iranian fuel?
That would be very much so unbelievable under a Trump administration that was obsessed with maximum pressure and making sure that Iran is under serious sanctions. I imagine all that Iranian crude, though, is going to go back to China.
Right.
Lion's share of the Iranian crude goes to China now. And Bob makes a very good point. What's going on right now is China is not buying at the rate they usually buy and import. Their thumb is on the scale. If they start buying once again, that happens this summer, you could see an elevation in prices.
Yeah, a lot to be determined as we do see oil prices stay below that $80 a barrel, with WTI trading just some $20 above where it was at the beginning of the year. Still a significant premium. Whether that premium is too high or too low, subject of real questions. Of course, it also is a question for inflation. How much is this the sole reason for the inflationary spike that we've seen in recent readings? Coming up, former Boston Fed President Eric Rosengren as Chair Kevin Warsh presides over his first rate decision. Yahira Anand also joining with SpaceX rising once again on its way to a fourth straight day of gains. This is Bloomberg Surveillance. Good morning.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Yesterday was an interesting day in markets where we did see the overall indexes decline, and yet there were a number of rotations, as we were just talking about with Mike Wilson, that were really interesting, in particular with the KBW Banks Index that hit a record high. This morning, we are rotating back into some of those high flyers, the tech names, with the NASDAQ leading the charge up about 0.5% and just 0.1% gain on both the S&P and the Russell 2000. Key question will be, how much will the Fed give a reprieve to broader economically sensitive stocks? Today, we do get, of course, Fed Chair Kevin Warsh's first rate decision at the helm of the central bank. A real question here with 2s, 10s, and 30s inflecting just a little bit lower, still far above where it was before the conflict started on February 28th with Iran, the U.S., and Israel. Right now, we're looking at 10-year yields at 4.43%, not doing much at the front end, essentially flat at 4.05%. That 30-year yield still below 5%, 4.9%. A lot having to do with the oil space right now. That quiet that you're seeing, despite some of the questions around what's in the MOU, that idea that we're seeing Brent crude at $79.34, given where it has been over the past couple of months, is truly remarkable.
It is remarkable seeing Brent below $80 a barrel, given the fact that at the moment the MOU is not even signed, and the president just said it's not even final yet. So the Strait of Hormuz is essentially still shut, with Bob McNally saying 2 to 3 million barrels a day on average that is only getting out. And we are living in basically on these buffer zones when it comes to inventories. Yet the market certainly trusts in Trump in the sense that this is the direction of travel and that he wants to see the oil flowing once again. And that is why you have individuals like Citi saying we see a dovish Kevin Warsh showing up today, and they still see 3 rate cuts this year.
Markets have moved on, in large part because they've got new shiny objects to focus on, like space, like what we could see with new programming and software development coming from artificial intelligence. Lots of specific names 2 hours away from the cash open. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. Well, we start there with none other than SpaceX, heading for a 4th straight session of gains, with shares up 2% in the pre-market. The stock has surged over 50% since it IPO'd less than a week ago, pushing it past Amazon when it comes to market value. And the gains have been so dramatic that apparently Elon Musk is already nearly a third of the way to a $2 trillion. That's according to our Bloomberg Billionaires Index, which may need to be renamed, or maybe there's a separate category for Musk. Meanwhile, we are seeing a rebound in the chip sector, with names like AMD and Intel moving higher in the pre-market after a day that saw the Philadelphia Semiconductor Index close down 5.7%. Marvell was the biggest decliner amid that pullback. Meanwhile, we are seeing Intel shares rise 3% after it announced that it is starting production on its most advanced chip yet, as reports continue to swirl about a potential future deal with Apple, and that may be a step toward that. And we end on CarMax. Those shares also, they are now falling 1.5% in the pre-market. It just reported earnings and falling despite the used car retailer reporting sales and revenue that did top expectations. Though profit did come in below expectations, so the market may be reacting to that. But it is a sign that consumers are still continuing to look for value when it comes to those big ticket purchases. Lisa?
Thank you so much, Yahira. On our radar this morning, President Donald Trump denying reports that the deal with Iran includes a $300 billion investment fund. Trump adding that fighting could even continue.
It's a memorandum of understanding, and if I don't like it, we'll go back to shooting at them. We'll go right back to dropping bombs right smack in the middle of their head.
President Trump is expected to offer more details from the G7 at a 10:30 Eastern press conference. Meanwhile, SpaceX agreeing to take over software startup Cursor in a $60 billion deal announced yesterday. The move cementing key parts of Elon Musk's efforts to catch up with rivals on coding tools. The deal is expected to close in the third quarter, and kind of amazing that it was a deal so quickly after the IPO. Meanwhile, U.S. Commerce Secretary Howard Lutnick out with a warning for Anthropic, telling the Mythos maker it will need government permission to give foreign nationals access to its most advanced AI models, threatening civil and criminal penalties if the firm fails to comply. This is Anthropic. Representatives head to D.C. with Mythos 5 and Fable 5 now withdrawn due to compliance issues.
Right. In this letter from the Commerce Secretary ordering them not to give any of these models to foreign nationals, or there is going to be serious issues when it comes to going past what these export controls and licenses require. What's interesting is Dario Mode is also with the president at the G7. At the same time, I was with the president 2 weeks ago, and he was talking about potentially there's going to be some sort of maybe equity stake, public-private partnership when it comes to these AI companies. Semaphore is saying that there's a difference of opinion between Treasury Secretary and the Commerce Secretary, but mostly that the U.S. government wants to make money off these companies, essentially some sort of nationalization.
Yeah, especially to get some extra funding to fuel different programs for assistance and for transition. It's notable when you talk to corporate CEOs who have been exposed to Mythos, how alarmed they actually are about the potential to find any holes in their security, any holes in ability to get in and manipulate things. You just wonder about the timeline, whether the development of some of these AI tools is moving faster than a lot of companies' ability to really adapt and protect themselves from it.
And also to regulate it. Remember, this administration was going to have a very soft touch when it comes to AI regulation, and then all of a sudden they're actually blocking these models getting into the hands of foreign nationals. Is that going to be the direction of travel they take?
And this is going to have a huge economic implication, in part because of what it does to employment. Kevin Warsh is going to have to speak about that eventually. Whether he does today is a question as he steps into his first opportunity to shape expectations as Fed chair later this afternoon. Former Boston Fed President Eric Rosengren expecting no forward guidance from Warsh's statement, writing, the new chair is likely to want to emphasize at this meeting a new, less transparent communication style. Eric joins us now for more. Eric, great to see you. Thank you for being with us. Can we take anything from Kevin Warsh's first appearance on the board of the FOMC back in 2006 to 2011 that we can pull forward to today as guidance over how he will really preside over this central bank?
Well, I think he's made pretty clear that he thinks that previous FOMCs have over-communicated and that it's been a bit confusing with a number of voices sometimes giving discordant opinions. So I think he's going to try to slow down the amount of speeches made by members. He's probably going to redraft the statement so that it's very factual and doesn't provide any forward guidance. And this is normally a meeting where the summary of economic projections is provided, which includes a dot plot that gives the participants expectations of where interest rates will go. It will be interesting how he handles, if they go through with that, it'll be interesting to see how he handles that, because even if there's no forward guidance in the statement, if they put the dot plot out, it's going to give some indication that many members of the FOMC think the next move ought to be up, not down.
You said if they put the dot plot out. Do you think that there's a chance that they won't?
I mean, at the first meeting, he said there's going to be a regime change. I expect this meeting is mostly going to be about communications within the committee, communications about the statement, communications with the press conference. And at a very minimum, I think he's probably going to seek to de-emphasize the summary of economic projections in the dot plot with the hope that eventually it goes away. But when you talk about regime change, sometimes it is fairly quick. So it will be interesting to see what happens at the press conference and what actually is released publicly.
Eric, you also said he's going to try to slow down the number of speeches. How does he do that while also making sure he's gaining consensus amongst his new colleagues?
I mean, I think it is a challenge, particularly given the precedent that many presidents probably have quite a lot of speeches that they've already agreed to give, as well as some of the governors. But I think he's just going to emphasize that he doesn't want to see forward guidance in any of the speeches, and that the forward guidance has often been misleading and misdirected the market. And he thinks that both in statements and in speeches, people should stick to the facts in explaining the policy that was just taken.
Well, is Warsh himself also going to speak less? And if that's the case, and Jonathan Ferro has brought up this point a lot, doesn't he just outsource how he's thinking to other members of the committee, and then they will define him?
I mean, he's indicated he thinks that the chair, as well as everybody, should speak less. We'll see how difficult that is, particularly if they're expecting to make significant changes. But I think if he does that, it's going to be in the context of the entire committee speaking less frequently and less with less forward guidance than they have in the past.
It seems like a lot of people have moved past forward guidance anyway, at least in markets. They've been looking at other metrics in terms of inflation, in terms of understanding exactly how tight the labor market is. Do you expect any guidance for at least how the Fed measures inflation, given the criticisms in the past that Fed Chair Kevin Warsh has had about the exact metric used?
The chair may talk about that in his comments. Usually those kind of discussions take several meetings. The staff usually provides briefings, and there are a lot of economists that would work on the issue of what are the best measures of inflation, what's the best way to forecast future inflation. So I would be surprised if that came out at this meeting. I think that probably will take several meetings before he would introduce anything different there.
Do you think it's bad for the Fed to communicate less?
It wouldn't be my first choice.
Why?
I think that during a period of regime change, if there really is regime change, then you need to explain what you're doing and why you're doing it, particularly if it's different than what the previous 2 or 3 chairs have been doing.
Do you think that the interpretation will be some sort of overly dovish position? Do you think the implication will be sort of political, or do you think that the implication will just be more uncertainty, potentially having the opposite effect, more volatility and leading to tighter financial conditions?
I mean, Kevin has in the past talked about wanting to go back to the day where there's a little more mystique to monetary policy and not being quite as transparent in general. I think the challenge with that is both the public and investors are now very well informed about what the Fed does and how the Fed affects the economy. So I don't think we can go back to where we were under Greenspan or Paul Volcker. And I think that Kevin's thinking may evolve on this over time.
Former Boston Fed President Eric Rosengren, thank you so much for your thoughts this morning ahead of that central bank meeting and rate decision. And of course, Kevin Warsh's first time as Fed chair on the podium. A really interesting note from Torsten Slok just moments ago, coming out and saying that there are more T-bills, more dependence on the Fed, talking about how the structure of financing of the country has really put that much more control in the Fed's hand about what our interest rates are, given that 85% of gross Treasury issuance will be in T-bills, which is the most affected by the Fed's rate.
Which is why the market wants to hear from the Fed, which is why this might be challenging for Kevin Warsh if he comes in and tries to dial that down, especially given the fact that the president's appointment of Stephen Miron, who's no longer there, of course, but Stephen Miron injected this new, fresh approach where everyone was out speaking more and everyone was more transparent in how they felt. Now, is Kevin Warsh trying to put that genie back in the bottle?
Well, we will see later this afternoon if he gives a speech and if he answers some of those questions that I'm sure will be lined up in the press conference. Let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Bonnie Quinn. Bonnie.
Lisa, thank you. A small passenger plane crashing near a Texas highway last night. According to the Laredo Police Department, no one on the highway was injured during the crash. It's currently unclear how many people were on board and their condition. Apple is planning to launch camera-equipped AirPods late next year as part of a flurry of new releases. Sources telling us here at Bloomberg the company plans to unveil the device around the same time as a next-generation foldable phone and a fresh iPhone model, all to mark its 20th anniversary. Ferrari is looking for ways to get people who buy its divisive EV model. Sources telling us here at Bloomberg the company is delivering a message across its collector network that purchasing a Luce is a stepping stone to other exclusive models. And that is your Bloomberg Brief. Lisa.
Thank you so much, Bonnie. I think that John is out buying a Luce.
A Luce? I highly doubt it. But actually, this is what Hermes does. You got to like buy a bunch of stuff to then get on the list to try to get a Kelly or a Birkin. And that's what Ferrari seems to be doing. It makes me think, do people actually want this car, or they want a classic, amazing, incredible Ferrari, and they have no choice but to buy this Luce first to get on those lists?
If you want the privilege of buying a $2 million Ferrari, you first have to buy just a mere $650,000 car. Up next, Kevin Warsh stepping up to the plate.
Kevin Warsh knows what he's doing. If he wants any changes, basically he needs to have the other 11 members on the FOMC, the voting members, on board.
Warsh will do is say there's tremendous uncertainty. It would actually be good for the Fed to have that flexibility here.
Holly Liss of BTG Pactual joins us next to talk about exactly what to expect later today. This is Bloomberg Surveillance.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
little bit of a lift. This seems like a waiting pattern ahead of a couple of key events this morning, whether it's the Fed meeting later today, Kevin Warsh's first time at the podium, giving a press conference following the rate decision as Federal Reserve Chairman. Of course, we also have the MOU on Friday, the potential for some sort of deal between the U.S. and Iran getting inked. Put this all together, markets are flat. They don't know where to go with this. S&P futures essentially unchanged. You've got the euro dollar essentially unchanged at 116. You've got 10-year yields unchanged. You've got crude inching maybe a little bit higher, but still incredibly low compared to where they've been over the past 3 months, $76.70 after rising beyond $100 a barrel in just the past couple months, given the fact that there has been a war going on in the Middle East that has stalled out most imports and exports of oil through the Strait of Hormuz. Under surveillance this morning, someone's going to have to put this all together. Kevin Warsh stepping up to the plate.
Kevin Warsh knows what he's doing. If he wants any changes, basically he needs to have the other 11 members on the FOMC, the voting members, on board. Too high inflation, strong labor market, that argues, of course, for the Fed needs to move towards a more hawkish stance.
Warsh will do is say there's tremendous uncertainty. It would actually be good for the Fed to have that flexibility here.
Here's the latest. Investors looking for new messaging from Fed Chair Kevin Warsh today. Markets expecting policymakers to hold rates steady as inflation picks up. Holly Liss of BTG Pactual writing, there is always room for a surprise, and more so given the new Fed chair and rapid decline in crude. Holly joins us now for more. Holly, good to see you. Want to start with a question of what the bigger risk to markets is. A potential dovish tone from Kevin Warsh or a potential hawkish tone from Kevin Warsh?
Well, at BTG, we feel that the risk is more towards the hawkish side. Nobody's really looking for any change to the overnight target rate. There is a lot of speculation that they're going to tweak the statement, that the dot plot will modestly change, and that the economic projections will also be tweaked a bit. The risk is that they come out more hawkish if they eliminate that additional statement where they bias towards easing. So if they take that out, that is more on the hawkish side. However, if you start seeing Chairman Warsh eliminate his dot or even the dot plot entirely, that would clearly be viewed as more hawkish. So I think that's where the risk is. Now, let me take the other side of the coin. Of course, with the crude oil prices coming down recently, that has to fit into the scenarios they're going to be talking about, as well as inflation, and that could trigger more of a dovish statement. So it does wait and see. We'll have to see how it goes from there, but I think right now people are leaning more towards the hawkish side.
Holly, you said if they didn't put out a dot plot or if he withdrew his particular dot, that would be viewed by the markets as hawkish, potentially leading to tighter financial conditions. Can you explain how less communication is viewed as potentially hawkish at a time where there is a suspicion that Fed Chair Kevin Warsh is going to automatically lean to the dovish, given some of his commentary leading up to his confirmation?
Well, I think there are still some who recall when he was here in the chair, not in the chair position, but with the Federal Reserve in 2006 to 11, he was leaning more towards the hawkish side. So there are still some remnants of that people are looking at. Plus, the Fed has become so transparent with the dot plot, with the SEP, with all of the conversations and meetings that they give, that the transparency is viewed as more open and we will know what they are doing. If they start curtailing that, especially if Chair Warsh wants to pull back on that communication, they may be thinking something else is going on and that he is not leaning towards the easing side, and therefore it could be hawkish. Now, that said, with crude oil prices dropping, clearly there could be room for some flexibility towards the easing side.
Yeah, Holly, that's what I wanted to pick up on. This drop in crude we've seen, how much really is this a gift to Kevin Warsh as he meets members of the press and starts talking about the outlook for inflation?
I think many of us will take gifts where we can. So it certainly gives them some breathing room, and not just Warsh, but really the entire committee, those that have been a little bit more concerned about inflation. Now, just because crude is down and BTG's technical models, our model says that crude could continue to fall. We have an outlook for potential to $72 to $69 a barrel. So that would be another 7 to 10% from where they settled yesterday. So that does give them some breathing room. It is a gift for him. we will need to see that filter through into other prices, inflation expectations, and the inflation numbers. Now, if we're going to speak about inflation numbers, he has a favored number, the trimmed mean inflation number, which is lower than the other numbers and statistics that the market tends to look at, CPI, PPI, PCE. So he could clearly be leaning towards that number, and the crude coming down and being a little bit less inflationary and filtering through to the easing side.
Is there any chance they don't remove the easing bias?
So as we talked about at the start of this, there's always room for a surprise. While everybody, I shouldn't say everybody, there's always risk. While most people are looking for the statement to be modestly changed, there's always the chance that it could be drastically different. This is his first meeting. He may want to establish his credentials and his footprint on the meeting and on the committee. And let's not forget, you also have former Fed Chair Powell in the meeting as a governor. It has been a long time since that happened. Not that it can't happen, but it has. And so Chair Warsh may want to establish his own sort of outlook and regime change and things like that, given that a former Fed chair is in there also as a voting member.
Holly Liss of BTG Pactual, thank you so much for being with us this morning. Can you imagine the lunchroom at the Federal Reserve, the FOMC, given the connection or lack thereof between Kevin Warsh and Jerome Powell? Will they sit next to each other? Will they sit far away from each other? Will Jerome Powell be wearing a hat and sunglasses to keep a low profile?
Yeah, he said he's going to keep a low profile. Then he went out, made a major speech, and didn't keep a low profile. I think a lot of people are wondering, actually, when he is going to leave the board. I guess maybe potentially when this Lisa Cook issue is wrapped up with the Supreme Court. But you have to think it's a bit of an awkward dynamic for Kevin Warsh to come in, given this is his second round at the Fed. Last time he was a hawk, and based off his interviews and his hearing in Congress when he was auditioning to become the Fed chair, he obviously had a change of heart.
There is a lot of institutional support for Kevin Warsh. He is a known entity. He has been in the field for a while. He was respected. He was endorsed by a lot of people who have been both in the Fed and outside of the Fed. Question a lot of people have is typically whenever there is a new chair, there are accidents that happen. There are communication errors, whether it's we're not here to close the spreads over at the ECB, or whether it's just potentially signaling a little bit of the wrong direction. Is that the potential risk of just sort of a communication error amid this change to potentially reshape the way that the FOMC communicates?
And does the market, but specifically the bond market, actually push back and test him? You know, does he have a moment where I'm not here to put a dot on the plot, potentially? And then I think you and Jonathan have talked about this a lot. What happens then if you outsource your views to other members of the committee? How hard is it going to really be for him to go around and say, sorry, you can't give those speeches?
Well, will there be an answer and question period of time after the press conference? Stay tuned. Coming up, we're not going to answer that question, but we will talk about what to expect. Sarah Malek of Nuveen, Dom Rizzo of T. Rowe Price with tech stocks soaring, Jonathan Pingle of UBS, and Blake Gwynn of RBC Capital Markets on a day of a bit more optimism than yesterday. Look at that, the sun coming out. This is Bloomberg.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the Treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Warsh will say there's tremendous uncertainty.
I expect his tone will be a little bit more dovish.
Too high inflation, strong labor market, that argues, of course, for the Fed needs to move towards a more hawkish stance.
The Fed's primary job is controlling inflation.
It's a long shot to call for a rate cut this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to the third hour of Bloomberg Surveillance. Stocks rising ahead of Chair Kevin Warsh's first rate decision at the top of the central bank. All eyes on how much he seeks to reshape the institution. Traders also focusing on the U.S. consumer retail sales coming out in about 30 minutes' time. And SpaceX just keeps on rallying, boosting its valuation beyond Amazon, maybe to the stars. The question is, how does Chair Warsh reconcile that market enthusiasm with labor market concerns, given some potential wobbles that we've seen under the hood with the consumer?
Well, potentially under the hood with the consumer. How many times have people come on this program and said, oh, the consumer's relying right now on the bigger than expected tax refunds? We heard that in December on Christmas, people saying they're spending what they prepared to get. And it was higher electricity bills in January. And then, of course, the past few months, it's been higher oil prices, higher gasoline prices. But today, you look across the continental United States, $4 a gallon. When it comes to energy, prices are moving in the right direction at a time for him to come out and start his Kevin Warsh era.
That said, this is why retail sales will be interesting, and we do get that at 8:30 a.m. Eastern time in just about 29 minutes. A lot of people have been looking at credit card data. Citigroup put this out yesterday, saying that the card data increased in the month of May, led not necessarily even by gasoline purchases or related things, but automotive retail, yes, so that might be a little more related, and home furnishing. They talk about how overall they expect a 0.9% month-over-month increase, which is beyond the 0.6 expected by the median. You put this out and you start wondering how broad-based is the inflation, given what we're seeing in markets, given what we're seeing with the employment market, and given how we're measuring things. Again, another key question for Kevin Warsh.
It's a good question to note, too, how we're measuring things, because surveys and polls, you continuously see a very frustrated consumer, especially on the lower end of the income spectrum. But we heard from David Tinsley just 2 days ago, and what did he say in his report? Sunny days, consumer spending remained remarkably resilient in May, strongest growth in nearly 4 years. So consumers might be frustrated, and they are saying this in surveys and polls, and they are a little bit cranky with higher prices, but they're still going out and they're still spending.
They're not cranky if they bought into the SpaceX IPO, or potentially if they're trading some of the derivatives that have come to the fore, options starting to trade yesterday. We're going to parse through all of that right now. A pretty muted market. You are seeing a little bit of a lift in equities led by the tech trade, which led the way down yesterday, essentially flat on the S&P. Eurodollar essentially staying around that 116 mark. Yields had started the session a little lower, now marginally creeping higher, 4.44% on the 10-year. Crude essentially staying in that $76 range, although inflecting a little higher with the MOU in question, given some of the pushback that we heard from the president this morning. Again, will it last? Will this be something sustainable, or has the market just completely moved on because oil has gotten through and ultimately they are not going to get thrown around by headlines?
Well, Mike Wilson said the oil has completely moved forward, and this is in the rearview mirror. The issue, of course, is going to be that we could see fits and starts when it comes to dealing with Iran. We already saw that during the most problematic and height of the kinetic war with Iran. Right now, what you can potentially see, more oil getting out, but the president said himself he doesn't like what he's seeing in terms of the regime. He will start strikes again. And if you read the Memorandum of Understanding, the draft text we have, it talks about nuclear discussions in the future. But the other two red lines the president of the United States, Trump, has had for years is money to proxies and their ballistic missile program. And this MOU doesn't address either.
Well, coming up, we'll talk about how this bleeds through the market. Sarah Malik of Nuveen with stocks navigating that wave of volatility, particularly when it comes to semiconductors. Dom Rizzo of T. Rowe Price as SpaceX overtakes Amazon as the world's 5th largest company. And Jonathan Pingle of UBS looking ahead to Fed Chair Kevin Warsh's first rate decision. We begin this hour with stocks steady as investors count down to the Federal Reserve. Sarah Malik of Nuveen writing, expect the market to broaden and buy the dip behavior to continue. Sarah joins us now for more. Sarah, good morning. Welcome. I want to start with how much the market is really trained to the Fed, how much the market's really trained to oil, or whether this is all about deals, all about AI, and all about some of the enthusiasm for new technology.
That's an interesting question. The answer is all of the above. But really what grabbed the headlines this week was the Middle East ceasefire. And what that cleared the way for was for the market to broaden. We see the market broadening for two reasons. First of all, inflation should moderate as oil prices decline and tariff refunds occur. And secondarily, the economy is very strong. We've seen strong manufacturing data, a continuing strong labor market, and the consumer continues to spend. We should see a decent retail sales number later today. So we prefer at this point global equities, European equities, and cyclicals over growth stocks. And we think that people will continue to buy the dip, as we saw after yesterday. When we see these little pauses in this rally, we tend to see people stepping in, buying the dip on the market, and we think it'll be a broader rally from here going forward.
This is an interesting point and something that Mike Wilson was making earlier, that this is unleashing the broadening trade that we saw earlier this year, like the equal weight, the international trade. Is that also coming with potentially a fading in the tech sector, or is it a yes and type of story?
We came into this year bullish on technology stocks, and I always say don't bet against the U.S. or technology stocks. But I think there will be some give. We've seen this huge rally in semiconductors, just even double digits in the last number of days. That's not going to continue. Some of that is going to be a source of funds for buying the rest of the market. But I don't think that means that tech is going to be completely left behind. It'll just be a broader rally going forward, driven by this continued strong economy and also by inflation that is now moderating, but it's not going to go back to what the Fed has stated was their target, which is 2%, because before the war, inflation was still running in about a 2 to 3% range.
Given the fact that you said that really it is the end of the war in the Middle East that triggered this initial broadening out that we've seen over the past couple of weeks, how much do you expect this to ultimately be the arbiter of how far it can go, how low oil prices can go, how dovish the Fed becomes?
Earnings growth tend to move the market higher. And if you remove the war from the equation, and the market has generally moved on from the war and assumed that it will end in a reasonable period of time, earnings growth for 2026 should be over 20% when all is said and done. We saw better than that for the first quarter. Earnings growth can drive this market higher without necessary multiple expansion. Multiples can actually decline a bit while earnings continue to grow. And that's why we're bullish on the market and think it has upsides from here because of that earnings growth number north of 20%.
Building on Lisa's point, if the market's no longer worried about the war in Iran, what's the greatest risk right now?
I think today's risk is going to be the Fed meeting. Warsh is going to be walking a fine line between being overly dovish and overly hawkish. He needs to make sure that what he communicates is something that the bond market believes in. He's balancing the dual risks between inflation, which is very strong, and the economy that is strong. So we forecast no rate cuts for the rest of this year. Next year, though, if the economy does weaken a bit, you may be able to squeak one rate cut by. But hikes are also on the table in 2027 because it depends on the strength of the economy. And inflation, as I said before, was not near the Fed's target before the war started. So even though we're going to finally move past the bump in inflation due to the war, we still have to deal with the chronic ingrained inflation in the economy. I'll also mention payrolls. They've been so strong recently. I'm worried about wage inflation picking up again because supply of jobs has been increasing, payrolls have been strong, and wage inflation may start to pick up because of that.
Well, that's why a lot of people are also concerned about potentially the Fed having to hike, and the market is still seeing a hike, even though they retrace some of those moves because of what we saw with the president's MOU in regards to Iran. But you're thinking potentially it's going to be a cut in 2027. Does it feel odd to be at odds with where the market's pricing?
The market, it could be overly hawkish at this point. I agree with no cuts in 2026, given the strength of the economy and the issues around inflation. 2027 is still a long way away. By that point, inflation could be moderating closer to target. It was trending in the right direction before the war started, and the economy and earnings may not be as strong in 2027 as we're seeing this year. I wouldn't take rate cuts off the table for 2027. I think it's overly hawkish to assume we're going to be walking into hikes next year.
Sarah, just going forward, would anything make you rethink the rotation trade that currently is underway?
Well, first of all, I mentioned follow earnings growth. Tech is still going to be the leader with earnings growth. I just think tech has moved a little bit too far, too fast in terms of its performance, but earnings are still there for tech stocks. Second is if we go more to a defensive environment. The geopolitical issues in the Middle East caused investors to feel a little bit more defensive under the surface. That's when tech tends to outperform. Now that that is moving out of the way and we can focus on the broad economic drivers such as manufacturing data, which has had a really nice pickup and continued spending by the high-end consumer, that should be better for a snapback in financials, in consumers, and some of these industrial companies that were hurt by the squeeze of inflation and higher tariffs.
Sarah Malik of Nuveen, thank you so much for being with us this morning. As we do await a Fed rate decision, we're also waiting those retail sales, and that's going to be really important about 20 minutes time as we get a sense of just how much resilience there is in consumer spending. As we did hear from David Tinsley, there has been quite a bit. Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Vani Quinn. Vani.
Lisa, thank you. SpaceX overtaking Amazon in value to become the 5th largest stock in the world. Shares closed nearly 4% higher, pushing its market cap to $2.65 trillion. And the stock's intraday high, SpaceX topped Microsoft to briefly become the world's 4th largest stock. In sports, it was a day of superstar action at the World Cup. Kylian Mbappe scoring 2 goals to power France over Senegal. Erling Haaland also scoring twice for Norway against Iraq. And Lionel Messi stealing the show with a hat-trick for Argentina in their win over Algeria. The DOJ charging 5 people in connection with an alleged plot to use explosives and snipers to target attendees at Sunday's UFC event outside the White House. The alleged plot is just the latest example in a series of attempted attacks against President Donald Trump and other prominent individuals. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vani. Up next, the morning calls, plus Dom Rizzo of T. Rowe Price on what's next for SpaceX after it overtakes Amazon in value. Just what are the revenues of these companies? How does that compare to the market capitalization? That's coming up next. This is Bloomberg Surveillance.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The options market's been setting records actually for 6 straight years. I think everybody knew SpaceX was going to be big. That first day activity, we saw 1.77 million contracts trade. We've actually seen a trend this year. About a third of the listed stocks out there kind of have this upside skew. But it really does tell you what investors are thinking.
And they're thinking they want to be bullish. That was Henry Schwartz of SEBI. And when you take a look at what they're thinking this morning, at least when it comes to the tech trade, you can see the optimism bleeding into equities, up about 0.5% on the NASDAQ, taking back some of the losses, down more than 1% yesterday, led by the semiconductor stocks. A brutal day for them. This morning, more broadly, about a 0.1% gain on S&P and Russell 2000 futures, ahead of what could be a really interesting day. On one hand, you got SpaceX and the ongoing rally there. On the other hand, you have what could percolate out of the Federal Reserve, with Kevin Warsh unveiling his view as Fed chair for the first time. Time now for the morning calls. First up, Bernstein raising its price target on Intel to $100, saying the company should benefit from stronger server demand. Those shares up more than 3% in pre-market trading. Next up, Wells Fargo trimming its price target on FedEx to $425, saying next week's earnings results will be more important than the guidance. The shares essentially flat. And finally, Citi hiking its price target on Micron to $1,200 from $840. The analyst increasing the company's fiscal 2026 and 2027 estimates to reflect better than expected memory prices this year. Those shares almost up 3% after being absolutely hammered yesterday. The whipsawing continues in the semi space, not so much when it comes to SpaceX. SpaceX on track for a 4th straight day of gains. The company overtaking Amazon to become the 5th most valuable in the world. Ed Ludlow of Bloomberg Tech writing, the IPO wasn't just a bet that investors would buy the stock. It was a bet that existing shareholders would sell it. Ed joins us now for more. Ed, this is such a great point because we've all been wondering, what are all the newly minted billionaires going to do with their money? And it turns out, keep it there, keep it in SpaceX. Why hasn't there been more cashing out? Well, in the first instance, like, the lockup is complicated. It's staggered. You know, there is some liquidity or some freedom in the shares in August, but a very small portion of them. And so, like, we've been focused on this idea that, you know, taking into account today's pre-market gain, the stock's up 50% from its IPO price. It's probably just better to talk in terms of market capitalization. You know, it's a $2.7 trillion company ahead of the opening trade today, and there's just scarcity, because only 4% of that market cap shares are available to trade right now. The retail allocation of 20 to 30% is probably a big factor here. But the reality is, like, in an environment where options have just launched, there is price discovery. There was still a clamoring to get hold of shares outside of the IPO allocation, and it's just not trading, shall we say, on fundamentals. What it is trading on is a bit of a mystery, Lisa. I think you've got great guests throughout the morning to ask about that. But, like, the scarcity element's really important here. Read the details of the lockup is the point I'm making. Yeah, this is a great point. The idea that maybe there's not selling pressure because a lot of the holders can't sell at this point. Ed, from your vantage point, do most people in the tech space seem to think that the valuation's gotten a bit excessive? Yes. I mean, I put a post out on X yesterday about its price to sales being above 150 compared to Amazon, right, which is low single digits. And people said, well, why are you bothering with that? Why don't you do price to earnings? And I was like, well, what's the point? What earnings? You know, there isn't a metric in these early days that gives you a fair valuation. The thing I write about in the Tech in Depth column is, like,
even when the lockup period is done, all those venture firms that have realized tens of billions of dollars of gains on their initial investment will redistribute the shares to LPs. They don't give them cash. They just say, I sign ownership of these shares to you. And the question at that point is whether those endowment funds and pension funds, like the venture capitalists, believe that actually 3 trillion is quite modest. And they see a time horizon that's near term to it being a $5 trillion company. You know, there are lots of bullish people out there that really believe that's the case. And you will have seen that Elon Musk tweeted or posted on X this week that he sees some pretty out of this world financials from this company by 2030. And it's whether you believe that or not, and you hold the stock as a result.
Ed Ludlow of Bloomberg, thank you so much, as always. We look forward to hearing more on your show later this morning. Don Rizzo of T. Rowe Price writing, at this valuation, it all comes down to long-term AI positioning. Owning and harnessing the model is key, and now they have strength in both. Dom joins us now for more. Dom, what do you make of the question that we were just talking about with Ed, which is, do you feel like this market has just gone way too far, in part on technicals that favor it for now?
Well, first off, thanks for having me, guys. It's great to be here. And, you know, Ed always does such great work. So, look, if I take a step back on SpaceX, you really have to think about it as 3 separate businesses, right? There's launch, where they have a near monopoly in sending stuff up into space. There's connectivity, where I think they have a really good positioning in terms of offering Wi-Fi, not just in the US, but worldwide. And then there's AI, right? And you know, the debate before is what's happening with the fundamentals at SpaceX. And I would argue that all of the stocks trading is basing on pricing in the terminal value of the AI business. And what is that going to look like in 2030? And, you know, what I referenced before is really around the Cursor merger, right? So Cursor has a wonderful harness, one of the best in the world at coding. And now with the merger with SpaceX, they have a leading edge model in the form of Grok. And I think what we've learned time and time again is that in AI software and AI native software, owning the model plus the harness results in differentiated, wonderful user experiences. The other thing that you have to think about on the AI business is they've been renting these GPUs, $50 billion a gigawatt. So look, the stock is up 50%. Of course, in those situations, we always consider risk management. We consider portfolio construction. You have to think about position sizing. But I think what's happening with the stock is looking into 2030 fundamentals and what is that going to look like for AI specifically.
Well, 2030 fundamentals, Elon Musk says that he's going to have $1 trillion in revenue. Morgan Stanley puts it at more like $470 billion. Where do you see revenue lining up in 2030?
Yeah. Well, obviously, I'm not going to get into our internal estimates, but if we think about how you get to hundreds of billions of dollars of revenue, it comes to what can they monetize per gigawatt, right? And so what was so interesting about the Google and the Anthropic rental deals is that they were monetizing at roughly $50 billion a gigawatt, which is 2 to 3 times the average rate in the spot market today. So how much of that premium was just the fact that we're incredibly short compute? How much of it that it was Airbnb-like rental deals and that it's short-term, not long-term? And how much of it is that SpaceX is truly differentiated at standing up 100,000 plus GPU coherent clusters? I mean, I think that's the question to be seen. So how do you get to hundreds of billions? You maintain, or that number comes down a bit, 50 billion a gigawatt, maybe coming down a bit over time. And then you get to a path to 10 plus gigawatts, right? That's how you get to those type of numbers. But it's a far way out. We have extraordinary competition in the form of OpenAI and Anthropic. And I think Ed did a really great job in his piece of laying out all the different technical factors on the stock.
Well, some analysts will say that Cursor doesn't have the scale of OpenAI and Anthropic. How quickly can it get to that level?
Yeah, first off, you know that we've been investors in both OpenAI and Anthropic. And the thing that I've been so stunned by is just how quickly these businesses can grow once they catch virality inside the enterprise. And so I'll give you an example. When I did the Anthropic round in the summer in the global technology strategy, Anthropic was just doing $5 billion of run rate revenue. They're now doing 47 billion plus. I mean, I've never seen numbers like this. And why is that? Is because AI is this incredible productivity enhancing tool. You know, OpenAI and Anthropic, widely expected, you know, if you look at what people are thinking, combined a couple $100 billion of run rate revenue by the end of the year. Combined, their valuations are in the $2 trillion range. You know, I've never seen growth like this in AI. And the question is, can Cursor plus X as model plus harness really carve out a place in the enterprise? And let's see, you know, we don't know yet.
Dom, what would you see that would make you bearish?
Well, a couple different things I think about. So number one, I think about N-1 models a lot, right? Open source models outside of China, or even the open source models from NVIDIA. And do open source models come in and lower the price of a leading edge token? I think what I see today in what the tokens are going to kind of distribute like within the enterprise and personally is there's going to be a bifurcation, almost like the smartphone market. You know, the vast majority of smartphones today are, you know, Android phones, sub $400 in value. But all the value in smartphones is in the $800 plus smartphone market. I think that's almost what it's going to look like in tokens. All the value of tokens are going to accrue to the leading edge. And who's at the leading edge for models today? Only 4 companies: OpenAI, Anthropic, Google, and X. That's it. So I think the value will accrue to those leading edge models, and it's imperative to have a model plus a harness in order to have a differentiated product.
Dom Rizzo of T. Rowe Price, thanks for your insights. As we look to a 4th day of gains on SpaceX after their IPO, we're also looking for some retail sales that should come out. A read on the U.S. consumer in just over 5 minutes time. A question here about how much this starts to percolate out into consumer price inflation, but also whether it's really 2 different stories that aren't really converging in any way.
Yeah, and I'm really more looking forward to seeing the retail prices and the data after this MOU is signed, and potentially in the middle of the summer, if oil prices continue to decline, are consumers then taking that money they were spending on much higher gasoline prices and putting it elsewhere?
Yeah, are you going to start to see people traveling more, although they have been traveling? I mean, that's a question.
They've been resilient.
Where have they pulled back, right? I mean, ultimately...
They've just been choiceful.
They've pulled back on their loose purchases. It seems like that's...
Luce.
That's like what ultimately we can see with Ferrari looking to some of their most reliant customers potentially. That is clearly who we're talking about with these retail sales.
That's a different layer of inflation. You know, Knicks tickets, Luce buying. That's just a different...
Birkin bags. Yeah, exactly. This is not exactly out of my price range. Coming up, Jonathan Fingal of UBS on why the Fed could stay on hold until 2028, despite some calls and, frankly, market pricing calling for about an 80% chance of a rate hike by the end of this year. This is Bloomberg Surveillance. Good morning.
Welcome to Bloomberg This Weekend. I'm David Burrow.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Seeing a little bit of a lift ahead of the Fed rate decision and ahead of data that we're about to get about 20 seconds away. Retail sales in the United States. A lift right now across the equity space, although really seeing it with the NASDAQ in particular up 0.5%. When you take a look at bonds, you did see a bid into bonds earlier, kind of wobbling at the front end when you see just up about a basis point, 4.07%. And then in the crude space, you could see a bit of a fading in the expectations around the MOU, given some of the rhetoric that we've heard. Right now, we do have retail sales crossing. Michael McKee has the numbers. Mike, what do you see?
Well, shop we must. That seems to be the motto for Americans. Also, throw in inflation, and you get a retail sales headline number up 0.9% after 0.5 last month, and the expectation was for only 0.6. Now, take out autos, and it's 0.8. Take out autos and gas, and it's 0.5. Which is still better than forecast and is still a relatively strong number. The retail sales control group, particularly strong this time. That's what goes into GDP for retail sales, up 0.7% after a 0.5% gain in the month of April. The forecast was for a 0.4 gain. So it is altogether a relatively good number in terms of Americans keeping up with the economy at this point. Now, the question is, and we can't immediately do this, but the question is, how much of that do you deflate for inflation? We know it's hit gasoline prices. What we don't know at this point is how much of it's made into other prices at this point.
And that's going to be a key question for the Fed later this afternoon. We'll get to that in just 1 second. When you take a look at the market reaction at the front end of the yield curve, it had been selling off. You had seen yields rising. They rise a little bit further in response to this, given the fact that this does just sort of lean into the idea that there is resilience, that consumers are strong. When you take a look at equities, at least in the space, in the tech space, you are seeing them hold on to gains, also just barely hanging on to gains on S&P futures up about 0.1%. Mike, how does the Fed deal with a resilient consumer at the same time that, yes, they're getting a reprieve from lower energy prices, but that isn't the whole story for inflation?
Well, it's definitely going to be one of the top questions that Kevin Warsh gets today in his first, and we hope, first of many news conferences. But Warsh has got kind of a tough job, and so does the Fed at this point, because they do have a stronger economy than they anticipated. At the same time, they've got more inflation than they anticipated. No change in rates expected today, other than we'll probably see them drop the easing bias that they had. Then the question becomes, what's in the dot plot? Do they take out all the cuts? There was one cut forecast for 2026. Do they take those out? And how do they adjust the forecast now that we're seeing stronger than expected growth? And of course, for Warsh himself, we don't know if he's going to put in a dot at all. He said he doesn't like them, and he said he doesn't want to. And as I mentioned, is this going to be the first or the last of his news conferences? He doesn't want to do as many as have been done. Communications under review, that's probably something he'll talk about today because it's one of the things he can do relatively quickly is at least bring that up as an issue for the board to decide. And, of course, everybody's going to want to know, if you have a strong economy like this and inflation up, how do you deal with the Trump elephant in the room? The question about whether you were just appointed to cut interest rates and now you really can't.
Michael McKee, we'll be looking out for you throughout the day and, of course, in that press conference. Looking forward to your question as well. Jonathan Pingle of UBS joins now, and I want to get your immediate reaction, Jonathan, to what we just saw. We got retail sales coming in stronger than expected. The control group rising to the highest pace going back to the end of March. At what point is this a signal that inflation maybe is broader based because there is this really strong U.S. consumer?
So when I actually look at these numbers, I don't look at this pace of consumer spending as being all that inflationary. And I mean, I'd like just to put some numbers on it, you know, when we got the relatively strong April data, after services were added, and this is to Mike McKee's point, it was deflated, annualized, it was only 1.3% real spending growth. We actually are tracking and thought we'd get 2.1 in the second quarter, so we were hoping we would get some decent numbers in May and June, and we wouldn't have that sort of more sluggish pace. But we also have to remember this is like peak fiscal stimulus, right? All those refund checks have gone out. We've had the withholding adjustments. I mean, yes, this is great news. Could be a sign that we are seeing a real pickup in consumer spending. But at the same time, we do have this tension where there's been a lot of cash sent back to households. And if this is it, and we're only going to run sort of a little over 2% annualized, that's not really super strong for the U.S. So I think for this one retail sales report, I think it's actually good news that it wasn't slower. But, we were sort of expecting a little above consensus control, and we got that. But I don't think this is yet a sign the economy is really overheating. I think combined with the MOU, whatever that is, I think that's actually probably good news for the FOMC today.
You expect that there are no cuts appropriate until 2028 and that probably this is a Fed that is on hold until then. What would you hear potentially today that would surprise you? Or are you thinking that maybe there is a bias in the markets that this is going to be a dovish Fed Chair Kevin Warsh, or that this, frankly, is going to be one that harkens back to his 2010 days and is a bit more hawkish?
So I'm prepared to be surprised. At 2 o'clock, I wouldn't underestimate the hawkish shift from the committee. Getting rid of rate cuts. We'll see some hikes appropriate. People thinking pipes are appropriate this year. I do think they're going to probably nudge down growth a little up to the unemployment rate in the out years, but certainly more restrictive policy is going to be the message from the statement and the SEP. Pretty sure. But for Kevin Warsh, there's been a lot of iterations of him in his career. I mean, I was on the board staff when he was a governor. Remember him quite vividly. I mean, I don't want to oversell that, but he's gone from a period of time being hawkish, more dovish lately. I don't actually know we know who we're going to get, and then combine that with he wants to talk less, communicate less, and provide less guidance. We could be setting up for a really disappointing lack of clarity after markets getting used to 20 years of Powell, Yellen, Bernanke.
How does the market react to that level of potential not having a lot of clarity on who Kevin Warsh is?
Oh, I mean, I think it does raise the risk of, forward pricing not aligning as closely with where the committee is than we're used to. And also, if he's going to talk less, everyone else is going to talk just as much as they were before, certainly the regional Fed president. So he does risk, ceding the communications to others. But I also think that, if he's not going to be, as transparent and clear as his predecessors, there is just going to be more room for confusion, right? Whether it's, people interpreting a comment as a green light to price in more hikes or price out the hikes. We'll really have to see, but it sets us up for something really unusual because we also haven't really heard him in the public eye as much as his predecessors when they assumed the chairmanship.
Michael McKee has some more details from the retail sales report. I want to bring you back in, Mike. It is notable because there was this huge pop in gasoline sales, right? The sort of sales at the pump were up some 3.6%. What are you seeing more broadly?
Well, I think the gasoline thing is a sort of a well-duh kind of number, and nobody's going to be surprised by that. But what is interesting is that there are a couple of areas that did not see any gains, including food. And we know food prices were up, so inflation should have added to that. But food and grocery stores both flat on the month. The clothing and accessory stores up 0.3, which is a reverse of what we saw the prior month. And it doesn't, this is May, so it doesn't include Anne-Marie and her 6 million best friends buying Knicks gear the last 2 weeks. We'll see that next time. But non-store retailers were a little stronger, 1.5% up. Food and drinking places, the only kind of discretionary spending, services spending that's in this report, were down by 0.1% after rising 0.9 last month. So people stayed home and maybe bought stuff on the internet. They didn't buy stuff for their houses, but they may have bought a little more gasoline than they anticipated having to pay for.
Michael McKee, thank you so much for that. And Anne-Marie, I believe, wants to clarify that she's the OG. And actually,
I've had this mug. This is not new.
You're not buying gear because you've already had all of the gear.
I might buy something special with the finals.
You going to the parade?
Championship. Haven't decided yet, but I was at Game 5.
Cool.
Just want to rub it in.
The other way, people are looking at the World Cup type of bump and whether that ultimately is also going to boost retail sales. I'm trying to bring it back to the retail sales. Jonathan,
well, in June, in 1994, you did get a little bit of bump in June, July.
Yeah, so there you go, and potentially even more so, although I don't know if anyone has any money left over to spend, given how expensive some of these tickets are. From your perspective, are you expecting any commentary either on the balance sheet, any commentary on Fed communication when it comes to constricting other governors and how much they're going to be speaking?
I don't know how much he's going to be able to restrict the other governors. I mean, given their independent oversight boards, and many of those boards, they would like their regional Fed presidents out. You know, it draws attention to their cities, their local economies. They have sort of every incentive to get the regional Fed presidents out and on Bloomberg. You know, when I think about what he's going to do, I think one of the initial tests really will be the statement itself, right? Like, the statement has had a certain amount of repetitiveness for a while, you know, some phrases that really are just so pat they have no meaning. That if there's a significant overhaul of the statement, I would say that not only does that signal he is going to try to make changes, but he managed to get the consensus to do it at the meeting, which shows a certain amount of ability to drive consensus. Other than that, many of these changes I think are going to take longer. So I would expect him to talk about, you know, subcommittees going out and looking at their communication strategy, the balance sheet, et cetera. But at the very first meeting, I don't know how much fundamental change there's going to be.
Yeah, a lot of people saying he's probably not going to rock the boat, although we'll see. If he drops the dot, wow, all bets are off. Jonathan Pingle of UBS, thank you so much. If you are just joining the program, we did get retail sales in the United States for the month of May. Came in significantly above expectations, 0.9% for the headline versus the 0.6% expected. When you strip out autos and gas, you could see 0.5% gain versus the 0.3% that was expected by economists. And that retail sales control group, 0.7% gain. And you can see that that is the most going back to the end of March. So that resilience still under the hood. And that, I think, is the reason why some people are saying, is it just the gasoline story, or is there just a lot of cash, whether it's peak stimulus checks coming back in, or whether it's just that people are feeling pretty good from their stock purchases?
It's clearly also outside of what's going on in energy, because outside of those receipts at gas stations, which accounted for 3.4%, you're up 0.7%. So sales are happening and there is a lot of resilience. But you think about what Jonathan just said there. It's in terms of individuals and households are having more money to spend right now. But is that it for the rest of the year? That fiscal impulse, is this all we're going to be living on for the rest of the year? And that's what it looks like.
Yeah, well, right now people are looking to potential wage growth that we could get to offset what some people have been taking from their savings. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. Recapping the data we just got then, retail sales coming in higher than expected in the month of May, jumping 0.9%. It's a sign U.S. consumers are remaining resilient despite the highest average gas prices in almost 4 years. In Georgia, Republican Congressman Mike Collins defeating Derek Dooley in a runoff election for the Senate nomination. The Trump-backed candidate will now face incumbent Democrat Jon Ossoff in November. It's one of a handful of races that will determine Senate control. AI taking center stage today at the G7 summit with top executives meeting to discuss policy and potential risks. OpenAI CEO Sam Altman and Anthropic CEO Dario Amodei among those joining President Donald Trump as he wraps up talks with world leaders. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, setting you up for the day ahead. Plus, Blake Gwynn of RBC Capital Markets as the bond market enters uncertain territory. From New York, this is Bloomberg Surveillance. Good morning.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
The question, which you may or may not answer today, is what are you going to do going forward? Are you going to be active using the balance sheet and helping funding markets stabilize? Right now, they don't need to because bond volatility is totally under control. Funding markets are totally good. We kind of need the markets to pressure them to provide more liquidity. And the reason why we need more liquidity is because the economy is booming.
That was Mike Wilson of Morgan Stanley looking for some sort of potential pullback that could prompt a Federal Reserve to inject more liquidity by expanding the balance sheet in the T-bill market on the margins and lead to an even higher year-end target. Right now, we're looking at a market that is taking everything in stride, up about 0.1% on the S&P ahead of the open. You can see 10-year yields now back down 4.43%, hovering just sort of oscillating around this level as people anticipate what Fed Chair Kevin Warsh might seem like. And crude prices just above where they closed yesterday as people take a look at that MOU and what might ultimately happen or not. This idea of, can we say the all clear really has been sounded for this war and that oil prices truly are going to be on a straight path lower?
The signal from the presidency wants this to end, but he just said in the last hour or two that if he doesn't like what he's seeing out of Iran, he's willing to restart strikes. Now, obviously, that's going to be rhetorical deterrence that the president is setting, but if you look at this draft MOU, certainly they want not just the Strait of Hormuz to be open, but willing to give Iran waivers so that Iranian crude could be hitting the market.
Yeah, people are going to be looking for all of these details to really understand what's in that. Less than an hour from the cash open. Here's where the action is. It is in the individual names. Here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We start with SpaceX on track for a fourth straight session of gains. Shares up 2.5% in the pre-market. The stock has surged over 50% since it IPO'd less than a week ago, now pushing SpaceX past Amazon when it comes to market value. And the gains have been so dramatic that Elon Musk is apparently nearly a third of the way to a $2 trillion. That's according to our Bloomberg Billionaires Index. And as I said earlier, maybe we need to rethink the name. Turning to Lionsgate, those shares are falling 6.3% in the pre-market after Netflix came out and disputed a report that it was interested in buying the studio. That speculation had caused the stock to surge, though it's now giving back some of those gains. But the idea was that Lionsgate could be the next target as we continue to see this wave of consolidation in the media industry. And we end on Lazy Boy. Those shares are soaring, up 17% in the pre-market after it blew past expectations for last quarter and delivered an upbeat outlook. And retail sales confirming that momentum, with furniture sales up 1% in May compared to the prior month. Lisa.
Everyone just wants to relax. Thank you so much. Great work, Kyra, as always, for that counting down to the opening bell. Here's the trading diary for the day and week ahead. 10:30 a.m. President Donald Trump delivering a press conference from the G7. 2 p.m. Eastern, a Fed rate decision followed by the big one, hearing from Fed Chair Kevin Warsh himself, the news conference that could set the tone for his tenure. And Thursday, a Bank of England rate decision, plus another round of jobless claims. Friday, U.S. markets are closed for the Juneteenth holiday, and the U.S. and Iran are expected to sign an interim peace deal. Let's turn back to the Federal Reserve. Investors widely expect the central bank to hold rates steady today, and many are not expecting a policy change for at least a full year. Blake Gwynn of RBC Capital Markets writing, a flat Fed path is a very unnatural equilibrium for market pricing. Blake joins us for now. Blake, great to see you. Thank you for being here. You're not wrong. And right now what we're seeing in markets is real unease, at least if you take a look at the 2-10s yield curve, suddenly the flattest in more than a year as people try to parse out what does this mean for a Fed to be on hold. We're used to worrying about a hike or a cut. Why is that so uneasy?
The market wants a bias, right? I mean, if you look historically at the spread between Fed funds and 2-year rates, it's historically around 40 basis points. So, we've gone through a few times where the market has held on to a flat pricing, but it's only when rates are at the zero lower bound and there's really nowhere else to go. So you saw how quickly we kind of moved from a cutting bias to this kind of hiking bias. And you saw periods over the last few years where even though the Fed wasn't actively cutting, the market can just hold on to this downward slope and this expectation for cuts. And even when the Fed's not cutting, they just kind of roll it forward. So I think that's what markets are going to do now with hikes, that even if the Fed is on hold, even if they're not hiking, we're just going to keep rolling forward those expectations for hikes.
You know, the real story, though, might not be necessarily in the Fed policy rate. And this is what Mike Wilson was getting at. The idea that the Fed had been shrinking its balance sheet, sort of quantitative tightening, and then it stopped doing that earlier this year. And it started to expand it out just a little bit. The idea of injecting liquidity into the market that Mike Wilson said has been instrumental in the rally. That stopped. Do you think that that's going to restart under a Kevin Warsh that in the past has said he wants to shrink the balance sheet?
I think it's going to be difficult. The same way that I feel about his effect on rate policy is that, he's not one man. This is a committee, and I think those decisions are still going to be made by a committee. And I think that committee has made very clear that they're uncomfortable with reserves getting too low and some of the effects that come with that. And I say it's clear because last year they started buying bills again in December. So we know that they, really do not like to see pressure in those funding markets. So he's going to have to convince the rest of those committee members that this is actually the right path. And I think you've seen Mirren, now he's no longer there, and Lori Logan have kind of presented these ideas of here's some things that we could do to get the balance sheet smaller. I don't think anybody has endorsed those, but they're just saying, here's a menu of options. And I think even, Logan, when you kind of read through her speech, there's a lot of downsides to a lot of these things. So it's really a cost-benefit analysis. I think it's something that's going to take a long time. Ultimately, I don't think they're going to get major changes on the balance sheet. I think it's going to be some small changes here and there, but no big wholesale changes in the way they operate the balance sheet.
Is everyone hyping this up too much? As you say, everything is going to take a very long time. Is this going to be almost maybe a pretty boring meeting?
Well, I mean, it can't be boring with War speaking because we just don't know. And I think, we don't have a benchmark in the way that, when Powell is out there every month, we can kind of look at the changes from the last time he spoke and, kind of sense where he's going with things. Warsh is a bit of a wild card because we don't have that prior experience. Now, I would point this out about his prior comments. One, he was campaigning for the job, and we know what it takes to get the job. He had to sound dovish. So we don't know, now that he has the job locked up, we don't know how much of that goes away. The second thing is he was talking for himself. Now he has to represent the committee if he's doing the job right. When he speaks at the FOMC meeting, he's not speaking his own views, he's speaking the committee consensus. So that could sound more hawkish. And the third thing I would say is he does, I think, run the risk, if he comes out very dovish and the rest of the committee is moving hawkish, he almost marks himself as irrelevant right from the beginning. I don't think he wants to undermine his own credibility by saying, I am way out of consensus with the rest of this group.
So there's a risk that he just is a chair in name only?
I mean, I would hesitate to go that far, but yeah, I mean, he's one man on a committee at the end of the day. Now, they have some power to set the agenda, to kind of, set and frame how things are being discussed, how the research is being done. But at the end of the day, these decisions are going to be a vote with the rest of the committee, and we know where they're going. They're going to move more hawkish in this meeting.
Will he take questions?
We've been debating on how many questions he actually takes, what time the press conference actually ends.
So what's the
I think
over-under?
3 p.m. is probably the over-under here. I mean,
really?
I would not be surprised, given everything that he said about communication. One thing that he can unilaterally change is just take less questions. Or the questions he takes, he gives very brief, very succinct, short answers. So I wouldn't be surprised to see a lot shorter press conferences than Powell.
Blake Wynn, thank you so much for being with us. Blake Wynn of RBC Capital Markets. And thank you for making it exciting, because it is going to be exciting later today. And coming up at 1:30 on Bloomberg Surveillance, the Fed decides. Bob Michael of JP Morgan, Subhadra Rajappa of SocGen, Rich Clarida of PIMCO, and Kate Moore of Citi, because all of them, Anne-Marie, think that it's going to be really interesting. And that, I think, I agree with them.
It's definitely going to be interesting, because it's the first meeting of Kevin Warsh. It's the tone he's going to set. But if things are going to take a really long time for where he wants to get to, from point A to point B, then maybe everyone is overhyping how scandalous he may be. Does it dot? Does he not dot? I love Torsten Slok. The number of words in the FOMC statement likely going down. So the statement comes down. I just want to do a word count.
Yeah, a lot of people are looking to Polymarkets for how long is the press conference going to be, whether there is a dot or not to dot, and how many words will be in this statement. A real question also just about what kind of tone he's going to set in terms of will he be establishment or not. After the press conference tomorrow morning, we will get all sorts of insight from Ed Yardeni of Yardeni Research, Scott Pronert of Citigroup, former Kansas City Fed President Esther George, and Charles Schwab CEO Rick Wooster, as we parse through exactly a new regime on the Federal Reserve, as well as a new regime in markets amid a tech boom and revolution. All of that coming up. From New York, thank you so much for joining us here on Bloomberg Surveillance. Good morning.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacqua, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacqua. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacqua. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Happy Fed Day. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, it's Kevin Warsh's big day. The new Fed chair takes center stage with markets divided on what's next for rates.
Meanwhile, at the G7, President Trump warns the U.S. could go right back to dropping bombs if he doesn't like the Iran deal.
And the world's richest person gets even richer. Elon Musk's fortune continues to grow as SpaceX reaches new heights.
I was looking at Bill Ackman tweeting yesterday or posting on X. The value of SpaceX is that it's so valuable. That value begets value, and that's why SpaceX is valuable.
Yeah, right. And I mean, Elon Musk is pretty much all of that value.
Yes.
Not only is he personally worth $1.3 trillion, but this company is only worth $2.7 trillion because of him.
It's so true. It's the bet that you are making the vision of Elon Musk, and we gain for another day. Look, this thing has been putting in double digits in its first couple days of trading, so 3%-ish isn't huge, but still this adds to a 3-day streak. Gains that have made it the 5th most valuable public company on the world. It is on the verge of overtaking Microsoft as the 4th biggest company. It overtook Amazon yesterday.
He's not only a trillionaire, but the delta between his wealth and the next richest person in the world is $1 trillion. It's insane. But we're focused not only on that. There are other areas of the tech sector rallying as SpaceX helps to lift the AI trade. Just 0.5% on NVIDIA, but it's a $5 trillion company. Micron up another 3 1/3, and Intel gaining 3.5%, Danny.
Still, the big story of today is the Fed meeting. And in the background of all of that, we got consumer data, and the consumer is still spending big. May retail sales top estimates ahead of that decision, which will be the first for Kevin Warsh as chair. Bloomberg International Economics and Policy correspondent Michael McKee joins us from Washington. Mike, let's start with the data. How much of this data, surprising to the upside, was just about gasoline prices?
Well, a significant amount. Gasoline prices were up 3.8% during the month, not quite as much as the prior month, but it is a big rise. And that's where a lot of money went. We saw some flat categories, but for the most part, there was relatively strong spending across the board. Retail sales, as you mentioned, up more than twice what they were in April. You take out the autos and gas, take out gasoline in particular, and you've got a number that's still very strong. And the retail control group that goes into GDP also very strong, up 0.7 more than the prior month. So what that leaves us with is a question about what happens if this deal with Iran comes through and gasoline prices fall. You can see how much gasoline has risen in recent months, just a hockey stick up. If that starts to come down, it should have a disinflationary impact, which should mean that retail sales take a little bit of a hit. But the question is, going forward for Kevin Warsh, are they strong enough to survive that? Probably, when you look at today's numbers. And then where do you go from here if you're the Fed? You sit.
So I noticed yesterday we were talking, you and I, Mike, off camera, about the Fed spectrometer that we have on the Bloomberg terminal. If you type FDSP Go, you can see our rating of how dovish or hawkish each member of the Federal Reserve is. And we've put Kevin Warsh up with a -2. That's max dovish. Does that really sync with the things that he's said and done throughout his career?
I think it syncs with the impression that he wanted to leave the president with when it came time to getting him appointed. But I don't think it's what you're going to see from Kevin Warsh, the Fed chair. Remember, he was quite a hawk during his last turn on the board. So I suspect he's going to focus a lot on inflation. Now, where you have to be definitional is like, what is a hawk, what is a dove these days? If he says that inflation is not as bad as it appears because it's gasoline prices and that'll go away, that doesn't necessarily make him hugely dovish. It's really going to be a question of under what circumstances would you raise rates and how fast do you think inflation's going to come down? Is there any level at which you could tell us now you would like to be able to cut rates? And that's kind of one of the central questions we'll get this afternoon.
All right, Mike, thanks very much. Bloomberg's Michael McKee there will be with us throughout the day as we get the Fed decision and the press conference afterwards with our special The Fed Decides as well. Rob Kaplan, though, joins us. Goldman Sachs vice chairman, former Dallas Fed president, will be on Open Interest with Danny and myself at 9:30 a.m. And then don't miss our special coverage of the Fed decision kicking off at 1:30 p.m. this afternoon. Now, SpaceX is headed for a fourth straight day of gains after adding nearly $1 trillion, adding an extra $1 trillion in market cap since it went public on Friday. Bloomberg Tech host Ed Ludlow joins us now from San Francisco. And Ed, this is just an amazing thing to behold. I mean, the amount of market cap that's been added, the IPO valuation in the first place, and the wealth of Elon Musk.
Yeah, it's definitely more constructive to measure it in market cap add rather than like the percentage gain on the IPO price. But it's an issue of scarcity as well. You know, only 4% of this company's market cap by shares is available to trade. And so, like, the conclusion is that, you know, markets are very willing to digest IPOs at this scale. It's why many on the buy side believe that this presages Anthropic and OpenAI coming to market and there being appetite for that. But there's also just the sheer mechanics of it. You know, an element of scarcity. You also had the options pricing on the 16th, which was yesterday, the 16th. So that's a big part of it. But I still come back to the mechanics of the lockup and how little of this company was available as part of the float.
I was reading just briefly on Substack. Michael Burry had a post talking about SpaceX, basically saying that he was tempted to short it, but ultimately decided against it, talking about the valuation doesn't make sense. It's ultimately just a small space company. But I wonder how many bears out there do exist. But look at that dynamic that you're talking about, Ed, and say shorting this thing would be a fool's errand because of the mechanical buying that's occurring and the small amount of float.
Yeah, I mean, it's only 3 full days since public market debut, right? And a lot of this is price discovery still. You know, I put a post out on X yesterday about its price to sales ratio, because why would you put the price to earnings out? What's the point? You know, in the moment, so the big headline yesterday was at the close, you know, SpaceX overtook Amazon in market value and became the world's 5th most valuable publicly traded company. But right now, the action in the market, it isn't based on fundamentals. It's still this idea that we're digesting the IPO and that because of the staggered lockup, there's a long way from more shares coming into the market. But still, a lot of what I'm getting telephoned about and what I'm reading on the research is what will be the catalysts that drive the stock in either direction, and it's Starship and the tests of Starship. So when we start to get dates of Starship tests and those tests are conducted, that is something that actually you can say we can measure its impact on the company, because everything that was outlined in the prospectus, orbital data centers, et cetera, is predicated on Starship working. And so that is something material that you can look to.
Thank you very much for joining us this morning. Looking forward to Bloomberg Tech at 11 a.m. That is the host of Bloomberg Tech at Ludlow. Elsewhere, Brent is below $80 a barrel as the U.S. and Iran prepare to formally sign a memorandum of understanding Friday in Geneva. President Trump, speaking alongside Egypt's president at the G7 summit, said the deal is not yet final.
No, it's not final. It's a memorandum of understanding. And if I don't like it, we'll go back to shooting at them, dropping bombs on their head.
What do you expect the word?
If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head. Okay? Because they've misbehaved for 47 years.
President Trump is also pushing back on reports of a $300 billion fund for Iran, saying the U.S. won't invest 10 cents in the country. Let's bring in Bloomberg chief European correspondent Oliver Crook, who's at the G7 summit in Evian, France. And Oliver, that $300 billion fund had been part of the 14-point plan seen by Bloomberg. Just how much daylight is there between what we think this plan is and what both parties are actually willing to sign come Friday?
Yeah, I mean, Danny, there's been a real seesaw in sort of sentiment from the beginning coming into this summit. There was a lot of optimism. This is a done deal. Obviously, the market was quick to price that in. There was some skepticism on the other side of the table from a number of European leaders. But now, this memorandum of understanding, not wanting to be a memorandum of misunderstanding. The President of the United States there saying that he could go back to this kinetic side of this war. Really, the hope was that in the stick and carrot, the stick side of this war was over, and it was now going towards the carrot, talking about that $300 billion reconstruction fund, potentially pulling sanctions away and creating the sort of incentive structure for the Iranians. But I think that for people who have been dealing with Iran for a very long time, like some of the European partners, remember, they were there negotiating the original deal, the JCPOA. They were not part of this part of this negotiation. Financial incentives have not always been the most effective in dealing with Iran. The sanctions have been on the country for many, many decades. And I think there's many questions here for the European partners about whether or not this regime in Tehran, Trump keeps saying that it's the third regime because they wiped out the first two, is going to be very docile, is going to be very sort of compliant to the wishes of the United States, and using just those sort of financial instruments as the sort of encouragement, and potentially having to go back to the sort of kinetic side of this war. So I think there's a lot of questions coming into this week. It was certainly a lot of optimism, but I think leaving here, there's still a number of questions about what this actually looks like. And of course, the Europeans said from the very beginning, they've reiterated over the last couple of days, that they could be active in helping sort of minesweep the Strait of Hormuz, which the Americans, we understand, have been receptive to. But if we're still talking about minesweeping, are these cargoes really going to have the confidence to go through the Strait of Hormuz? I mean, imagine one of these ships goes through in a week or two and hits a mine. That'll take us back not necessarily to square one, but certainly will have a major impact on the markets.
Yeah, I mean, it's the most important question. How quickly does the strait open up, and how safe is it after? I don't think markets really care who won or lost here, how much we're paying Iran to open up the Strait of Hormuz. What they care about is that the oil flows. Are the other countries at the G7 willing to help out right away, or are they going to want to wait?
No, they're not going to be willing to help out right away. They're definitely going to want to wait. That is what they've been saying from the very beginning. I mean, President Macron has from the beginning tried to take a sort of constructive approach to President Trump and saying that the French would lead a minesweeping mission. And again, this is something the United States said they would like, but he's only going to do that once the peace is fully settled. I mean, these minesweeping ships are basically sitting ducks on the open ocean. This is not an activity you can do if there is any risk of fire. This is something that can only be done as a peacetime activity. But Matt, there's also another dimension to into this. If you want to construct a sort of incentive structure for the Iranians on sanctions, on financial incentives, you're probably going to need the Europeans on board too, right? They have their own economic sanctions against Iran. And if you want to build a $300 billion fund without using American money, without using American taxpayer money, you may need money from some of these European partners and European companies.
All right, Oliver, thank you very much for joining us. That's Bloomberg's Oliver Crook at the G7 Summit. And Evian, a check on your markets this morning after falling yesterday. We try to put in a rally. The NASDAQ 100 up 0.5%. It was chip makers that were really crushed yesterday. Yields little changed as oil moves higher by 1.1% with that back and forth and exactly what the 14-point plan looks like. And again, I guess bond markets aren't going to go much of anywhere because we need to know what Kevin Warsh is going to say in his first Fed decision.
Yeah, you do typically see much less movement ahead of a Fed decision, and today will be no different in terms of the benchmark indexes and rates, and et cetera. There will be individual stocks moving, and let's round them up for you. CarMax reported net sales above estimates, but profit fell last quarter. The shares were higher, but they're now down in the pre-market.
CME Group CEO Terry Duffy stepping down to become executive chairman, with President Lynn Fitzpatrick taking his place as CEO. Shares down 3 1/3.
And not that it matters, but it
matters so much.
It's funny. Allbirds changed its name to Smartbird.
Wait, what were they going to be before? Weren't they always going to be some sort of like AI bird name?
I can't remember what it was because it didn't matter then either. But remember, this company has pivoted from being the darling shoemaker of the valley to AI infrastructure. It has tapped Nadia Carlston as president and CEO. FYI. Coming up, BMW shares plunge after the automaker slashed its profit outlook and warned of a deeper slowdown in China. That's next. This is Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
now to high interest. Look what's making headlines around the world. The Trump administration is offering Wall Street-style pay to recruit 400 deal makers for government service. Salaries could top $400,000 as officials look for experts to help finance semiconductor, critical mineral, and other national security supply chain projects aimed at boosting U.S. manufacturing. Software maker Medallia is changing hands after private equity owner Thoma Bravo declined to put more money into the struggling company. A creditor group led by Blackstone, Apollo, and FSKKR will invest $150 million slash debt and fund Medallia's AI expansion. Danny spoke with Thoma Bravo co-founder Orlando Bravo on the firm's obligation to investors at Bloomberg House, Miami.
We are not interested in putting more money into the company because we have to be disciplined about that. We could do it, kick the can down the road another 5 years, pretend like it never happened, but we have a big fiduciary duty to our investors. Our investors have known about the issues of Medallia and the mistakes we made for 3 years now. It's been written down at a very, very low level for that time.
And BMW says profits will be much weaker this year as car sales in China slow and global uncertainty grows. The automaker now expects margin as low as 1% and plans more cost cuts. Shares had their biggest drop in nearly 2 years. And for more on this story, Elizabeth Behrman, who leads Bloomberg's EMEA auto coverage, joins us out of Munich. So, Elizabeth, this is interesting. BMW, which has a massive production plant, I believe its biggest plant globally here in Spartanburg, South Carolina, having to slash margin estimates to 1%. What's gone wrong?
Yeah, I mean, the fact that they've reduced their outlook somewhat had been quite widely expected. They've just recently had a CEO change. That person left on a very solid footing, having put in the new Neue Klasse line of products. And now the new guy is in charge, and he's had to clean house quite significantly and much more deeply than people expected. What we've seen over the past few weeks, what's driven this outlook cut for BMW has been a really big slump in car demand in China, not just for the European car makers, which we've been talking about, but the general market in May was down more than 20%. And that's been a really key factor behind BMW's cut. What I also found very interesting, for the first time, one of the Western car makers talked about the impact of the Middle East war. And saying how that's significantly reducing buyer appetite for new cars. I mean, we've probably seen it ourselves when you've seen fuel prices at the very high levels. You're just much less inclined to shell out for a big new purchase like a car. So that's sort of the big factors that are behind this.
Well, I noticed in our reporting, we mentioned a JP Morgan analyst calling this a wake-up call for the auto industry. I mean, Elizabeth, you're pointing out a lot of these feel quite macro. So how much of this is a BMW problem versus just the auto industry having an issue?
I think it's a slightly different take that Jose Azumendi was sort of getting at. BMW was seen as sort of this holdout, this stronghold among the particularly German premium car makers. VW's Audi and Porsche brands have had a lot of struggles. They've had big write-downs. They've had to really redraw their electric vehicle strategy, whereas BMW had been following a slightly different path, just really sticking to a more flexible approach on what sort of drivetrains they were going to put into their cars in future. And that was sort of seen as sort of safeguarding their margins, giving them a more solid footing. So what's happened now, and this wake-up call for the industry, is we're sort of seeing how this news on BMW is calling into question the whole business model for car makers in Germany that have been traditionally such a strong presence, such a big industry for Europe's biggest economy.
You lead, Elizabeth, our autos coverage in Europe, and of course, Italy falls under your purview. Tell us about Ferrari essentially demanding that its most loyal customers buy a Luce or they won't get access to the better cars, which is like every other car they make.
Yeah, but Ferrari is as we know, in a class of its own in terms of car makers. They are much more at home with the likes of Hermes or Rolex, and they operate on this scarcity model. They make far fewer cars than they could sell, and that's what makes them unique and so desirable to people. So to be sure, they don't demand that people buy the Lucha, the electric vehicle they unveiled, to a lot of criticism about the car's look. But they're sort of suggesting to the key collectors, the VIP clients, that if they want access to the really covetable models, the limited edition models like the LaFerrari, which I think sells for more than 2 million and so forth, that's a good stepping stone toward that goal of getting your hands on the really desirable ones. But they're not demanding that people do that. And this sort of allocation system that they're running, they're doing this they've been doing this for a long time, and it's part of the scarcity model that also Hermes operates for Hermes and Birkin bags, for example.
No, right. It's, I mean, famously why Jay Leno won't buy a Ferrari. Elizabeth, thanks so much for joining us. Elizabeth Behrman runs our autos coverage for EMEA out of Munich. By the way, I have an autos podcast. You may have heard about it, Hot Pursuit, with Hannah Elliott out in Los Angeles. Definitely check it out on any platform.
By the way, that's also why I won't.
Podcasts.
That's also why I won't buy a Ferrari.
Yeah,
it's not because it's too expensive.
Because
for me, it's I'm just morally opposed to
you
the
have
idea.
to buy the 296 GTB before you can get the 12-cylinder, and you don't appreciate that.
Otherwise, I would have. Yes, definitely.
Coming up, Goldman Sachs Vice Chair and former Dallas Fed President Rob Kaplan discusses Kevin Warsh's challenges as chair as we await the Fed decision and meeting today. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
How do I do this? I don't know. Quick check on the markets ahead of the opening bell. We had a little bit of a drop yesterday into the close to, I think, 75.11 was the cash level. You can see futures are higher now on the S&P, but only 0.1%. NASDAQ futures up 0.6%. We have the 10-year yield coming down a bit, and Brent crude still under $80 a barrel. Less than 4 minutes until the opening bell. We begin the trading day with Goldman Sachs' Rob Kaplan. This is Bloomberg Open Interest.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller, looking at some slight gains. Remember, it's Fed Day, so markets tend to stay put until we get the decision and the pressure, really. Right now, we have futures up about 0.1% after the cash trade lost some ground yesterday, 75.11, so just about 100 points away, 90 points away from an all-time record. NASDAQ futures up 0.7%. The Dow futures are also little changed. At the New York Stock Exchange, you've got Valmont. They make poles and towers, lighting structures,
exciting,
surface coatings, stuff for infrastructure. So it's an AI company, and as a result, they're up like 167% over the past 5 years. Down at the NASDAQ market site, you've got Factorial ringing the opening bell. I don't really know what they do. It's like a battery company. It's a SPAC.
Okay.
So SPACs are back.
Yeah, that's sign of the times. Also a sign of the times is just the ride that SpaceX has been on. It's adding to its 3-day streak. It's up 4%. Those gains have made it the 5th most valuable public company in the world. It overtook Amazon yesterday. I need to check where this puts it. If it puts it ahead of Microsoft. Microsoft's market cap is about 2.9.
I'm doing it.
Billion. Thank you very much. SpaceX, when it closed yesterday, was at 2.6 trillion.
2.774.
Okay, so it's just under Microsoft, unless Microsoft is falling today, which I don't think it is. Anyway, so we are very close to overtaking Microsoft, now up 4.5% in the early minutes of the opening trade match.
Microsoft actually down about $5 right now, but it's still worth 2.892 trillion. I mean, it doesn't matter, obviously, right? You can say these two companies are neck and neck in terms of market cap.
Yeah.
And like I was saying yesterday, and like we all know, right, Microsoft is a household name. They have been working decades to get to this level of market cap, and it's a product that's installed across every office, not just in the US, but globally. And SpaceX is like still trying to get Starship launched with a real payload.
Well, that was like the argument from Michael Burry on Substack, basically saying he was tempted to short it because it's just, at the end of the day, a very small space company.
Right, but we're talking about scarcity, right? With regards to the shares out, 85 billion is the total market float, and for a $2.7 trillion company, $2.8 trillion company, that's tiny.
Yeah.
So, and plus you've got these built-in buyers coming with the rule changes, no more seasoning. So I don't know if shorting it would be the smartest idea.
No, probably
right
not. And
now.
he's not going to, and I think it's for those exact reasons.
It's been tough for those who shorted Tesla over the years.
Yes.
It is Fed Day, as I was saying, and joining us, we're pleased to say, is Goldman Sachs Vice Chair and former Dallas Fed President Rob Kaplan. Rob, great to have you on the program. Thanks so much for your time. Let me first ask about Kevin Warsh. I was looking at on the Bloomberg, we have a Fed spectrometer, FDSP, and I was surprised to see that we've ranked him at the most dovish possible at a -2. Although, you know, you have known Kevin for a long time. You've worked with him. He seemed to me to be more hawkish. How do you expect him to conduct himself today?
His signature, you know, going back to 2010-11, was more hawkish. Right now, what you're going to see today, and that's why the press conference is very important, I think he's going to need to lay out a little bit of his philosophy. I think it would be wise to acknowledge that inflation has been above target for 5 years and has been sticky. And I would hope what he'll communicate is if inflation remains persistently above target, he'll be prepared to act. But he's also going to argue that some patience is appropriate. You've got the Strait of Hormuz opening. You've got an AI adoption phase that should be disinflationary. You've got Chinese overcapacity in manufacturing, which should help. And so he needs to lay out today who he is and where he's coming from. But I think he'll be more neutral. I don't think it would be wise to come across as dovish today.
There's one aspect of this meeting, which is the one we're all discussing, just how dovish or hawkish he is. Rob, the other one is just his communication style. How different do you expect it to be from a Chair Powell?
Jay Powell is a good communicator. Kevin Warsh is a good communicator. I think the difference will be Kevin has felt and has said for some time he'd like to see the Fed doing less prognosticating. He wants to take it meeting to meeting. He wants to have serious debates within the meeting, but he's a little nervous about predictions, the dot plot, other speeches that predict what the Fed might do because he's worried that it boxes them in rhetorically, and he's going to want to avoid that. But I think he otherwise, I think he should be able to be a straightforward communicator, but he's going to be clear. He wants to get out of the prediction business and more in the policy-making, risk management business.
Rob, that's all well and good, but doesn't he essentially just cede leadership and communication to other Fed members? I mean, he might stop, but who's to say that the other presidents and governors aren't going to get out there and hit the communication circuits and basically, I don't know, overtake the chair as communicating policy to these markets?
So I think that he's going to want to not be predicting, but I think he is going to want to be communicating his philosophy on how they make policy, give a little sense of their reaction function. I would think if I were in my former seat at the Dallas Fed, and if Kevin Warsh said to me, listen, go out and make speeches if you want, but I don't want you to make predictions about what we're going to do in the future. I think Fed members around the table will listen to that. I don't think that's that hard to come to an agreement on. But I do think he's going to have to find a way to explain his philosophy and what the reaction function of this Fed is going to be. And I think that's what the market's going to be listening for today and in the future.
I want to ask about inflation, your view on it. Clearly, we've seen tariffs and immigration policy, whether or not you agree with it, drive inflation higher, and then this war in Iran boosting us another leg to a point where CPI was at 4.2, so more than twice the Fed's target. But now that it seems like the war is over and the Strait of Hormuz is going to open up again, oil has dropped, the gas price has come down considerably. Now we're at $4 national average. Is inflation no longer a concern for this country?
It's not that straightforward, but the strait being open and oil prices being down will absolutely help, because I think there was a bleed from high oil prices into other items, and I think that bleed will stop. Here's the structural issue. We are in the midst of a historic CapEx boom in the United States, driven by infrastructure for AI, data centers, power, creating compute. And at the same time, as you mentioned, we've got this infrastructure boom that creates demand for materials and labor. We've got constraints because of tariffs to some extent, and we have constraints because of sluggish, very little labor force growth. And so that is naturally creates some inflationary dynamic. The thing that oil coming down will do, it will help get goods inflation back to hopefully where it was several months ago, i.e. goods were disinflating. Ground zero is still services, but I think this structural CapEx boom, it's not a consumer spending boom, it's a CapEx-driven boom. I think that's what the Fed's got to be watching and trying to understand whether its policy setting is appropriate in light of that situation.
I mean, at the end of the day, Rob, you know, considering we have a 2% inflation target, that we haven't got there, are we just sleepwalking into a 3% world, especially with the structural changes that you're laying out?
There's some reasons. So I don't think so, and I think the Fed should not accept a 3% world. Why is that? There are 134 million households in the United States. The median income is $80,000 a year. So that's 67 million households that make 80 grand a year or less, have very little financial assets. And if 3% headline inflation is the case, that translates into share of wallet inflation for them, maybe 6 or 7%. It's unacceptable. They're getting suffocated. The Fed has got to be determined, and I think they should reiterating they're committed to 2%. But you've got these structural factors that we just talked about. And so I think what I would do if I were at the Fed and if I were Kevin Warsh, be clear that if we don't see inflation easing in the next few months, I'm prepared and we're prepared to act, because I think you want to convince the markets that we're still committed to 2%. I think they've got a little time, don't need to act in June, don't need to act in July, but by September, if these inflation prints stay sticky, they're going to have to demonstrate that they're prepared to act. And I think that's the tension that you'll be hearing.
It's not, of course, just inflation, Rob. You bring up the AI spending boom. We're talking about trillions of dollars, right? That's helping to drive earnings 20% higher. That's helping to drive stocks 20% higher. And I imagine, like a railroad boom or a wartime, ramp up in industrialization, it's going to drive the economy higher as well. Is the U.S. economy more at risk actually of overheating than of slowing?
Well, let's separate out AI into two parts. There's the infrastructure boom, which is, headline $800 billion being spent on infrastructure. There's the AI adoption boom. And a lot of these, I won't go into individual companies, but a lot of the equity offerings, valuations that you're seeing have to do with the adoption boom. The adoption boom should be disinflationary. That should improve productivity. The infrastructure boom, ironically, probably puts more strain on inflation. But over the horizon, adoption, this driver that's improving corporate margins, is actually going to be disinflationary. And this is why you notice labor share of GDP is probably declining, profit share is increasing, and unit labor cost has not spiked. It's actually been under pretty good control. And so I think that the thing we're going to have to understand is how does this AI adoption develop and how disinflationary is it? And I think at the Fed, you need to separate this into two parts and try to analyze each differently.
Rob, just before you go, because obviously you've been in the room with many of these meetings and you've understood various leadership styles and you know Kevin Warsh well, how do you expect this to play out when we maybe have kind of like a two-pope situation, when you still have Jay Powell in the room as these decisions are being made?
Well, you know, I've said this. Jay Powell, I think, is going to strive to have as little imprint on the meeting as possible and to be as defer to Kevin Warsh as much as possible and not be a factor. Okay, so here's what I think, though, Kevin Warsh would like in the months and years ahead. The Powell Fed and the Yellen Fed, which I was a part of, the meetings, we had good discussion, but the meetings were very choreographed. I actually think Kevin Warsh would like, it may take a little time to get there, to have more robust debate and disagreement, less scripted meetings, more debate and disagreement. And I think if he needed to create a part of the meeting that didn't have a transcript where they could have that debate and disagreement, I think he would like that. But outside the meeting, he's going to want less prognosticating, less predicting about what they're going to do, but a lot more debate and disagreement in the room. And I think that could be a very constructive change.
Interesting, Rob. Thank you so much for joining us this morning. We'll see what that decision brings. Goldman Sachs Vice Chairman and former Dallas Fed President Rob Kaplan. All right, let's get a check on your equities market this morning, over 10 minutes into your trading day. And we gained, but it is a tepid gain of up of 0.1%. We declined yesterday, led by the chip makers and tech. The chip makers do rebound this morning. Broadcom, Applied Materials, Lam Research, Micron, AMD, all in the top gainers alongside Apple and NVIDIA. In the losers, it's a pretty bad day for the Mag 7. Microsoft, Amazon, Alphabet, Meta, Tesla, all the top losers so far this morning, putting in a painful performance. Meta down 2.33%, not on any specific news. Maybe it is more just rotating out of the big cap tech names in order to fit SpaceX. And by the way, you'll notice always with this that SpaceX is not on this board because we're looking at the S&P, and the S&P was one of the few indexes to not include SpaceX to change their rules. Looking at the individual sectors, again, a push and pull with tech. Chip makers do well. Mag 7 does poorly, but it does end us higher with Infotech up 1.1% because NVIDIA is doing better. Communication services, again, a lot of the Mag 7 lives in here. That is down 1.6%, Matt.
All right, so waiting on the Fed, but SpaceX is also taking our attention today because the breakneck rally, although it's slowed, has the company closing in on Microsoft as the fourth largest company in the world on its fourth trading day as a public company. This is Bloomberg Open Interest.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, You already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Let's hear from the sell side now for your top calls, what they are upgrading and downgrading this morning. First up, Wells Fargo upgrades Carter's on signs that new leadership is improving, execution with stronger direct-to-consumer momentum, and tariff-related upside that the firm says is underappreciated. Shares up nearly 5%. Citi, they initiate coverage of the software company Figma with a buy. They say the company will benefit from AI-driven demand. Shares also up 5%. Finally, oh God. Did you see these, Matt? Wall Street weighing on Snap's new specs. Okay, Evan Spiegel gave this interview, I believe.
Don't you have a pair of Snap specs?
No, like the really, really old ones, like when they first put them out. Okay, so they're AR glasses. They cost $2,000. And I was looking at this interview with Evan Spiegel talking to, I think, CNBC about them. And the things are so heavy, his ears look like they're getting crushed and like folding in half. And like maybe, I don't know, they should have spent a little bit more time developing them. I mean, I don't know. They don't look that cool. They're really big.
I like the shape, but
no, but literally his ears are getting like crushed in the interview. They look like they're crying out for help.
No. Doesn't look like they would be comfortable to wear at all.
No. For what it's worth, Citi says that it's impressed by the AR features, but wants the prices and design to improve. B. Riley says that the high price will limit demand, but future versions could become more affordable.
They look like something a bad guy in a Guy Ritchie movie would wear.
They do. That's perfect. Again, they just look uncomfortable. They look really uncomfortable.
Someday a company will. Well, I think Meta has kind of cracked this.
Yeah, the Meta ones. The Meta ones look very kind of like low key.
The way they look, right?
No, this looks like you're wearing goggles, which is a problem.
Exactly. You could scuba dive with those.
Yes.
All right, let's talk SpaceX. It's added. Let's continue to talk SpaceX. It's only the fourth day of trading. It's added $1 trillion in market cap since Friday. It is currently the fifth largest company in the world, almost the fourth if it overtakes Microsoft, only like a measly $100 billion away. And adding to the confusion about whether it's primarily traded as a rocket company, a telecom provider, or an artificial intelligence play. Let's bring in Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh, for this conversation. And you've had a lot of practice on this kind of talk because we've been doing it with Tesla for the past 15 years, right? Is that a car company? Do they make humanoid robots, right? Who cares, right? It's just an Elon Musk company, and so you should buy it.
Well, I think the difference was Tesla was quite early stage when we started talking about it during their life as a public company. And I think SpaceX, when I look at the market cap surpassing Amazon, I mean, there is a lot baked into the expectations. And look, I am excited about orbital compute. I am really excited about the Cursor acquisition. To me, you know, Cursor could leapfrog into a frontier model provider because of the compute now they have from SpaceX. So if they're able to retain the talent at Cursor and really scale Cursor, they would become a formidable player, the likes of Anthropic and OpenAI, and they could be a challenger in that regard. But it's a big if that, everyone stays from Cursor and they're able to scale that up. And it's already priced in when I look at, the market cap of SpaceX.
By the way, this market cap is stale.
Oh, yeah.
It says 2.654 trillion, but actually...
About 2.7 now?
Yeah, I mean, 2.680.
Round up to 2.7. And just on that note, I mentioned this earlier, Mandeep, but Bill Ackman putting out on X yesterday, one of the things that makes SpaceX so valuable is how valuable it is. Talking about the Cursor acquisition costing material less in dilution because of the high valuation. How important has it been for SpaceX to see this kind of not this kind of market action, it's only up 0.2%, but to see the prior day's market action in order to achieve the goals it wants, like buying Cursor?
Look, I think overall, where they are right now, I can see SpaceX ramping up their CapEx now. Remember, all the hyperscalers will be putting almost $100 billion plus in CapEx in 2026 and possibly in 2027. So from that perspective, SpaceX with this market cap has already become a hyperscaler. I can see them inching towards that $100 billion CapEx just to set up compute. And the reason why, we are talking about revenue growing threefold from 18 billion in their S1 is because of the compute deals. And these are terrestrial compute data centers that they're renting.
Revenue will grow threefold and losses will grow, 4 or 5 times? What's the loss revenue ratio for SpaceX going to grow to?
Well, the compute...
They're going to lose twice as much money as they make in revenue.
But not with the compute deals. I'm going to push back a little bit on the compute deal. So if you look at the compute rental business, yes, it's not very high margin business, but that will not compound their losses. I mean, if anything, they're renting their Blackwells and the latest NVIDIA chips for a higher rental price than your neo-cloud providers like CoreWeave and Nebius. So from that perspective, $11 an hour for the Blackwell GPUs is far higher than what anyone else is commanding right now. And I was surprised to see why Google is really paying up that much when they have their own TPUs. The answer is because xAI has the data centers with power. Everyone else is struggling to procure power right now for their chips. So it will be margin accretive for sure when it comes to the rental side.
Mandeep, thank you so much for joining us. Always a pleasure to have you. Mandeep Singh from Bloomberg Intelligence. And coming up in the next hour, more on the tech rally and the AI outlook. We'll be speaking, or Tom McKenzie will be speaking with the CEO of ASML. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until the midterm election.
Hear it first on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
bringing you up to the minute news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
Yes, that's correct.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
From ABC News, I'm Brian Clark. President Trump is set to address reporters ahead of his departure from the G7 summit in France. He'll likely get questions about the contents of the agreement to end the war with Iran. He told reporters earlier,
"It's a very strong deal. Nobody knows what it is, but it's very strong. And most people seem to be very happy."
Once it's signed, a key issue will be negotiating the long-term future of Iran's nuclear program, and the latest U.S. intelligence shows some doubt.
The U.S. and Iran are set to kickstart detailed nuclear negotiations on Friday, but officials say American intelligence agencies predict the Iranian regime will be unlikely to make the nuclear concessions the Trump administration expects to see. The president making it plain that military action is still on the table.
If I don't like it, if they don't behave, we'll go right back to dropping bombs right smack in the middle of their head.
Shannon Kingston, ABC News, the State Department.
Today, the president's pick for Federal Reserve Chair Kevin Warsh will speak after his first meeting as chair. The central bank expected to keep interest rates unchanged. The president says another of his nominees is on hold, and ABC's Rachel Scott says that's part of a broader tug-of-war with Congress.
The president says he will not approve FISA, a key national security tool that has already expired, until Republicans pass his sweeping voter ID law. And what's more, the president says he's also delaying the nomination of Jay Clayton to serve as the director of national intelligence until his other judicial nominees get through. Clayton was scheduled to start his confirmation hearings today.
But Republican Senator Tom Cotton says on social media that Clayton is a pending nominee and will proceed with his hearing. A convicted serial killer, Rex Heuermann, will be sentenced today, says ABC's Phil Tate.
Heuermann will face a judge for sentencing. He had admitted to murdering 8 women. Now, today, inside of the courtroom, we also expect the families of the victims to be present.
You're listening to ABC. The first tropical storm of the Atlantic hurricane season may be born today.
For now, the National Hurricane Center is calling the low-pressure area skirting along the Texas coast potential tropical cyclone 1. If its maximum sustained winds reach 39 miles per hour, it will take the name Arthur. In preparation, the level of Lake Houston has been lowered by a foot.
We've also pre-staged some barricades at flood-prone locations, usually underpasses.
Houston's emergency manager, Brian Mason, says first responders are gearing up for possible high-water rescues. Jim Ryan, ABC News.
One of President Trump's projects to modify Washington, D.C. is having an issue. ABC's Mary Bruce says it's in the reflecting pool between the Lincoln Memorial and Washington Monument.
The president just spent $15 million in taxpayer money to paint the bottom of the pool, quote, American flag blue, but the water is now green, overrun with algae. Workers have been out spotted trying to clean it up. National Park Service workers dumping hydrogen peroxide into the water. In a statement, the White House says they are deploying, quote, high-tech nanobubble ozone technology to kill the algae and keep the water of the reflecting pool crystal clear.
A Russian artist critical of Vladimir Putin was shot and killed near his home in eastern Poland on Monday. Today, Poland's prime minister said everything points to it being a political murder and that if that was the case, it would constitute state terrorism. Law enforcement still collecting evidence. I'm Brian Clark, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. We're streaming live at Bloomberg.com as well. It is Scarlett Fu and Paul Sweeney. This is the Bloomberg Intelligence Radio program. Coming up, President Trump, he's in France at the G7 meeting. He has a scheduled press conference at 10:30 a.m. Wall Street time. We will take that. And he's also participating in a bilateral meeting with the Prime Minister of India. And we may dip into that if there's some Q&A going on there. So we'll keep you up to date on that. Oliver Crooks is going to join us, Bloomberg News Chief European Correspondent. He's in France at the G7. We'll get the latest reporting there. Bill Lee, Chief Economist and Managing Director, Global Economic Advisors, to discuss his outlooks for this U.S. economy. Mandeep Singh, Global Tech Research Head at Bloomberg Intelligence. We've got, he'll be in our New York studio. So right now, let's head over to France, and we'll go to this bilateral meeting with President Trump
and the President of India. Let's take a listen.
But it's a G7, and we have a G2 coming up, and then we have a G20 coming up. You know what the G2 is, I think, most of you. But we had in particular some very good conversations with Prime Minister Modi, India, and we're doing trade deals. We're doing a lot of things. A lot of things are happening between the United States and India. The United States is doing the best we've ever done. We have over $19.2 trillion coming in, and we're building factories. We're building everything, and Prime Minister is building a lot in the United States. He's spending a lot of money in the United States, so we appreciate that job. But I just want to say he's been my friend for a long time now, and we've always had a great relationship, and it's great to be with you. Thank you very much. Great to be with you.
Thank you. राष्ट्रपति जी, आपसे मिलकर के बहुत खुशी हो रही है और पिछले वर्ष हम वाशिंगटन में मिले थे। उसके बाद हमारे संबंधों में एक नई गति आई है, नई ऊर्जा आई है और कई विषयों में हम बहुत मिल करके आगे चल रहे हैं।
Mr. President, it's a pleasure to meet you here in Avia. We had an extremely productive meeting in Washington last year, and since then we have given new speed and new energy to our relations, and we are working together on a number of areas.
और हमारे लिए खुशी की बात है कि हमारी दोनों टीमें भी मिलजुल करके हमने जो टारगेट तय किए उसको पूरा करने के लिए भरपूर प्रयास कर रहे हैं और हम बहुत तेजी से आगे बढ़ रहे हैं।
And we are also happy that our teams have also been working in close coordination and engagement, and they've been working towards achievement of the targets that we had set for ourselves last year.
एक्सेलेंसी, पश्चिम एशिया में शांति के जो प्रयास प्रगति हुई है, इसके लिए मैं आपका अभिनंदन करता हूं।
Mr. President, I commend you for your leadership on the progress that has been made in the efforts to restore peace in West Asia.
आपके इन प्रयासों के कारण पश्चिम एशिया में शांति की एक नई किरण नजर आ रही है और हम आशा करते हैं कि चिरस्थायी शांति बनेगी।
Thanks to your efforts, Mr. President, new hope for peace and stability in the region has been rekindled, and I'm confident that this will lead to a long-standing peace in the region.
एक्सेलेंसी, आप और हम सभी इस बात से सहमत हैं कि हॉर्मुज का खुला रहना एक वैश्विक अर्थ अनिवार्य है।
Mr. President, you and I agree that keeping the Strait of Hormuz open is vital for the global economy.
एक्सेलेंसी, हम हमेशा कहते रहे हैं कि फ्रीडम ऑफ नेविगेशन सुनिश्चित होना चाहिए और इस पर हम सब ने मिलकर के बल देना चाहिए।
India has consistently emphasized the importance of ensuring freedom of navigation, and we should work together and place a particular emphasis on that.
एक्सेलेंसी, आप जानते हैं कि मैरीटाइम ट्रेड की दुनिया में भारत के लाखों सी फेरर्स आज दुनिया के अलग अलग समुद्र में अपनी सेवाएं दे रहे हैं, विश्व की प्रगति में बहुत बड़ा योगदान दे रहे हैं और मैं समझता हूं कि उनकी सुरक्षा भी उतना ही महत्वपूर्ण है।
Mr. President, you are aware across the world, Indian seafarers in hundreds of thousands are working and they're performing their duties across global maritime trade routes, including the Strait of Hormuz, and their safety is of utmost importance to us.
एक्सेलेंसी, समझौते के लिए शांति के प्रयासों में आपने भरपूर प्रयास किया है। मुझे पूरा विश्वास है कि समझौते में सीफेरर की सुरक्षा भी सुनिश्चित होगी और उसको प्राथमिकता मिलेगी।
Mr. President, you made tremendous efforts towards reaching this understanding and this agreement, and I'm confident that the issue of seafarers will receive the highest priority during the implementation of this agreement.
एक्सेलेंसी, मैं फिर एक बार पश्चिम एशिया में शांति बहाल कराने के आपके भरसक प्रयासों का मैं पूरी प्रशंसा करता हूं और आपका अभिनंदन करता हूं।
Mr. President, once again, I deeply appreciate and I deeply commend your efforts in ensuring the restoration of peace and making efforts towards restoration of peace and stability in West Asia.
Thank you
very much.
Thank you. Thank you.
Friends, thank you. Any questions?
Thank you, Mr. President. We just heard the Prime Minister praise your efforts, the peace efforts in the Middle East.
Thank you.
Do you think you can carry the momentum from the Iran deal over to securing an end to the war in Ukraine? And can you tell us about your conversations with President Zelensky here at the G7?
Well, I had very good talks with President Zelensky and with President Putin, and we'd like to see that one end. I ended 8 wars, and to be honest with you, I thought this would have been one of the easier ones, but they're not liking each other too much, and that makes it much more difficult. But we're working. I had 2 good conversations with President Zelensky and with President Putin. With President Zelensky and with President Putin.
Will you let them build U.S. missiles or Europe manufacture missiles, American missiles?
They would like to be able to do that. We'll take a look at it. They have asked about it. Steve,
how close are you to a U.S.-India trade deal?
Very close. We've been there for a little while, and he's a very tough negotiator. He's one of the toughest, actually. So you look at this man. I'll give you a lesson. He's the most beautiful-looking man. He looks so nice. He's like an angel. But actually, he's as tough as he's a killer. I don't want to. He's a killer. He's as tough as they come. But he looks so good. So he gets you by surprise. But there's few people like this. People say he's such a nice man. I said, no, he's very tough. He's a tough trader. And he loves the Indian people, but he also loves the USA. We had Howdy Modi in Houston, remember? And the stadium was full. Right, remember that?
He did Namaste Trump in India.
That was great. And we'll be going to India sometime in the future.
President Trump, when will you go to India, and how do you see Quad as well? This is a grouping that was started under your first term, and this is a grouping that all the 4 countries are looking forward to.
Well, we had a great visit last time in India. We opened up that new stadium, and I think there were 300,000-400,000 people. It seated like about 150,000, and there were 250,000 outside, and there were 100,000 on the grass. That was, I don't know if that record's ever been broken, but I had a great time in India.
Do you expect India to play any role in West Asia? I'm Siddhant from
Say it.
Do you expect India to play any role in West Asia?
Yeah, I do. I think India plays a big role in everything. As long as he's the leader, India's going to play a big role.
And you said many times that India has a great friend in United States, in Washington, D.C., in White House, till the time you are president. But some of your decisions recently caused trouble, concern in India. How would you like to assure people of India?
Well, I said it. As long as I'm president, we have a great. They have a great friend in the White House. I don't know where there might have been a trouble, but I don't think so. I can tell you, everyone here, they love India. They have tremendous respect for this man. Tremendous. Go ahead, ma'am.
Are there going to be sanctions that are going to be reimposed on Russia now that the focus has once again been shifted to the Ukraine-Russia war?
We are looking at that. We're seeing how far the price of oil comes down. It's really tumbling. It's, I guess, 74, 75 right now. So it's down. It's soon going to be at the number that it was 4 months ago. It's pretty amazing. And on top of that, we will have an Iran without a nuclear weapon, which I can tell you the Prime Minister feels very strongly about that, too.
What is Mr. President hear from European or G7 leaders?
They were to a leader, and we had G7 plus many others came, as you know. To a leader, they were thrilled. They could not have been happier. Well, this gentleman came, and that's a big get. He came, and they cannot even believe that it happened. It happened quickly. But it really didn't happen quickly. It's been happening for a long time. It's been happening from my first term, when a very evil man named Soleimani was killed. That's when it started. And nobody else did this but Trump. You know, you look at our president, 47 years, Iran took advantage of the world, the Middle East, but the world. Nobody did anything. The Obama deal was one of the dumbest deals I've ever seen. It was a road to a nuclear weapon. My deal is a wall to a nuclear. You're not going to have it. It's a wall to a nuclear weapon.
On minesweepers, do you want the Europeans to send minesweeper boats? Did you talk about that?
We don't need them, but if they want to send them, I think it's good.
Has anyone committed to
Yes, all of them. All of them.
Which nations?
The ones that have that kind of equipment have. But every one of them have committed to being involved in some form.
And at this point, do you feel that Vladimir Putin is more responsible for the ongoing conflict in Ukraine?
Well, I don't want to comment on that because I'm trying to get it settled, and that doesn't make it easy.
Mr. President, you're on the cusp of making history with the possible peace in the Iran conflict.
I like this guy. Who is he? Do you know who that is? Your reporters are much nicer than my reporters. Go ahead.
But there is also a tragic loss of lives of Indian sailors recently, sir, in American strikes. Any words of condolences for the grieving families, sir?
Yeah, I do. I heard about that. It's a rough profession. There's no question about it. And we work together on it. This has been happening throughout time, but we work together on it. Yeah, certainly. We love all of those people. They're great people. Yeah, please.
How long do you expect Bill Pulte to be acting DNI?
Well, as long as it takes to get everybody else approved. I mean, they were doing a rush act, and we didn't get anything for it. Look, he's a very legitimate guy. He's very smart. He's a brilliant guy. Look at the job he did at Fannie Mae, Freddie Mac. I mean, it's worth probably $1 trillion right now. So we put him there, but all of a sudden it was like a rush act by the Democrats. And they said they were going to approve FISA. And I said, but we want FISA approved, but we want the Save America Act approved. Voter ID, proof of citizenship, no mail-in ballots, with exceptions, like for the military, you're sick, you're traveling, disabled. Very, open and generous. We also want no men playing in women's sports, so we want no transgender mutilization of our children. None. Those are 5 things that are 99% that's all we want. It's not a lot. The Save America Act. And that can be passed any way they want to pass it, but I'm not going to sign FISA unless it's done. And this was like a rush act. And it was a rush act by the Democrats. All of a sudden they want to get... And why are they afraid of this guy? I mean, they're so afraid of him, they'll do anything not to have Pulte go in there. He's a very capable guy, and they're worried about that.
Mr. President,
Yes, ma'am, please.
You said the Iran deal, the text is still being finalized. How confident are you that this Friday signing will happen?
You're talking about this one, on the deal? Deals are amazing. I've done them all my life. I've gone into deals that were 100% and they don't happen. I've gone into deals that there was no chance of getting them done, and it happens, and they happen easily. So you never know with deals, do you? But you're going to find out pretty soon. I think it'll be done. They want to sign. They want to get back to a normal life. We hit them very hard. Don't forget, people talk about when this started. This didn't start 3-4 months ago. This started years ago when I took out Soleimani. That was a big event. There are those that say it was the biggest event in the Middle East in 50 years. So we took him out, and they became a much different country. And then I terminated the JCPOA. That's Barack Hussein Obama's horrible deal that gave them a nuclear weapon. And I terminated it, and I stopped it. And then I stopped it a second time with the B-2 bombers. And these are all major events in the history of the world, in my opinion, because it prevented them from having a nuclear weapon. And now we're going to do it again, and we're going to see how it works out. So this is a memorandum of understanding, but it's a very strong one. This isn't just like a 2-paragraph. This is a long, pretty detailed memorandum that goes into a regular contract. I would think they would do it. If they don't, then that's okay. We'll have to start the process again. And we don't lose. We have the greatest military in the world. We had the greatest blockade. The naval blockade was 100% effective. And again, they have no Navy, they have no Air Force, all bombed out. I don't want to say the leaders, but first level of leader, gone. Second level of leaders, gone. Some of the third level of leaders, gone. And they want to make a deal. They are so ready to make a deal. Yeah. But you know what?
President Trump, the tense relationship between India and the United States. Sorry, I'm speaking, I won't.
That's okay.
Can you speak to the defense relationship between India and the United States?
I think it's a great relationship. I can tell you this, without having a contract. We don't have a contract. You'd have to write contract. But if they were attacked, we would be there to help them. How is that? Is that a good statement? Okay, come here, man. If anybody attacks that man, we're going to be there. Now, if there's a new leader, I'm not sure about it. Okay. If there's a new leader, I don't know about that. But if they're attacked and he's the leader, we're going to be there to help. And we have, and I will say this, and everybody says it. I had a great meeting 3 weeks ago with President Xi of China. We have the strongest military in the world by far, and I built it in my first term, and we're using it in my second term, and they gave some of it away stupidly in Afghanistan, as you know, and they spent a lot on Ukraine, $350 billion, but we have the most powerful military in the world. You saw that with Venezuela, which was 48 minutes, and now our relationship with Venezuela is great. We paid for the cost of the war 40 times, taking millions of barrels out. Venezuela's benefiting, we're benefiting, Venezuela's benefiting, and then we go to Iran, and really in the first week, militarily, we defeated Iran. Nobody thought that could be done. Yeah, please.
Mr. President, do you want Israel to halt its military campaign?
No, I want Israel to be able to protect himself, but I do want them to use good judgment.
President Trump, we expect a highly skilled Indian professional to be getting more opportunities in the United States under your presidency.
What does that mean? What?
Well, highly skilled professionals to get more opportunities here in the U.S.
Oh, yeah, sure. I mean, always.
Yeah.
We've always had tremendous relationships in terms of employment with India. Very talented people.
You've seen European leaders interact very warmly with you at the summit. Do you think that they're coming around to your worldview?
Well, I think they think I was right. I'm sort of always right. You know, when you get right down to it. I think they think I was right. They feel good. Now all of a sudden they all want to be involved. There's no reason to have them because it's pretty much over. But they all want to be involved. He'd be involved if I wanted, but we don't want to waste his time or his people. No, the European leaders, the meeting we had today was you know, just the leaders. I don't even say the European, the leaders that we had met with. In addition to the 7, we had quite a few come in. They all were willing to get involved. Thank you. Thank you very much. We had a great meeting on AI. We had all the top people here, and it was a great meeting. And as you know, we're building tremendous numbers of plants, but AI, we're building the biggest in the world. We're #1 in AI by a lot, and it was a very productive.
How's it going with Anthropic, the negotiations with Anthropic?
He was here. Going fine. I think it's going fine.
How do you see energy cooperation? India is diversifying, buying more energy from across the world, including United States. I'm enhanceable from beyond. How do you see India buying energy from you?
India can do anything they want with us. We have the best relationship. We cannot be closer than we are. Would you say that, sir? I don't think we can be any closer. Both him and I and our nations, but it really starts with the two of us. We cannot be closer. Thank you very much.
All right, very good. That was President Trump in France with the Prime Minister of India, talking about the stuff that the leaders at the G7 talk about there in France. And we think we're going to get another press conference from the president at some point later today towards the end of the G7. Looking at the markets here, we've got green on the screen. Let's get a reset here. We will go to Alexis Christophers for a Bloomberg Business Flash. Alexis.
All right, thanks, Paul. Traders are waiting to see whether new Federal Reserve Chair Kevin Warsh will validate bets on future rate hikes or lean against them. Money markets have priced in a full quarter-point boost by the end of the first quarter of 2027, but policymakers are widely expected to stay on hold today. Taking a look at the action, S&P 500 up about 20 points. We've got the Dow Jones Industrial Average climbing 273 points, and the NASDAQ Composite up by 100 102 points. We've got oil on the rise this morning. Brent crude back above $80 a barrel, up 1.5% at $80.18 a barrel. West Texas Intermediate crude up nearly 1.75% at $77.29 a barrel. Pending sales of U.S. existing homes had their strongest gain in nearly 2 years in May. Contract signings rose for the fourth straight month, up 3.8%. That's according to the National Association of Realtors. Mortgage rates are hovering at 6.6%. That is a 9-month high. Shares of SpaceX taking a bit of a breather here, down 1.25% in their fourth day of trading as a publicly traded company. SpaceX giving back some gains after climbing nearly 50% since last week's IPO. Shares of BMW down more than 7% after the German carmaker cut its guidance on the back of heating competition in the Chinese market and the spillover effect of the Mideast war. And Ferrari says it will reward buyers of its poorly received Luce electric vehicle with favorable access to its more desirable models. Shares of Ferrari down nearly 3%. And that's your Bloomberg Business Flash. Paul and Scarlett.
Yeah, some car stories there. I like that.
I like to clump them all together.
Matt
We
Miller.
had fun with Matt Miller this morning with our car stories.
Yeah, he just texted me yesterday, sent me a little message. He got a new BMW.
I was just going to say, he gets a new car constantly.
Yeah, but this one he owns. He's not test driving. He actually bought it. But he said he got it used for a very cool price, and he says it's just the coolest thing. And my first question was, can it fit 3 baby car seats in there?
And apparently it can.
And apparently it
Good
can.
for him.
So there you go. All right, Alexis, thank you so much.
How
Appreciate
priorities
that.
change.
Exactly. Yeah, he got rid of his little sports car for this thing. So anyway, I said, get a minivan, then talk to me. All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Bill Lee joins us here, Chief Economist and Managing Director at Global Economic Advisors. Bill, we've got a new Fed Reserve Chairman. We're going to hear from him today. What do you expect to hear?
I hope he's going to reset the Fed in a way that brings it back to the days when the Fed was really effective under Greenspan and was well respected. It didn't go wandering off into non-central banking duties. And I think what we're expecting to hear from him is to say the data are showing things that the headlines are not capturing. The very strong employment report that everybody's making a big stink over. Well, a lot of that was World Cup hiring and unsustainable state and local hiring. So when you peel away all the transitory surges in employment, we're down to maybe 65, 70,000 as a steady state level. That's not a good indication of where the labor market is. And as far as inflation is concerned, the energy spike is going away. The tariff spike is going away, and the underlying core is still a problem, but it looks like it's more supply constrained than it is demand. So I think the message that I think he's going to try to say is that we should not be relying on data that give us a false picture. We should be looking at data that gives us a better sense of where we're going into the future, and things like the 5-year break-evens, right? Inflation expectations, they remain completely anchored. And they have come down considerably by about 40, 60 basis points, depending on where you look, over the last month. So I think the state of affairs is that inflation doesn't look like is really a problem. Employment is, and job creation is. And if we look to the future of where AI is going, it may make job creation even more difficult. Now, granted, their consumers are doing well, but that you can see is coming from a lot of wealth effect. So the mixed picture of policy is that we should not be talking about rate hikes. We should be talking about how to set Fed policy in a way that is appropriate for the 21st century.
Is the rest of the Fed board going to be on board with that line of thinking?
Scarlett, that really is the key. And it's going to take quite a case of he's going to have to make the case that the data that I just talked about are important, and not just transitory blips. And I think the case can be made fairly effectively, but it's going to take some time to convince a lot of the hawks on the Fed that inflation expectations are secure. It's going to take a lot of persuading to say that energy isn't permeating into other facets and raising prices in a more permanent way. But as long as there's no wage price spiral, which and there isn't, we don't have the traditional forms of inflation that the Fed has always been afraid of and that the Fed will step in to prevent. And what we do see are the beginnings of the kind of employment difficulties that the Fed could do something about to try to ease interest rates in a way that spurs more investments in non-AI related fields like construction and housing.
I don't know. It seems like the consumer's still in pretty good shape. What do you think?
Oh, I just said the consumer's doing very well, but a lot of that is coming from wealth effect. Okay. The bottom end is holding up because they're going through savings like crazy. And the half the population is still complaining that affordability is the main problem. And the reason why affordability is a problem is because their wages have not gone up as much as the rest of the population's wealth has gone up. So I think as far as the
गाइस क्रूड ऑयल इन्वेंट्री आ चुकी है 3 में से 2 इन्वेंट्री बेरिस है 1 बुलिस है तो ओवरऑल क्रूड ऑयल इन्वेंट्री इज बेरिस सिर्फ इसको मत देखना क्रूड ऑयल की इन्वेंट्री बुलिस दिखा रहा है यहाँ पर लेकिन जो 2 और इन्वेंट्री हैं बोथ आर बेरिस सो क्रूड ऑयल इन्वेंट्री 3 में से 2 इन्वेंट्री बेरिस 1 बुलिस प्राइस के लिए बेरिस ही कहेंगे क्रूड ऑयल इन्वेंट्रीज बेरिस देखते हैं मोमेंटम आता है नहीं आता फेड रेट कट का डिसीजन है नथिंग एल्स
jobs created in the high wage sectors. We can't rely on healthcare. We can't rely on leisure and hospitality, which are the lowest wage sectors in the economy, to be supporting the consumers over the longer term.
Yeah, the two sectors that have really driven hiring as well over the last couple of months. One thing that I think about here with Kevin Warsh is that he has vowed a closer relationship, cooperation with the Treasury Department. So I'm curious what you think that might look like, because Scott Bessent himself, the Treasury Secretary, has made really clear that he watches the 10-year yield, and that's what concerns him primarily. So I wonder how you see that shaping up for the bond market.
I think the research is still out as far as how a balance sheet and change and a Fed funds rate change will affect the long-term rate. I think Scott Bessent has more of an impact on the long-term rate than Warsh would, and so the deficit really is the key to the long-term rate. And I think the job of the Fed chair is to really communicate what it is that the Fed can do and what it cannot do. And I think he can say that withholding liquidity in the banking sector and lowering the Fed funds rate really influences the short to intermediate term rates much more. And any Operation Twist maneuver is going to be in cooperation with it's going to be a Treasury's job. And I think getting the long-term rate down, we have to look at fiscal policy and the federal deficit more than we should look at monetary policy and the Fed.
So on that front, Bill, talk to us about this U.S. deficit. I've been on Wall Street 40 years in one day today. It's been an issue for my entire career on Wall Street. How do you think about it? How does the bond market think about it?
I think the only way the bond market thinks about it right now, and throughout our careers, I think I've been on Wall Street roughly the same time as you have, although I've been looking at Wall Street from the Federal Reserve and IMF longer. The dependence on foreign savings and foreign capital flows is really key to financing the deficit. I think it's almost hopeless to hope that American savings will be able to be high enough to finance our fiscal spending. And the key there is attracting foreign capital into the United States in a way that enhances growth rather than financing just the buying treasuries. So if we have foreigners coming in and investing in plants, semiconductor plants in Arizona and other forms of fixed investment, that's the source of high wage jobs. And that's the source of tax revenues that will be the best way of remedying our fiscal spending. It's not going to solve it, but the foreign savings will be the major part of the solution, and the foreign savings coming into the key sectors that drive high wage jobs is going to be the real source of the final solution, I think, to the deficit problem.
Bill, thanks so much. Appreciate it. Bill Lee, Chief Economist and Managing Director at Global Economic Advisors. I'm just looking at SpaceX here. Stock's trading down about 2.9%. So for the first down day since starting trading on Friday, keep an eye on that. But again, the market cap for SpaceX, $2.57 trillion. I think if you're Anthropic, if you're OpenAI, you feel like, all right, this IPO market's ready. I can come public.
Strike while the iron's hot, while things are looking good.
Yeah, absolutely. Maybe we'll get some fall listings here from some of those AI names. S&P 500 up 5, the Dow up 200, and the NASDAQ up 18 points. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Alexis Christoforous, and this Bloomberg Business Flash is brought to you by IBKR. Trade election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest on your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Stocks have turned mixed here in recent trading. Oil is higher, though, as we count down to the Federal Reserve's first interest rate decision under new Fed Chair Kevin Warsh. The S&P 500 now down about 4 points. Dow Jones Industrial Average, though, in the green by 160 points. The NASDAQ Composite has reversed an earlier advance and is now down 34 points. We've got Brent crude at $80.20 a barrel, up 1.5%. WTI crude up nearly 2% at $77.50 the barrel. SpaceX is pairing some of its post-IPO rally. It's down about 3.5%. Still, Elon Musk's rocket company is up more than 50% since going public just last week. And shares of CarMax down more than 6% after sales at the used car retailer rose more than expected, but profits took a hit as those sales were propelled by price cuts. And Uber will offer driverless robo-taxi rides in Houston and vehicles developed by Lucid Group and Nuro. That service is expected to launch in the middle of next year. And that's your Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much, Alexis Christoforous, with our Bloomberg Business Flash. Markets are kind of unsettled. They're not doing a whole lot right now ahead of the Fed meeting. The decision comes out at 2 p.m. under new Fed Chair Kevin Warsh, and the news conference comes out at 2:30 p.m. And of course, we're still waiting details on that interim peace deal between the U.S. and Iran. No details whatsoever, but some kind of signing on Friday.
Yes.
That's still the expectation. Okay, so in light of all that, technology kind of remains the big thing that people look at in the equity market. And today, tech is higher, up 0.7%. Mandeep Singh is our global tech research head here at Bloomberg Intelligence. And Mandeep, there's a bunch of areas we can go to, but I want to pick up on what Alexis said with SpaceX being down for the first time since it went public. The stock lower by about 3.33% today. Talk a little bit about this Cursor deal, which they just announced, and we knew this was coming because they bought the right to buy the company before the IPO. Does this really change the trajectory in a way that makes people rethink what SpaceX is?
Yeah, I mean, the whole AI segment, I think, has really got a shot in terms of becoming a hyperscale-like player because of this Cursor acquisition. And right now, they're just renting the compute they have in their data centers to Anthropic and Google. But to my mind, Cursor gives them the potential to have a frontier LLM that can actually generate revenues like Anthropic and OpenAI are generating, by companies using their LLM. So Cursor was one of the biggest priced assets in the world of LLMs, and it's really focused on coding agent. And I think there was this notion that Cursor is a wrapper on frontier LLMs. That clearly is not the case. Cursor has frontier training capabilities. And with the CapEx that I think SpaceX is going to do, they will be very well spending like the other hyperscalers, $100 billion in CapEx in 2027. So that will be huge to ramp up Cursor.
SpaceX, 3 lines of business per their IPO prospectus. Connectivity. We spoke to John Butler about that. Space. We talked to George Ferguson of Bloomberg Intelligence about that. Are you the AI guy?
Well, I'm
You're the AI guy.
So AI everything guy.
I know. So what is there? Am I paying for AI now when I buy SpaceX? Is that what I'm paying this gajillion times sales multiple?
I think so. Especially the near-term growth will be all driven by AI. And right now it's AI compute rental, like the neoclouds.
Okay.
But with the Cursor acquisition, they have the potential to actually play in that AI application domain, which is higher margins. And that's where the valuation could be justified if they are able to ramp up the Cursor side of the revenue.
Okay, so I suspect that this will be a moving target for a while to come, since SpaceX is Elon's vision of a vertically integrated everything in his brain company. Let's talk a little bit about OpenAI. We know that OpenAI, perhaps operationally not doing as well as it had intended. It didn't meet some internal targets. You recently published a note on OpenAI and the losses of about $34 billion, coupled with the lowering of its token pricing for its latest model, show that perhaps there are some growing pains here. Talk us through what you see.
Yeah, I mean, look, the competition has increased just 6 months back. You know, OpenAI was way ahead of everyone else. Now we are talking about how Anthropic is on the leaderboard. And that's what gives me hope that, you know, even SpaceX with their Cursor deal could leapfrog any of these models. So nothing is said in terms of the model race. This is not a one-player-take-all type of market. And things could change fairly quickly, what we have seen, you know, with Anthropic. And that's where OpenAI has sort of squandered their lead that they had over everyone else. And now they are lowering their token pricing to make sure they, you know, have continued adoption of their models. And that's never a good position to be in if you're lowering prices. So from that perspective, I do find them to be on the back foot. But look, things could change with the next model release. OpenAI can come up with a great model, and suddenly, because they have more compute than Anthropic and everyone else, we would be talking that OpenAI is back in that leaderboard. But right now, it clearly is Anthropic, and everyone else is playing catch up.
I mean, I'm just trying to catch up here. All right, on my little window here, in my AI window on my phone, I've got the app ChatGPT.
Yeah.
I got Gemini. I got Reddit in there because the kids are telling me I have to use Reddit. What else do I need in there?
Claude. I mean,
Claude?
we are talking about Anthropic. So
that's... All right, Anthropic is Claude. Claude is Anthropic.
Yeah.
What about DeepSeek? Should Paul have DeepSeek on there?
I mean, their usage seems to be growing at the enterprise level. In fact, there was some news that Microsoft may be supporting DeepSeek in their Azure cloud, despite all the pushback we hear about using Chinese LLMs. Yes, so you could see, and already in Europe, you can see DeepSeek usage is growing up. So from that perspective, don't count the Chinese models out, even though I wouldn't have thought, you know, they would do well here. But surprisingly, you're seeing enterprise interest, partly because of the token pricing and how expensive it is to deploy AI, and DeepSeek being an open weight model. A lot of enterprises are looking at using DeepSeek.
All right, I'm downloading Claude as we speak. What do you use? You're like the tech geek.
I use everything. I use Cursor. I use Claude. I use.
Do I have to download Cursor now?
Cursor is more coding specific. So if you have ideas related to a coding agent, it's a fabulous tool, really. I mean, the thing that I find, you know, with these tools is Claude, for example, deprecated one of their older models. So they are making decisions on the fly, you know, in terms of what models to deprecate.
What's deprecate mean?
Like that model is not available anymore. What if I have a preference for that model? It's not even available anymore. With Cursor, actually they solve for that problem that you can go across models, you can use an older model. So I feel that's a problem that Cursor has solved really well.
I bet Mandeep's prompts are a lot different than what you or I would put in the prompt.
Yes.
You know, Mandeep, you're probably putting in like paragraphs into your prompts.
I build a lot on my initial prompts, and that's why these tools are so engaging that, you know, once you start playing with them, it's like it brings more ideas in terms of what all you can do with these tools, and it's very iterative, at least for me. I'm not a single shot prompter where I'll have a 3-page prompt. No, I really build on stuff.
Do we use it in BI?
We do, yes. We do have access to a lot of these tools, and that's partly how we are looking to become more efficient in our workflows, and it's already helping.
I think I'm taking credit for just having downloaded some of these apps on my phone. I'm going to take that as a little victory.
Now you got to create a login.
All right.
And you got to have an account.
Okay.
So it remembers who you are. You could tell them who you are and you know, explain your preferences. Don't flatter me. Don't praise me when I get something wrong. Oh,
it's personalized. Yeah.
ChatGPT will compliment you when you ask a question. Like, no, duh, it's a great question.
Okay. All right. I'm on it. I got a 2-hour train ride home today. I'll learn AI in 2 hours. Mandeep Singh, Global Head of Tech Research for Bloomberg Intelligence. I think he knows what he's talking about. It sounds like he knows what he's talking about, but we keep going back to him because he's the smartest guy in this building about all that tech stuff. We'll have more coming up. I got the S&P down 6, the Dow up 125, and the NASDAQ down 60. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Right now, we're going to go to Antonio Neri, HPE CEO, on the latest company news from HPE. Let's listen in. There we go. Very good. Antonio Neri joins us here, CEO of HPE. Antonio, thanks so much for joining us here. Talk to us about what are the key issues for you guys going forward here. This AI story is a story that's playing out across the tech stack.
Well, good morning, Paul. Thanks for having me. Yes, of course, today the narrative is all around the AI and the ability to use AI to change the world. And so for us, as a technology company, is how we accelerate the deployment of AI in the enterprise. And today we talked about the evolution of just large language models into agentic models, which allows to increase productivity across the entire enterprise, across processes and functions. And so we have made a series of announcements here, which brings together the infrastructure, the software, and the cloud experience into one integrated, unified operating model, including governance and compliance, so that build the trust within the enterprise to go forward.
And how does this change your growth trajectory? going forward? I know that, 1 year out might look very different from 5 years out versus 10 years out. Just walk us through how you see this changing what you had anticipated to what you now think you can achieve.
Yeah, Scarlett, so if you go back and read our earnings in Q2, we grew the company as a whole 40% year over year on revenues, and we expanded margins because of the content that we bring into that revenue now has a bigger mix of networking, software, and cloud services. And in that context, we believe networking is going to be the thesis of our company. If you think about developing these frontier models, whether proprietary or open source models, you need a lot of GPU power, but that GPU needs to be very productive. You don't want to keep it idle. And the bottleneck of that is networking. And so we have now, with the acquisition of Juniper, an amazing portfolio in the three key elements: scale up, scale out, and scale across, which position us to be a core element of that infrastructure build out. So this is why we believe the company is going to grow double digits going forward and will continue to expand operating margins. And that will translate in free cash flow. So we already guided, which is unlikely, and in many cases, for 6 quarters ahead. So think about it, because of the confidence we have in our growth trajectory.
Antonio, where do you think this technology, this AI technology story is? I mean, a lot of folks are saying we're still in the very, very early innings, but you just think about the amount of CapEx that is being spent by a variety of players within the Substack. It's just extraordinary. Where do you think we are in that compendium there of AI investment?
I concur with that. We're still early. And Paul, what you have to understand, there is 3 customer segments you have to look into it. Number 1 is the model builders and the hyperscalers and the neocloud. We're building large amount of compute capacity. We believe by the end of the decade, we're going to build 250 gigawatt of power that will host these GPUs. And that's the capacity you're talking about it. But then ultimately, what is the mix of that capacity? It's going to be shifting from training models to inferencing models. And that's where we're going to see the large adoption of AI into the enterprise to drive that productivity. But if you put it in context of industrial revolutions in the past, this actually is very small compared to that spend that was done in every inflection point, including the turn of the past century. So yes, I understand the concern about the amount of CapEx, but when you put it in context of changing the way we work, the change in our society, we're still small relative to that.
Just looking at how you might be deploying cash, I know that you tapped the debt market in March to refinance some upcoming maturities. You've got strong liquidity with cash and equivalents of more than $5 billion at the end of the second quarter. What might prompt you to go to the debt market again to raise more money?
Well, we do that very regularly because, remember, inside HPE, we have an operating company. Obviously, we are paying down the debt and refinancing where we need to. And that's the operating balance sheet you're referring to. So our balance sheet is super, super strong. And then we have the financing company, which has $13 billion under asset management. Think about the financing we do for customers. And we do it also as a part of the asset lifecycle management services. And basically, we have debt securitized against those assets, but the return on equity on that is super high, super, super high. So we use those vehicles when it's necessary. But what we announced just at the beginning of this month in our earnings is that we're going to pay down that debt much faster. In fact, we expect to return to 2 times leverage by the end of this fiscal year, which is 1 year ahead of plan. And we're going to start returning 75% approximately of our free cash flow in 2027 to shareholders, which we expect to generate at least $4.5 billion in dividends and share buybacks. That's how we're going to return it. So we are very strong. And that goes back to the question you asked me before, where it comes from, the growth and the operating margins.
Antonio, thank you so much for joining us. We really appreciate getting some of your time. Antonio Neri, he's the president and CEO of Hewlett Packard Enterprises. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Happy Fed Day, everyone. This is Bloomberg Intelligence. We are broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. Paul Sweeney, Scarlett Fu, and Charlie Pellet here with you for the hour. Of course, we are awaiting President Trump to speak. He will be holding a news conference from France, where he is attending the G7 leaders meeting right before he and or the U.S. and Iran are set to sign some kind of interim peace deal on Friday. Markets are mixed right now. The S&P and NASDAQ are lower. The Dow and the Russell 2000 are higher. We're going to check in with Mike McGlone, our senior commodity strategist, on where oil stands. Right now, today, it is higher by 2% for both Brent and WTI. Michael Dean, our head of global autos, will join us to talk about BMW. It's forecasting margins as low as 1%, and the stock is tumbling in Europe. We're also going to check in with Poonam Goyal. She is our senior U.S. e-commerce and retail analyst here on the latest snapshot of retail, especially as people question whether the consumer can continue to spend with prices elevated. And Steve Mann will be joining us to talk about some other car news, including the CarMax latest results and Carvana's new car push and how that's going to shake up and disrupt traditional dealerships. All that to come in the next hour. But first, let's go over to Charlie Pellet for our Bloomberg Business Flash.
Hi, thank you very much, Scarlett and Paul. Got to ask Mike McGlone about that stockpiles report that we got last hour. Oil stockpiles plunged to a critical low at a key U.S. storage hub. That would be Cushing, Oklahoma. We're seeing oil rallying right now. We got West Texas Intermediate crude up 2.1%, 77.68 a barrel. Brent back above 80, 80.46 right now, trading higher by 1.9%. The Strategic Petroleum Reserve dropping to a near record low of roughly 340 million barrels, the lowest level since 1983. Mixed market right now with the S&P 500 index down 9, 75.01, drop there of 0.1%. Dow Industrials up 119 on the Dow, gain right now of just about 0.2%. NASDAQ down 65. The NASDAQ Composite Index down 0.2%, but the NASDAQ 100 Index, full of big tech names, up now by 0.3%. All of this with a VIX below 17 now, a 10-year at 4.43%, the 2-year 4.07%, and the 30-year at 4.92%. Gold up $13 the ounce to $43.44, up 0.3%. And again, WTI up 2.1%, 77.60 for a barrel of West Texas Intermediate crude. Just hours away from the latest Fed decision, equities churning. The big event, though, will be Fed Chair Kevin Warsh's news conference, his first 2:30 p.m. Wall Street time. Yeah, we'll have it for you live here on Bloomberg. As for what we will likely hear from Warsh, Bill Lee is chief economist at Global Economic Advisors, and he was a guest last hour right here on Bloomberg Intelligence.
I think what we're expecting to hear from him is to say the data are showing things that the headlines are not capturing. The very strong employment report that everybody's making a big stink over, well, a lot of that was World Cup hiring and unsustainable state and local hiring.
Bill Lee of Global Economic Advisors interviewed right here on Bloomberg Intelligence. You can hear more of that conversation on the Intelligence podcast, and you can download it wherever you get your podcasts. Day 4 of trading for SpaceX. Company has rallied roughly 49% since going public, overtaking Amazon. Today, we're seeing shares of SpaceX retreat now by 5.1%. Right now, SpaceX is at 191.35. Recapping Fed Wednesday, the 10-year 4.43%. Oil pushes higher, up 2%, and the S&P 500 index down by 0.1%. I'm Charlie Pellet and Scarlett and Paul. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. As Charlie's just reporting, we got kind of red and green on the screen out there today. Let's take a look at some of the stocks on the move today. We can do that with Christine Aquino. She's a managing editor, Markets Today for Bloomberg News. Christine, what are you looking at today?
All right. We got to take a look, of course, at SpaceX here. I mean, Charlie mentioned it, right? We're seeing a little bit of a decline now. So ticker SPCX, those shares are now down more than 4% at the moment. So we're seeing a little bit of that kind of getting back to normal after the sky high, very hot debut last week. But still, as we know from yesterday, SpaceX did become the 5th largest stock in the world, overtaking Amazon and briefly even topping Microsoft. And, you know, retail activity still remains strong. Some data from Vanda Research showing that retail investors each day since the SpaceX IPO have been buying. And at the same time, apparently, we've been seeing a little bit of Tesla shares being sold. So a little bit of a rotation within the Elon Musk complex there.
Yeah, and we had anticipated that there would be some kind of movement like that because people wanted to make room in their portfolios. All right, next up on your list, a company based in Chicago.
Absolutely, Scarlett. We're talking about CME, of course, a leadership change over there. So CEO Terry Duffy will step down on March 1st. That's going to be next year, and transition to executive chairman. And filling his shoes is going to be Lynn Fitzpatrick. So CME under Duffy's reign has grown to more than $90 billion in terms of market cap since it went public in 2002. And of course, Duffy led a company through a series of shifts and deals, including a 2021 deal with Google to help the derivatives exchange operator with its technology needs. I was in Chicago, actually, over the weekend.
Really?
Great weather. Not sure about the pizza.
I like
sure
the deep
about
dish.
the pizza.
I like the deep dish.
Oh,
I mean, it's different, but it's got its charm.
it's not
I like
really
it.
pizza. It's something else.
It's
Yeah.
like
What's like Sicilian here?
cake with pizza.
It's like a quiche with sauce.
Yeah, it's good though. All right, Coinbase, one more.
All right, let's talk about Coinbase today. So not much movement actually there. Ticker COIN. Those shares are up now just 0.2%, but we did see some pre-market declines after the company announced that it redesigned its base app and introducing new products like an AI-powered advisor, private transactions, pre-IPO perpetual futures, options trading, and tokenized stocks. That is a lot, and analysts are receiving it as a mixed bag. Piper Sandler's Patrick Moley noting that, you know, they've announced a lot of new products, but there's a lot of pressure as well for them to monetize these new offerings. And of course, it doesn't help. Bitcoin still very much under pressure and has yet to recover to that 70,000 handle that we saw over April and May.
Yeah, we're keeping a close eye on that because that was fascinating, the drop in Bitcoin over the last few weeks, and now since then the recovery. Christine, thank you so much. Christine Aquino is managing editor for MLive Go on the Bloomberg. It's our Markets Live blog, and you can check it out on the terminal by typing MLIV Go. All right, oil prices are on the rise today, up about 2% or so. WTI trading just under $78 a barrel, and Brent is back at the $80 a barrel level. Let's bring in our Mike McGlone. He is our senior commodity strategist joining us from Miami. Mike, I know that everyone's waiting for the actual signing of this interim peace deal and the supposed reopening, full reopening of the Strait of Hormuz. What do we know so far about what is actually getting through the Strait of Hormuz?
Well, that's less significant. And we've heard things that Mr. Trump has said, Scarlett, but you look at the prices, and there's obviously stuff getting into the market. Inventories obviously are a little bit low, but the bigger picture is the bottom line. We're all learning the number one thing that matters for crude oil is the leader of the world's largest energy producer and a net exporter needs prices lower, and he will get prices lower. So let's look at the macro big picture in terms of what crude oil has done. It's gone right back to kind of the apex of the bell curve of trading for the last 20 years. It got near the upper end of the range. All that's going to do is bring on that more supply from the U.S., which has been the incremental supplier, U.S. and Canada, and it's going to head towards the lower end of the range, which I think is towards $40 to $50 a barrel. It's not profound to saying that. It always does, particularly if you get a little back up in the stock market for midterm election years. But for what's happening right now, it's kind of getting to the summer doldrums, and the key thing is it's going to take something unusual to get back there near 100, and just normal cycles gets it back towards 50.
Hey, Mike, how did the traders in the pits look at this Cushing, Oklahoma stockpile data? Stockpiles declined for the 8th straight week, taking inventories to just above 20 million barrels. That's the lowest since October 2014. How did traders look at that data?
they look at like for a few minutes, Paul, and they go back to that's when something that used to matter when WTI crude oil is synonymous with being landlocked crude, but that was 10 years ago. And now we're the largest energy exporter on the planet, and a lot of that all goes down to the Gulf and gets exported out. So you don't want it in Cushing anymore; it's a waste there. That's where it used to be. So that's why it's changed. And also one thing I really enjoy, Paul, is when people talk about the Strategic Petroleum Reserve dropping to multi-year lows. We don't need the Strategic Petroleum Reserve anymore. It was set up in 1974 by President Ford to cover 90 days of net imports. With Canada and U.S. crude oil and liquid fuel surplus is running around 8 million barrels a day. So you need it for things like wars and hurricanes, but it's like saying Saudi Arabia needs an SPR. Now China does, and they've been liquidating some of their SPR, but it's massive. And they're some of the best commodity traders on the planet. And just remember, they only buy low and sell high.
If I go to Cushing, Oklahoma, can I see this stuff? Can I see like all the reserves and stuff?
Oh, sure. There's massive tanks, but I usually just see the pipes. I mean, I just read about it, So to me, it's one of those things that used to matter, and that's how life has changed. The crude oil market's completely different now. It's also when we were kids, we had U.S. was a net importer. Now we're one of the biggest exporters on the planet. And look at natural gas, the largest exporter of LNG on the planet. To me, that's your guidance of where crude oil is going. Natural gas was up 100% in January, and now it's down 15%. By the end of the year, I fully expect crude oil is going to drop another $20 from where we are now and be down in the year.
In Cushing, Oklahoma, you go to eat, get some good biscuits and gravy. The Broke Cowboy.
Oh, I love that
I'm
name.
just looking at that right now.
All right. Maybe Mike McGlone has been there. I'm so glad you brought up natural gas because there's nat gas in the U.S. and we know that that's plentiful here in the United States. And then there's nat gas futures in Europe. And when I look at a one-year chart, it's really noticeable the spike up at the end of February, early March because of the start of the Iran war. It peaked at above 61 in March, mid-March or so, and has since come back to about $41. How do you see that shaking out once the Strait of Hormuz is open? Is there a technical factor behind this, or is this a case of it's just going to stay higher for longer?
It's unlikely to stay higher for longer because of elasticity forces. Natural gas in Europe is still somewhat pumped by what's happening in the war in Ukraine, Scarlett. But also, right now, you see 41 from TTF natural gas. Now, that's going to be higher as we get to December and January to the winter months, and then it's going to right back down. So I look at natural gas. It's probably much peaked. The front contract will probably go up for a little while and head lower. It's just opening up the strait. If this agreement is true, I fully expect elasticity kick in, and that's the key thing to remember about most notably from the U.S. natural gas and crude oil and corn and soybeans and wheat. They don't stay up very long. They go down because they went up, and natural gas is still up.
Mike McGlone, thanks so much. Appreciate that. As always, he's our commodity strategist for Bloomberg Intelligence. We'll do pork bellies next time. BMW in the news. Yesterday it started because Matt Miller sent me a picture of his new BMW that he just acquired, which is like this monster.
Our news, that's when it started.
That's how it started with Matt Miller getting his new, M7 or something. It's got 12 horse. I don't know what it's going on, but it's a big one, and I'm sure it's all just awesome. But then BMW said its profit margin could dwindle to as low as 1% this year due to weakening Chinese demand and fallout from the Middle East conflict. We want to get some more on that. Michael Dean, head of global auto research for Bloomberg Intelligence, joins us here. Michael, what's going on with BMW?
Yes, it was a big downgrade yesterday. So, China is about 25% of their sales annually. And we've been seeing in previous months that sales have been weak. But I think they got to the point where they don't see it recovering the second half of this year. And hence they've taken, a massive cut to their margin expectations.
Does that mean that they're going to have trouble selling cars at full price? They might need to discount or look to, package it a little bit differently?
Well, China's been a really difficult market for the German brands over the past few years. Just take the example of Porsche. Porsche's sales have dropped by 70% since 2021. BMW and Mercedes have had similar issues. Their sales are down by about 20-25% over the past couple of years. They're facing heavy discounting from competitors. So that was weighing them anyway. And now the market itself is falling quite significantly. So it was down in 20% in the first 5 months of this year. And given we don't see a recovery in the second half, that's also impacting the German automakers and BMW specifically.
So if I'm a global automaker in Germany, in the U.S., Japan, how do I view the Chinese market here today? I mean, it seems like I'm hearing a lot of bad news from a competitive standpoint in that market just generally.
Yeah, I mean, domestic players are making some really good cars. Xiaomi is a key competitor now to BMW and Mercedes. And because the local cars are so good and because they're priced so competitively, it's pushing the foreign automakers out. As I mentioned, Porsche's already taken a big hit on their volumes in China. That could also happen to the other German automakers and other foreign automakers.
What does this mean for BMW's approach to electrification?
I don't think it changes their approach. So the Chinese market is now 40% fully electric. It's probably about 60% if you include EVs. They've got a wave of new models coming out using their newer class of platform. So they were hoping to make inroads into the electrification in China, but they're going to find it very difficult if that market is weakening and prices continue to go down.
All right, let's get to it, Michael. I need your review of the BMW M70 that I think Mr. Matt Miller just acquired. Good car?
Very good car. So Matt was talking to me about it. I think it has a double crank. So he was very impressed with that. Yeah, the new AMGs that are coming out, awesome cars. Just hopefully they'll be able to sell a few in China as well.
Okay, double crank, I don't know what that means.
No, I don't know. But it's a naturally aspirated 5.0 liter SOHC, and I have no idea what that means. V12 engine. So it's a big one, I think.
It's a
gas guzzler.
Yes. Does Matt drive automatic or standard?
Yeah, they don't make sticks anymore. I used to have the BMW manual transmission until they stopped making it in 2016 or 2017. And Michael Dean could not fix that problem for me. I sent him on a mission to Germany.
I did try. So very few automakers now have stick shifts. You can get a few in Porsche 911s as a stick shift, but it's very, very rare to see that across the car makers now, unfortunately.
Even in Europe?
Yeah, sure.
Oh,
really?
See,
okay.
Yeah, it's terrible. It's a terrible thing. Michael Dean.
And with hybrids, because they need an automatic transmission, that also takes away the need for a stick shift.
So there's no standard hybrid vehicle ever. You're not going to have a stick shift hybrid. That's not technologically possible.
Exactly. Yes, that's correct.
It's a sad day in the world of automobiles. Michael Dean, head of global autos for Bloomberg Intelligence. Yeah, I had the 5 Series for Bloomberg for like at BMW for like 25 years. And then it was like 2016, 2017, my salesperson said, I got bad news for you. They don't make them anymore. So I kind of stuck with mine for longer than I usually do.
I'm like in a different car universe than you. I rented a car the other day, and it was a Kia Niro hybrid.
How was that?
Not bad, actually. And I drove about 100 miles, and I only had to fuel up before I returned the car, and it cost me about $4 something. I mean, I was in Alabama, so the gas prices were low, but I was like, I could do this.
No,
I could
you're
get this
exactly
kind of
right.
car.
Yeah, my number 4 Offspring, we brought him a hybrid because he's out there in California.
And he's loving you for it, yeah.
Yeah, so it's just a
huge difference.
I think that's kind of where the industry might be going a little bit here, at least in the near term. S&P 500 down 3 points, the Dow up 110, the Nasdaq down 45 points. Gold, I'm going to call that out. It's up a couple of bucks here, $4,350, and Bitcoin down 1%, $65,000 for Tom Keen's Bitcoin. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg Fed Wednesday. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. We have got the Dow higher, S&P, NASDAQ both declining. All of this ahead of a Fed decision, 2 o'clock Wall Street time, and Kevin Warsh's first news conference, 2:30 p.m. Wall Street time. Traders are waiting to see whether Warsh will validate bets on future rate hikes or lean against them. S&P lower, little change right now, down 3, drop there of under 0.1%. The Dow up 153, higher by 0.3%. NASDAQ down 53, a drop there of 0.2%. But interestingly, the NASDAQ 100 index, full of big tech names, up now by 0.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, rebounding from yesterday's decline, up now by 3.1%. All of this with a VIX just below 17 and a 10-year at 4.42%. The 2-year 4.06%. Day 4 of trading for SpaceX. Shares are lower. SpaceX declining right now by 5.9%. Retail sales jumped in May in a broad-based advance, signaling resilient consumer demand despite higher gasoline prices among selected retailers. Amazon down 2.2%, Walmart down 1.4%, Target lower now by 1.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Scarlett and Paul, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Appreciate that. Scarlett Fu, Paul Sweeney, live here in our Bloomberg Interactive Broker studio and streaming live on YouTube as well. Scarlett, I think we've become a little bit numb to these monster numbers being thrown around about AI spending here, investments there.
Hundreds of billions of dollars from one company, hundreds of billions from another.